Hello, everybody. What a day it is. Happy Friday, July 10th. It is SK Hynix IPO day. This is one of the biggest trades of the year. If you've been watching, memory stocks have been majorly in demand for a long time now, and it's only heating up. SanDisk, Micron, Samsung, and SK Hynix, but SK Hynix finally making its way to the US markets today. Over in Korea, they have been all over this stock, up about 200% year to date. 600% in the past year. Pretty crazy stuff. We've got an amazing group of guests that are going to be joining us today in just a few minutes here. Dan Niles will join the show at the 11:30 mark to discuss his thoughts, and then we'll roll through a bunch of amazing people's thoughts. So if you are someone that is interested in technology, semiconductors, chips, a variety of other pieces, ETFs, we'll talk about those too. Today is the day to be watching. We're going to bring in here as well, I believe we're going to have stock market news as our first guest here for kind of the first few minutes of thoughts. But as he's walking into the stream here, a couple things I'm going to be talking about is just what's happening in the market right now. So again, I did mention SK Hynix over the past year having just an amazing, amazing growth. So let's take a look real quick. Year to date, 222%. Took a little bit of a pullback. This was all the way up, I believe it was, let's see, 300% year to date, right around there, 330% year to date. Now 220% year to date. And over the past year, 640%. And then don't even look at the 5-year because that'll give you some FOMO, but 1,724% return. Why is this going so crazy at the moment? So for those that aren't familiar with SK Hynix, you maybe have heard of Micron and other pieces, maybe still don't understand exactly what they do. Really, it's all about the manufacturing of these chips. And they really produce two main types of chips at SK Hynix. They have the DRAM chips. You might have even seen that word DRAM getting thrown around. That's dynamic random access memory chips. And then you also have flash memory chips. And these are what really they work hand in hand with the NVIDIA GPU processors to allow for real processing power to actually occur. So you need the memory to go hand in hand with the processing power, and that's what's making, data centers, AI, right, all of this possible at the moment. Really, really high levels of quality of compute. With that being said, you also are going to see just further demand for this. So we saw in the Micron earnings call, the CEO said that robots are coming, right? And robots are going to take 10x the level of compute as these L2 vehicles. And so you're just going to see continuous demand. But the thing is, they're already selling out for years and years in advance here. And that's why I think this is such a highly anticipated IPO coming to the markets. It was 7x oversubscribed, I believe, which is crazy. They obviously raised a lot less money than SpaceX, but SpaceX was 4x oversubscribed, this 7x. So hundreds of billions of dollars interested in investing directly into this IPO. And they did give some information already on where they're going to be pricing their IPO. I urge people to check out IPO Newsroom. That's going to be one of the sources that we'll look through today for a variety of these pieces and continuing to keep us updated on where we will see this actually price. But the last that I've seen as of 1 hour ago is that the ADRs indicate an open at $180. That is above the IPO price of $149. So those with IPO shares starting off with roughly a $31 bump there right off the bat. We'll see what happens. Reminder, SpaceX, we had a big up day, few of them to start out with. It did pull back afterwards. That's a typical sign of what we've seen with IPOs recently. So curious to see how this one goes as well. All right. Kind of pulling through, seeing if there's any news here. I think one of the big things as well that we're going to talk about in this upcoming segment is worldwide shares of this dynamic random access memory market. So you have US, Japan, Korea, and China really as your main areas. And Dan Niles will really talk about how this has accelerated from US being a dominant leader here to Korea really taking the place, and China just gathering a small percentage of market share here as well. So excited to hear from him on those pieces. And again, thank you to everyone that's tuning into the stream. If you could take a second, we're just getting started for the day, to go ahead and reshare out the stream, whether you're watching here on Twitter or YouTube. You can go ahead on YouTube, comment on it, like it, and on X, you can like, comment, and of course, reshare out the stream. So appreciate all those that are already doing so. And thank you to the 1,000+ of you that are already in here listening with us right now. I think we can go ahead at this point and maximize our time and bring in Dan Niles as our first guest here to get started. He was recently with us on our SpaceX live stream, and he's a guest that's been calling tech cycles for decades. And this year, he's really been telling anybody that will listen that the smart money belongs in the semiconductors, actually building AI, not the hyperscalers spending on it. We've talked about this a little bit before. Founder and portfolio manager at Niles Investment Management. And he's been comparing 2026 to some of those late 90s internet build out all year. So really want to talk about this. Welcome to the show, Dan Niles. Let's bring him on now. Dan, great to see you again. Thanks for joining us. It's been a couple weeks here, really, just since the SpaceX IPO, but we're back again with another $1 trillion IPO here.
Yeah, they just seem to keep coming, don't they? So it'll be interesting to see how this goes ahead and plays out, given the interesting times we're in.
Yeah, year of the $1 trillion IPO, one might call it. We still have OpenAI, Anthropic, and others to come, and they don't seem to want to settle for any less. This is a super fascinating industry. I think people might be even more interested in this memory head-on specific industry than they are even in SpaceX, to be honest, with how hot the trade's been all year. What do you make of SK Hynix, coming to the US markets? And it's a bit unique because this is a company that obviously has already seen massive growth in international markets, but now coming to NASDAQ.
Well, I mean, I think it speaks to the fact that you have multiple things going on. Obviously, memory, or at least obviously to me, memory is a bottleneck. I think most people agree with that. The question is, how long does it last? And I think SK Hynix coming into the US market just speaks to the amount of capital needed to build out the infrastructure to support AI. So I always say it's never the data, it's how people react to the data. So do you look at the fact that SK Hynix is raising high 20s billions of dollars is a good thing because it shows that, oh my God, the demand is still so strong they need to raise this money? Or do you view this as a bad thing because, oh my God, they're raising this money to expand? So I think for right now, the stuff that's going on with memory, and obviously you've seen, violent swings in the Korean stock market and the semiconductor index over the last month or so, every day. And I think the Korean stock market has had, 3 trading halts, I think, recently. So, I'm more, if you're asking longer-ish term, I just look at a very big picture and say, you've had agentic AI come out on January 30th. That requires, and I'm using obviously the OpenClaw formalization on January 30th as sort of the starting point. And then that requires 10 to 100 times more tokens for those types of requests versus just chat-based AI. You've also got the Vera Rubin platform coming out that requires at least 3.5 times more memory in the minimum configuration of that relative to the Blackwell generation. And so from a longer term perspective, I see memory still being pretty strong, at least for another year as we go through this agentic AI build out. So, it's a complicated answer, but that's kind of how I'm thinking through this right now. And in general, I'm bullish on memory over the longer term. In the short term, I think there's going to be a lot more, in terms of stock prices being driven by what is mattering more, the token minimization, as you see companies trying to control their AI spending bills, or kind of the architectural shift underneath.
Yeah, that makes sense to me. And I think people are really starting to pay attention as the need for memory heats up. I want to talk about this graphic that you had shared with me about China ultimately may have at least a 20-30% share. The United States really leading in DRAM industry market share from 1975, and that has majorly reduced as Korea has become such a large player. Looks like as of 2025, it was 28% US, 5% Japan, 62% Korea, 5% China. What do you make of this massive rise for Korea, as well as this big decrease for US and Japan as well?
Well, what I'm trying to point out is that I see a lot of arguments that people are making these days of, oh, don't worry about China at all because they're trailing edge and it really doesn't make a difference. And what I tried to show with that chart is, and I started in the industry. I'm an electrical engineer by training, and worked at Digital Equipment Corporation in the 1980s. And if you go back to that period of time, Japan, when they started in semiconductors, they were also trailing edge. And you can see that the US had 90% market share. Most of that was Intel. For those viewers who don't know the history of the market, they had almost all of that share. And then Japan started to ramp up, and Intel almost filed for bankruptcy in the mid 1980s. and they shut down producing memory and got into this business called microprocessors. And then I was, on Wall Street in the 90s, and I remember looking and seeing how the Koreans were getting into the market, and they were also trailing edge. But you can see by what's happened with the share, they went ahead and then they put the Japanese pretty much out of business. Now what you're seeing is China ramping up, and people are like, oh, don't worry about the Chinese, they're several generations behind. But you have to remember, China, from an end consumption basis, they buy 20 to 30% of all PCs made, all smartphones made, et cetera. And so it'd be crazy for people not to think, especially when you know that Apple is out there trying to qualify CXMT. And by the way, they're going public next week on Thursday, and they'll be raising close to $4 billion or so. It's crazy not to think that they're going to keep ramping that up, especially with the support of the Chinese government, because when you're absorbing that much of the end market for electronics, you're probably going to want to get self-sufficient on that. And so longer term, they're going to be a problem. And especially because obviously China's a massive country, it's going to be state supported, and that's going to cause an issue. And so that's more of the way I think about it is that affects your terminal multiple and how you should be thinking about it. And I just wanted to bring that up because I see a lot of, people talking about, oh, it's different this time. And I'm like, it's not different this time. It's the exact same thing. It's obviously not going to matter near term, but from a longer term perspective, China's definitely going to matter.
Yeah, as they typically seeing them going from 0% to 5% just after so long not having been a big part of this market. Good points. We're taking that graphic. Thank you. All right, so kind of going from there, you talked about 1 year here at least seeing continuous pieces. So when we talk about SK Hynix IPOing here, is the valuation attractive to you, where it's coming out, and then what are you comparing it to, and how are you going about playing this memory theme?
Sure. So yeah, I mean, it trades at a discount to Micron, and so you can say, okay, it's trading at 20% to 30% cheaper, depending on how you want to look at it. The way I think about it is they are the leader in high bandwidth memory, right? Samsung obviously has #1 market share globally for memory, but SK Hynix really got HBM up and running earlier, and then Samsung sort of was playing catch up to SK Hynix and Micron.
Yeah.
So to me, the discount makes it actually on the margin probably more attractive than Micron is. To some degree, they're all the same trade. Now, Samsung obviously has other things in there like cell phone division, et cetera, which kind of complicates this. And so when you go kind of pure play, it's really SK Hynix and Micron. And so I can see that valuation gap closing over time. Now, whether that's because Micron comes down or SK Hynix goes up in the near term, we'll have to see how that plays out. But from a stock price perspective, if you're a US investor, you really only had one choice up until today. Or sorry, two, if you want to throw in SanDisk, obviously. So you had two choices. Now you have a third, and they're a really good company. And so I can certainly see money coming out of SanDisk and Micron and people putting some of that into SK Hynix. So you have 3 names in your portfolio as opposed to just 2. For me, if a space is doing well, I typically try to say, okay, I don't want as much company specific risk if I have a big picture theme, which in this case is memory is going to continue to be important. I'd rather have diversified exposure to the space unless there's some really super compelling reason not to.
Besides for valuation, what's the biggest risk you think for investors as they potentially invest into this new player in the memory space that's coming to US markets?
I think it's next Thursday. CXMT goes public. And that, if nothing else, will get people thinking, China's in DRAM and there's something public and they're raising money, because I don't think, because there is, CXMT is private right now, right? And Yangtze, which is, the NAND version memory producer, they're also private. But CXMT coming public may actually have people who've longer memories going, I remember the Japanese in the 1980s. I remember the Koreans in the 2000s. What is the right terminal multiple? Because that's what everybody's debating. And so I think that's going to be I'm highly curious to see how the markets take that. Obviously, they're listing in China, but them being public and you being able to see what their stock price is doing, I think will be very interesting, because I think that's the long-term threat to to all the players, whether it's in Korea, Japan, or here.
Do you think a variety of other players in the space, we could see them going public over the next year as there's just increased demand and people need to raise capital for these build outs?
Yeah, I mean, there's only one other major one, right? It's Yangtze in China. And so I think, given the amount of capital needed, I mean, this is a very capital intensive business, right? And so while the money's available, you should go and get it, because as you've seen, you've now got the biggest companies in the world, whether it's Amazon or Google with that $85 billion offering. Amazon just did a bond offering just a couple of days ago. The AI build out is so expensive, and the money right now seems infinite, right? Like there's enough money to fund everything, but money's not infinite. And so at a certain point, it's going to get more problematic for the longer you wait to raise the capital, because the capital's already been allocated. So it's going to be fascinating year as this plays out.
What do you make of these kind of graphics that show the money's just kind of moving around in a circle a little bit through the ecosystem? And when people are saying, oh, all this money's being generated and revenues coming from this, when it's really just kind of players passing money along, NVIDIA, SK Hynix, Micron, right? Do you really see actual value creation that is equal to what people are talking about in terms of the money that's being invested?
Well, here's the interesting part, right? So if you go back to, so you have OpenClaw come out on January 30th. In March, you have people at Meta talking about their leaderboards for token maxing, and everybody is cranking up and focused on, hey, how do we get our employees to use more tokens? Then you have Uber come out in April and say, hey, we blew through our entire AI budget in 4 months. And then you fast forward to June, and you have the Coinbase CEO come out and put a post out on June 26th saying, yeah, we've gone ahead and added, done 5 different things, but one of them is we now route queries to the cheapest models where we can, and we've managed to cut, even though we're generating more tokens, we've cut our revenues, or the AI bill spend, which ultimately turns into revenues for the next set of companies. We've cut that AI bill by almost 50%, 50. So
Wow.
Then you go, oh my God. Now, for those who don't kind of understand, if you go ahead and ask Anthropic what 3 + 3 is, that's stupid, right? But that's what, if you go back, 6 months ago, that's probably what people were doing, right? You can route that query to a very, very, very simple model and pay 1/10 of the price of sending it to Anthropic. And so what people are doing now is saying, all right, for the really simple queries, like summarize my emails, you don't need Anthropic for that. You can send that to a really cheap open source model. Now, if you're trying to, figure out some nuclear physicist stuff, then yeah, okay, then I might want to use the Anthropic model for that. And so that's a quick way, very simple example, but quick way to get your AI bills down. So that's what I'm really watching to see what happens when these companies guide for the September quarter. The June quarters are going to be just astronomically good.
Yeah.
The question is what happens for guidance for September. And now the interesting development over just the last couple of days is obviously Meta coming out and saying, hey, we're going to sell MetaMuse Spark at 1/4 of the cost of the Anthropic models or the ChatGPT models. And then Grok also came out and had a big step up based on their work with Cursor in terms of their model performance.
You guys hear me?
So now you've got even more low-cost alternatives. And so that revenue generation it's going to get very interesting what that looks like for the next 3 to 6 months. And that's why back in June, I posted about the fact that I was worried about a speed bump coming, because you're switching from, let me spend all the money I can on tokens, to, oh my God, I'm blowing through my entire budget in 4 months. I need to cut my spend back. And so what does that do to the next 3 months in terms of the revenues being generated from AI as people go through that token minimization process?
I do want to definitely double tap into that. One thing I wanted to point out here as well is that SKHYV is now live and trading.
Oh, great.
That is opened here, and it is trading at 170.03 at this moment, up about 14% from the 149 initial pricing.
Interesting. Yeah, I mean, it's going to be fascinating just to see the interplay between that Micron SanDisk as the day wears on, and how is the money moving and flowing, because obviously they just raised, I think it was like 28 billion or so. I don't know what the final number ended up being, but data somewhere. And if you're a portfolio manager, what you probably did was say, okay, I own SanDisk and Micron, let me sell a little bit of that and put it into SK Hynix. But there's a lot of other stuff going on. Obviously, Meta today is having a huge move based on what they've talked about with regards to their presence in AI. And then, what does that mean for CapEx? And so this is going to be really super interesting between now and then also next week when you have CXMT come public in China.
Yeah, a lot happening all at once. I did want to talk specifically about, well, two topics here. One, first off, we also have Evan on here as well. Evan, you want to throw in a question here?
Can you hear me?
Yeah, we got you.
Wow, this is the greatest day of my life. I've been trying to talk for so long. Shout out Dan. I always love getting to hear Dan. I was screaming like SK Hynix started trading. It's live, we're going here. How are you doing? Honestly, I just want to say hello at this point. I don't even have something. I've been so focused on trying to talk. I always love when Dan joins the show. I am very interested in seeing what ends up happening on the Chinese companies end up coming in. Obviously, the US is always gonna have some thoughts of not wanting to use the China product. At least this administration will not want to use some of the chips, but that doesn't mean it won't satiate demand around the world, and then the US can have some of that supply can be unlocked, and prices maybe come down. But my thought,
there's a nuance to that though, Evan, right? Because let's say, for example, right, the second biggest market for them is China.
Yeah.
So is the US going to be fine with Apple buying Chinese memory for phones only sold in China? Because don't forget, we have midterm elections coming up in November, right? And so the last thing that the US administration wants to see right now is prices for iPhones going up. Now, prices for iPhones weren't raised. Prices for everything else that Apple sold was raised pretty much. So I'm sure there's a lot of negotiation going on in the back room, and I will be stunned, because I think there's a lot of people that think, oh, well, given security concerns, et cetera, Apple will never be allowed to buy Chinese memory. I actually think that's going to happen. And the day that happens, my guess is that you're going to see the US memory stocks getting absolutely clobbered, because I think there are a lot of people out there that don't think that's going to happen. But Tim Cook is probably the best CEO, bar none, in terms of being politically savvy. I mean, he was one of the first to call President Trump when he was elected during his first term. And don't forget, they got exemptions from tariffs during Trump's first term, and then they got some exemptions this second term. So if anybody can end up using Chinese memory, it's going to be Apple. And from a bigger picture standpoint, the Trump administration does not want to see inflation going up into elections. That's a huge political problem. So I wouldn't be too, I think that's going to occur.
Do you view Apple raising the prices that they did, choosing not to do the iPhone? It came out right after that they're trying to get the memory from CXMT, a Chinese company. I think that was actually kind of just a negotiating tactic there. The thing that people actually care about is the iPhone. Once they raise those prices, that's coming in. Xbox also raised their prices on the same day. I think just one question here on this. If I'm looking at this from the AI trade side of this has become a bottleneck. Prices are accelerating the AI data center. you're seeing these increased AI CapEx spends. If memory were to come down in prices, I imagine these companies would not pull back their CapEx spend. They would just spend more efficiently. And maybe that would loosen the demand a little, loosen the market a little bit more. Is that environment where Chinese memory comes into the market a good thing for the AI trade as a whole? Maybe not these memory names in a pocket, but the AI trade as a whole, maybe these hyperscalers?
Yeah, I mean, it obviously depends which names you're talking about. If you're talking about the guys spending the money, it's nothing but good for them, right? Because the biggest issue with all of these stocks is what's your return on invested capital. And so if you see CapEx numbers going up and you see EPS estimates not going up, or revenues not going up, or going down, God forbid, because all of a sudden your depreciation charges are, they're outweighing any benefit you're getting from deploying AI, that's a huge issue. So if you can come out on your call and say, hey, we're able to spend less on CapEx because memory prices have come down, pick your number, or they're not going up as much as we had originally thought, that's great for them. Now, the semiconductor space, that's going to be a totally different issue, right? Because people are going to turn around and go, oh my God, like the prices are coming down, or the guys at the back end are taking down the numbers. The first guy goes ahead, and there's a sequencing to this too, because don't forget, right now, everybody sort of has this view of, and I'll quote Larry Page of Google on this, I'd rather go bankrupt than lose this race. So nobody's willing to blink. The first guy that goes ahead and says, hey, I can go ahead and spend a little bit less because I'm doing it more efficiently, then I think you'll see everybody else kind of doing the same thing, at which point a different spot, obviously, on the trade, where you could see a lot of these semiconductor names reversing hard. Now, to be clear, I don't see that happening. If anything, with some of the things that have come out from Meta over the last couple of days, it seems like, their spend is going to be huge next year, because now they can go ahead and monetize excess capacity. But yes, in a vacuum, if pricing doesn't go up as much, that's great for the guys actually spending the money, which if you look at the Magnificent Seven this year, they're up, 3%, right? The semi index is up 80. So you're going to see some of that 80% move go into the only 3% move in the Magnificent Seven that have been hurt by the CapEx spend, which has benefited the percent move in the semiconductor index.
That makes sense. I'll throw it to Gav after this. I apologize for coming in. Historically, the memory trade has been considered to be a very cyclical industry, and the definition of cyclical breaking is what we have seen right here. This is an NVIDIA type couple quarters here for these companies. My question is, what do you think comes after this? We know it takes 2 to 3 years for memory to come online. We know all these things. Do we end up settling out at a much higher place in this? Is this what do you think the future of the memory industry looks like? Is that kind of cyclicality at a just materially higher level? I'm just curious.
Yeah, I don't think so, because I look at this very simply. And I lived through this in the 90s with the Koreans entering the market, and you could argue in SRAMs with the Taiwanese entering that market back in the mid 90s. And everybody always makes these arguments, and I was one of them way back then, because I was a lot less experienced, going, oh, well, yeah, Korea's entering, but they've got trailing edge memory, and so they're not going to be as impactful. And now look at it, the two of the three biggest are Korean, right? And they're leading edge. Hynix is the leading manufacturer of high bandwidth memory. So I look at this and I go, China has been put on notice multiple times during President Trump's first administration, through the Biden administration, and then now currently with the restriction on NVIDIA chips, that they need their own source of AI supply. They are going to ramp up they're going to ramp up DRAM, and ultimately they're going to figure out high bandwidth memory, just like the Koreans figured it out, just like the Japanese figured out, back in the 80s. So for me, I don't view this industry any less cyclical than it was before, because you have a brand new entrant that has incredibly deep pockets, that's going to be funded by their own government, that has an absolute need, as much as nuclear weapons or aircraft carriers, to have their own semiconductor industry. Ultimately, I don't view this space as any less cyclical than it was before. I know people are going to make that argument in the near term, and in the near term, it's right because of all the reasons you brought up. It takes a couple of years to get capacity ramped up. But I also think about, if you're getting more efficient with your routing of AI queries, then that also introduces a wrinkle. That's why I've sort of said speed bump, in the sense that you could have these stocks getting whacked in the near term, but I do think they ultimately, the semi index goes to an all-time record high from these levels. But to answer your question directly, which is it any less structurally cyclical? I would argue it's about to get more cyclical very shortly, because you're going to have China starting to ramp things up into the end of this decade.
Great questions, Evan. I had a question off of the Apple piece. We saw Apple come out and raise the prices on a variety of their devices because of these increasing costs. Do you think that that's something that will continue to happen across the board, kind of these downstream effects of these increasing costs of chips and memory and pieces like that?
Well, that's the interesting part, right? So this gets back to the thing of, will Apple be allowed to use Chinese memory? The bigger question is, will all US companies be allowed to use Chinese memory that is being sold into the China market, right? So could that extend to Dell, HP, whoever? And that's going to be, I think, the interesting part, because to your question, which is a really good one, if that isn't allowed to happen, you have two choices as a company. You either eat the margin, miss your earnings estimates, forecasts, and get your stock clobbered, or you raise prices. I know what these companies are going to do. They're going to do exactly what Apple did. And to some extent, Apple and Microsoft has given everybody else political cover to go ahead and do that, right? The last thing that the US administration wants to see is prices going up. That's why President Trump had that tweet about how, he made Walmart cut prices, supposedly. And so that's the headlines that the US government wants to see, is prices going down. They do not want people going into the midterms seeing that prices are going up, regardless of whether it's their fault or not. They don't want consumers seeing that the prices of things that they love to buy are going up, right? And so this all comes back to what Evan and I were talking about earlier, which is, all right, well, will Apple be allowed to buy Chinese memory? And I think the answer is going to be yes, and we'll have to wait and see.
Yeah, it seems like it's probably the logical conclusion here, because they don't want to see those rapidly escalating prices. And to be honest, you say things people love to buy. Pretty much everything that people love to buy these days has a chip in it. And so it is, yeah, it's pretty unanimous across the board. And then just one other question in terms of the token prices, because you talked about routing to open models to basically reduce those prices. We were kind of sold this idea that, hey, the token costs are going to come down right over time. Like, they're more expensive now, they'll come down over time. And it's been exactly the opposite of that. As these companies have gone towards IPOs and realizing that they need to put real revenue on the books, they're actually increasing those token costs, especially on these higher quality models like Fable and others along those lines. Do you think that that is just going to kind of be the set pathway, and we're just going to continue to see increase on these higher level models, and that we really won't see the decrease that we were sold the idea of?
I hope not.
Well,
Our AI developer promised us those token costs are coming down.
well, it depends on how you're defining it, right? Because is the cost to produce each token going down? Yes. But if what you're trying to do is something super complicated, and you have models that can now do it, the costs are going up for those cases. So that's why I get back to this blended case of, let's say that, and I'm making up numbers here, but just let's say that your cost to produce a token went from $10 to 20 at the high end. but you've also got a model now that you can route to at $2. And so you put 90% of your volume through that model at $2. Your average cost for tokens is going to come down, right? Because now you're being smart about that 3+3 question going to the model that cost you $2 and not to the one that cost you 10. And so the Fable and Mythos and those models, as they can do more amazing things, yeah, it makes sense that the prices on those will be higher, but they'll come down over time too as the next version of Fable and Mythos comes out, etc. The one thing that's kind of different about tokens relative to other businesses is because you're having to generate a new token each time, the cost of each incremental token in a query doesn't kind of come down, right? And so to some degree that scales linearly with the number of tokens. And so there's no added advantage to more tokens being produced in the sense that there was with some of the internet models where, hey, the more data you get, the lower cost it becomes going forward because you have all of that prior data to train on to answer those questions. You don't necessarily have that with queries. And you could say to some degree, maybe you do if people are asking the same question on the World Cup, and so you can cache that and serve it, and so you don't have to generate a whole brand new set of tokens every single time. But there's also this thing where it's not quite as linear as when the internet was ramping in terms of cost coming down to what Evan just said. So yeah, there's a lot of moving pieces at the same time, and it's going to be fascinating to see how this plays out. So I am tracking token production, but I'm also tracking cost per million tokens, and that has been coming down really since June. So for the last 4 weeks or so, that's been kind of dropping. And while the token production had been ramping, and now that actually looks like it's flattening out too, which I have to admit kind of surprised me. And so we'll have to see, because flattening units combined with dropping prices is not good. And that's not something I expected to see right now in terms of, I expected the prices to come down, but I didn't expect the token production to kind of start to flatten out, which is kind of surprising.
I will say
that is and Evan, last thought here, we do have to switch. We have a guest coming in right now. So Evan, and I want to give Dan a chance for a final thought.
Token maxing thing that was popular for a while. Maybe some people subscribe to that a little bit less. I've been seeing a little bit more. So I wonder if that's also a part of it. But I always love having Dan on. Awesome guy, very smart person. I always get more educated when you're on here, sir. Is there anything you want to leave the people with?
No, nothing. The one thing I would say is go read the Coinbase CEO's post on June 26th. I think it's a great one, and it gets into everything we've been kind of talking here about in terms of pricing versus cost versus token production. So I think it was a great post. So June 26th, Ryan. So anyway, take care, guys. Thanks for having me on. Talk to you later.
Thank you, Dan. Appreciate you. All right, for the audience, we have now had a little bit of trading time with SK. Also, briefly, before we get our next guests in here, want to give a shout out to today's sponsor, Leverage Shares. I know people have watched the volatility coming off of the SpaceX IPO, and Leverage Shares had some amazing ETFs. They were some of the best ETFs in that area in terms of trading performance and volume, and they are back at it again for SK Hynix. So again, those that want to get 2x long exposure, you have an opportunity here. Tickers on the screen. These will go live Monday, Tuesday area, so they're not live just yet, but SKHX is something that you can add to your radar. And then I do know that there are people, especially when SpaceX was coming out, that were like, this thing is not going up. The valuation is way too high. We need some way to play this to the downside, but a lot of people are scared of puts, or to be honest, don't really know how to pick the right strike states, pieces like that. Very simple here. Not even using leverage. 1x short SK Hynix ETF, that is SKHZ, making it easy for people that want to play this to the downside without having to get too crazy with the options. So those are going to be coming early next week. These are for the trader crowd. Do not use these for long-term holds. That's not what they're used for. But if you're someone that's trying to play these short-term moves, I mean, look at it right now. It's up 16% today, right? These are the types of things that you can utilize to play those short-term moves. With that being said, we will talk more about these throughout the day, but you can put them on your radar, and reminder, they'll be coming early next week. Now we got a special guest coming up. Someone I haven't had on the show, I think, in a little bit. Me and just them talking to each other. We're gonna bring in Mr. Shay Boloor. Let me do a brief intro here for those, because it's been a little bit since I've had Shay on. Our next guest built a massive audience on social media under the Stock Savvy Shay handle before Futurum Group hired him to run their entire equities research division. He's a chief market strategist at Futurum Equities, co-hosts a variety of shows across the board. You can check him out on YouTube, different pieces. And just this week, you went on record with some takes that are going to make this segment interesting around SK Hynix's NAS debut. Please welcome the one and only Boloor. Let's bring him into the stream now.
God, I appreciate it. Yeah, I mean, the first time I went on TV, I know it feels like forever ago. It was only just 2 years ago. I was actually do you remember my title? Was the podcast host of the Wolf Financial Podcast. So yeah, we go ways back,
sir.
you and I.
Come a long way. Great to have you on here today. I'm super interested in your thoughts on this. You are somebody that has been all over the memory trade, chips, pieces like this. I'm often looking and reading pieces from your page. So I just want to kind of get, unbiased thoughts off the bat. We're already seeing this trading here today. Are you buying this? Are you selling this? Are you not touching this?
I have a specific rule in IPOs that I don't like to touch new IPOs just because there's a lot of fudgery that happens, but it's a very exciting moment for a lot of AI investors right now. I mean, we finally have a second pure memory way of playing memory right now after Micron. And I think that SK Hynix is actually, dare I say it, a more alpha way of playing like the HBM trend, because they are NVIDIA backed. Like, if you aren't aware, like SK Hynix is really the most direct bet on HBM in the NVIDIA's AI rack roadmap. And it's just like, not just a casual component of it. It's actually turning memory into a really larger and fastest growing dollar pool inside the server. And the best part of it is it's not just benefiting from the AI data center build outs, it's benefiting from every generation that NVIDIA creates, because more and more of it has more dollar per content. So it's a really exciting moment, and I can't wait to see how it trends.
I want to talk about some of these terms, HBM, DRAM, all these different pieces that get flying around. Like, what do investors actually have to know and pay attention to and understand if they're going to invest in these companies?
Yeah, perfect example. Let's just say HBM per dollar, dollars per NVIDIA rack. So like, what I'm saying by that is like, NVIDIA racks aren't moving slowly anymore. They're like multiplying with every generation as NVIDIA increases the amount of memory per GPU. Everything that sits next to the actual accelerator. That shifts drastically for the amount of memory that's required. So like, a shift from HBM3E to HBM4, HBM4E, like, it's massive. And to put in perspective, like Blackwell right now, I want to say it's around $150,000 of HBM per rack. Vera Rubin's around $380,000 per rack. Then Rubin Ultra is $1.5 million of HBM per rack. So
Crazy.
That tells you right there. I mean, like, the memory supply isn't just more exposed the more AI racks being built. It's actually demanding a higher memory bill of materials inside each rack that ships, and every generation that goes on needs more memory. So that's why it doesn't have that cyclicality spice attached to like in previous cycles, and it's actually becoming more of a strategic input.
People, I think, look at pure memory plays, and there's a big three if you're looking at Wikipedia, and they put Samsung Electronics, Micron, and SK Hynix. I think a lot of people, though, when they look at the market, they see Micron and SanDisk kind of put next to each other. How do you see Micron versus SanDisk versus SK Hynix versus Samsung Electronics? Like, how do you bucket things out, or say like what is similar?
It's tricky. I think right now we are obviously in the fickle stage of the AI build out where things are moving in buckets. I think that's why you're kind of seeing Gavin Baker, one of my favorite people I listen to. Like, you've coined the phrase bottleneck bros. It's true. Like, the bottleneck bros, like, they're just moving from one component of the ecosystem to the next, and that's causing like all these companies in that bucket to move at once. I think that's kind of been the trend in this AI trade, and I think that's memory is no different. There's an oligop. There's three main suppliers, like what Gav was talking about: Samsung,
Yeah.
Micron, SK Hynix. The way to think about it for me specifically is, I mean, Micron obviously was one of the beneficiaries of being the cleanest US listed memory vehicle for investors who actually want that better access. That there's a lot more familiarity with their governance, like a lot stronger US institutional ownership.
Right.
They also have the benefit of a lot more conservative contract structures. Like they actually are signing 5-year contracts with the SCAs, which provides them a much higher floor on pricing and also protects them on any kind of downside if this is a cyclical bubble that the memory's in, which I don't think it is. But it just made it a lot easier for a lot of people who are bullish on this trend to get exposure, and that they went through Micron. SK Hynix is a lot more different because it's got a lot more of a direct HBM scarcity asset because it has the strongest current share in the HBM, much deeper NVIDIA linked exposures.
Yeah.
Like I think that is probably the biggest difference between SK Hynix and Micron is the NVIDIA exposure. And that's huge because AI world doesn't run without NVIDIA. So like that's why I always say in my media tour on SK Hynix this week, like the greatest leverage to the highest value part of the DRAM market at the exact moment when NVIDIA's rack roadmap is multiplying the dollar value of HBM content per system with every generation is SK Hynix's whole wheelhouse. That's the big difference. So like I think that Micron can be like a much broader memory winner. It's improving its HBM positioning, which is great to see. It's got a lot of runway there, but SK Hynix really is the current HBM leader. And Samsung, listen, they're a conglomerate. It's massive. Like when you buy Samsung, you're not just buying a pure memory name. You're buying like smartphones, like networking, like all these different things. So like Foundry, which is huge, which they messed up on initially, but they're actually really improving on, and they're going to do a lot of great things with that. So I think that's kind of the differences between the three.
Got it. So on SK Hynix, we talk about these contracts that they have with NVIDIA. It's a massive part of their demand. How secure do you think these contracts are for the long term? Are they really like, hey, we know for the next 5-10 years, we're safe, we're secure, we have this pipeline, it's locked in place? Or, Dan Niles just talked about another company that's going to IPO, I believe, next week, also in the memory space. Like, could there be additional competition that rises up? I'm just trying to understand, like, how locked in do you think they truly are with NVIDIA?
Was Dan talking about the Chinese one?
Yeah.
Yeah. Okay. Yeah. I mean, these long-term agreements are huge. Like they're changing the whole lens of how you should view these memory supplier companies. I mean,
They
SK
feel like
Hynix,
baseball contracts.
they almost they almost are because there's so much paranoia and anxiety in these like, companies who are building these massive AI buildouts, and they're spending billions and billions of dollars that if they mess up with a memory component or they're just like don't have enough memory for these racks, like all of it's pointless. So like it's just SK Hynix is really just locking a lot of these multi-year volume and pricing commitments with hyperscalers, and it's not just across HBM, it's also across NAND and DDR5, and then like the companies in return, like the reason SK Hynix and Micron are doing this is they're trading at a commodity price right now. So what I mean by that is if you're trading under 10 times earnings, that's the market assigning you're a commodity. You're going to do great, print cash as long as the supply and demand is this uneven. But eventually, what happens with every shortage? There's a glut, and that glut you're going to get punished. So the way to like offset that multiple compression is doing these contracts. So now there's more earnings visibility. There's more durability in their business model. Like it doesn't remove the cycle of being a memory supplier company, but it does make the businesses a lot less dependent on short-term spot pricing. Because right now in past cycles, like if you're a memory supplier company, whenever there was a ton of demand, you just supplied it and sold into the spot markets, and that's why they were able to have a lot of pricing power. They're trying to remove that component of this by making conventional memory a lot more of a strategic components, and they're getting a lot more tied to customer commitments from companies that just need guaranteed memory access to keep building these AI clusters. And I think that there is a big dislocation right now that's happening in the market where Micron and like SK Hynix, they were just getting penalized a bit. The memory drawdown. We were having this memory drawdown the past couple weeks that they were just like, oof, like they're looking for any kind of data point that's going to question the durability of this pricing power. And Samsung had their earnings, and they only 19x their profit and they slightly miss their revenue estimates. And they're like, oh, is this peak year? So now they use that data point to justify a drawdown. But other components of the ecosystem, like we're still catching bids, like Intel, for example, and other names like that. It's just like there's such a dislocation where Nvidia's trading at under market multiple, Micron's trading at 8 times, SK Hynix trading at under 10 times, but you have names like Intel trading at much higher multiples that are getting priced as the build out's going to last until 2030. But these specific companies, they're getting priced like this is peak year. So like there's a big dislocation.
Yeah, that makes sense to me. You're clearly, passionate, have a deep understanding here of memory. You run a couple of portfolios that people can check out and really see what you're investing in. And I encourage people to check those out on Savvy Trader. You got a family portfolio and a growth portfolio. Not going to give away too many details. People can go subscribe if they want to see them. But how are you getting exposure to memory? Because I'm not really seeing, some of the names that we're really talking about now as big positions.
That's a good question. So I've been my style is obviously long-term investing. It's multi-year investments. Like I have two portfolios, what I was referencing. I have a growth one and a family one. My growth one is a lot more with fixed capital. I never add capital into it, and it's more on performance based. That's with usually three-year time horizon on specific ratings on thematics I want exposure in. While my family portfolio is just like companies that are 5+ years, probably decades holds on like what the fourth industrial revolution is building around. So it's like beach stocks almost, where like I just like want exposure to them, never think about timing, pricing power is going to be temporary or fleeting moment, all that stuff. So memory, I've been shouting from the rooftops about memory for a year or two, but I never really owned it. I've been trading around it. It's a similar issue I experienced back in 25, where I thought the Google narrative was just ridiculous, and I go on TV and talk about how ridiculous it is, but I actually never owned it. It's kind of a interesting trend I've noticed personally in my career, where I'm putting my reputation on the line, and I almost sticking my neck out when I'm in the minority in my belief that I almost don't want to double down on that with real
Yeah.
capital. So I kind of felt that way about memory. Obviously, it was a huge mistake. I really didn't anticipate the SCAs, the 5-year contracts. I thought that we don't know. I know that the TSMC CEO, he kept saying 2028 is going to be kind of like maybe the year the supply and demand evens out. So when the AI factory is telling you that, and TSMC, if you guys aren't aware, their CEO is the biggest grown up in the whole ecosystem. So like he doesn't lie, he doesn't exaggerate. Let's just say that. So when he says that, I'm like, oh, okay, so it's actually 3 years away, 2 or 3 years away. He then started trickling. It might be 2029. So that's when I also started getting comfortable. Okay, memory is going to be even more of a it's not going to get peaked this year. Let's just say that. And then Apple is really what's caused me to now double down on the belief that memory is going to be a lot longer than anticipated, because they all of 2025 and even parts of 2026, they were like claiming like we're not going to pass the cost down to consumers. We're going to take it. Like that's what kind of scared me off of like, listen, they're the biggest memory buyers out there. Like if that's them telling me they think it's short-lived. Then they raised the prices a month ago. That was them waving the white flag. And that was, to me, indicating that they misplanned the memory boom. It's actually going to last a lot longer than expected. You don't raise prices on your flagship products, deal with the demand erosion from that if you think it's going to be a 1-year blimp, maybe even 18 months. That was like, okay, that's the difference. And that combined with the contracts, I'm like, all right, I'm doubling down now. Late, but I'm going to be doubling down now on that theme.
And by doubling down, just to clarify, with the money, not just the voice on TV.
I'm trying to get into the Micron stock. So for specifically now SK Hynix as well, but maybe.
Well, let's actually talk SK Hynix for a piece there, because I was looking at some quotes and just some pieces of what you've been talking about. I believe you talked about the ADR structure being a drawback compared to owning Micron outright. I'd be curious to hear if you have any additional thoughts on that. And then just in general, kind of investing into Korean markets, because Korean markets have been a little crazy this year. They technically just entered a bear market somehow after being up, 80%. So maybe you just talk to those two pieces, because you are trying to get into SK Hynix, but what do you think about the ADRs as well as Korean markets in general?
Yeah, I mean, ADRs are tricky. I will say that I do think the ADRs are less of an issue for a lot of US investors, especially those who don't have who have easy access with no current conversion issues. So there is a world where it can trade with somewhat of a premium to like the people who own it in Korea. It's just like there is a calculation now you have to add to buying an ADR. Like there really is. And now you have to like every single time you buy something, like you're gonna have to think about like what's the premium on the valuation in the Korea markets. Like even though it's going to be minimal and it shouldn't like we're talking about a move that's moved 1,000+%. Like this is a couple percentage we're talking about what the premium is. It's enough of a heartburn of like why bother when you have Micron. But the HBM trend is exploding on these NVIDIA architectures. So like if you continue believing in that's going to continue to fame in and like every architecture after that, this is the better play with the bigger alpha. But Micron might be it's the domestic play, like at the end of the day. And I think SK Hynix is a US listed IPO, but it's not a US company. And I do think with this administration, like that is a big difference on narrative. Like you and I, like our job is a lot more entertaining now with Trump as president because he provides content for us essentially.
Buy Dell. Yeah.
Yeah, exactly. So like I don't think he's going to do that with SK Hynix. I don't think he's going to do that with TSMC. He's going to do that with the Intels, the Microns, the Nvidias of the world. It's like you have to think of it as almost there's a heartburn on ADR conversion premiums, but also the Trump premium isn't there. Yeah, I just think that it's tricky. I don't know the balances between the pure HBM play and also the domestic play, which one nets out higher, but that's why I'm leaning towards Micron because I just think we're in a narrative-driven market, and Micron has a better narrative, even though SK Hynix has the better HBM fundamentals.
Okay, but you did say that it sounds like you want to start scaling into both.
Yeah, Micron, I'm trying to scale into. I'm looking at the chart right now. I was getting stupid. I was annoyed. I got a little. I wanted to wait till the 50-day SMA level for Micron. So they didn't touch that during this pullback. They almost did. So my limit was at 899 on Micron, but I want to do options. So it hit that level pre-market when I was asleep because I live in the West Coast time. Didn't really do. I wasn't awake when it happened. So I was like, oh God, I hope it stays like that once the market opened, and didn't, just took off, obviously. But I'm looking at buying leaps. Like I bought leaps when I was at last time it dipped at 300 level. That was the Anchorage average VWAP from the tariff lows. I was like, that's a good level to buy some $500 leaps in 2028 expiration. And I did. I sold it when it was at 700-ish, just because I was like, oh my God, it tripled in such a short amount of time. Like I'm okay with this. I'll put it into NVIDIA because my philosophy right now is like whatever excess cash I have, I'm putting it in NVIDIA because this should be a $300 stock. It's just absurd that it's not. So I think for Micron, especially like specifically, like I'm waiting for the 50-day SMA. Timing was the reason I missed it, and I'm kind of tilted by that. But SK Hynix, maybe SK Hynix has a Cerebrus like move post IPO and gives me an opportunity.
Could be, yeah.
I don't know what's happening in the Korean market with the leverage stuff. That scares me a little too, because that's like I hate waking up in the morning and Kospi's like
8 to 10%.
Yeah, it's like what's happening over there? Yeah.
Yeah, I don't know. Do they just not have like real casinos? So people just go to the stock market? I'm not sure.
I've been reading some Reddit stories. Like some people are legit putting their retirement in these 2x leverage vehicles in the Korean stock market for memory, just because memory has just been exploding past 2 years. I'm like, oh my God, I love memory, especially in AI, but that's a little frothy.
How do you think? So, I mean, you heard me talking about it right as you were getting on. There's going to be 2x leveraged on SK Hynix that are coming to the US Monday, Tuesday. You're going to have inverse as well. How do you think that the US investors are similarly going to kind of show same appetite for those?
Yeah, I still don't think people believe in the multi-year horizon for memory, so they're going to go do trading vehicles. I think also a lot of people don't love options as much anymore because these leverage vehicles are a perfect middle ground between equities and options, especially if you don't know a lot of the Greek, all the gamma and all the stuff behind the option contracts. They provide a ton of alpha. So I do think that these leverage ETFs like are going to be a very popular vehicle in the first couple of weeks because we had a memory drawdown recently. So there is somewhat of a technical bounce happening that can cause a catch up. And if you want to have the most alpha in this catch up towards previous all-time highs, these leveraged vehicles are probably going to give you the most bang for the buck. So I do think it's going to be very popular.
Yeah, it is kind of perfect timing with that pullback that you're mentioning. My average on MU is 392.90.
And you kept it smart.
I haven't sold any since then. So shout out, just watching. To be honest, shout out goes to Hamid on that one because I was looking at his portfolio. I'm like, this man's 30% MU. I was like, Jesus, and that was back
Wow.
at like 350. Yeah, I was like, all right. So I got on a conversation with him and talked, and I was like, okay, did some research here. I'm interested, but we did have that pullback. We went all the way up, MU specifically to 1,000, like 250 level. Back now to 977. It is a pretty decent pullback, specifically into the 50 SMA, which is I think what you were talking about beforehand. So SK Hynix, you talked about Cerebros as well, and kind of their pullback. So it's very interesting to hear that from also Dan Niles was talking about, he believes there's kind of a 1-year move here that's still going to be very volatile to the upside as earnings and revenue catch up and people see multiple quarter-over-quarter increases here. I think that it's going to be very interesting to see the margins, right? To me, that's like the most interesting thing these days. When people started seeing Nvidia grow with such massive margins, seeing these memory companies also have such massive margins, I guess it sounds like, though, I haven't heard from anybody that's been like, this is a revolution. This is just going to continue. This is just the start. This is the next 10-year stock market. It does feel like people are a little cautious here to the 1-2 year area.
Yeah, I mean, it's all about how much you believe the demand supply is going to be this uneven. I think that it's funny. I want to say Dan was like more on the bear side on AI. I don't follow him too closely, but I think he's tilts more on the bear side. I think a lot of people who were bearish on this AI trade are somewhat turning the corner and now just saying like it's not peak here, but it's close. Like that goalpost of them being like it's frothy. There's only a circular motion that's happening in the AI build out. Like don't believe it. To now it's like probably one more year we have left. Like that's a big goalpost move. And I think that if you're a memory investor right now, I think the most important operating metric for everyone to like follow going forward, if you want to see how much longer this pricing power can be, is look at the HBM as a percentage of the DRAM revenue and wafer capacity. Because if HBM moves from the mid-teens percentage like it is right now of SK Hynix's DRAM revenue towards a majority of the DRAM revenue by the end of the decade, then that means to me that the company's earnings power becomes much less tied to the low value commodity DRAM and much more tied to the real AI infrastructure demand. And that matters so much because HBM carries a lot higher ASPs and they have a lot more of a higher technical barrier and a lot more complex packaging requirements, like customer qualifications, brutal. There's a lot more urgency as well from the customers for this type of memory. So I think that that's going to be the number one thing to look for on the durability of this memory trade.
A couple of other questions here, just kind of like, a little bit learning myself. And I do want to talk TSM here as well in a second, because I believe that you've really referred to TSM as, the choke point here, right? As for all of these pieces as it goes through. But one thing that I had a couple people ask me questions on was, they look at NVIDIA and NVIDIA is just constantly innovating with new models. And there was this question with what happens with the old models. Everybody has to upgrade to the new ones. And it caused a little bit of hullabaloo. Is it a similar thing when it comes to the memory space with these DRAM chips, with high bandwidth memory and pieces like this, where constantly innovating and these chips are just rapidly falling out of favor? And then it's like, okay, I've got chips that are 2 years old. What am I doing with these chips? Do I need to upgrade now? Is it cycle like that as well?
Kind of. It's like I wouldn't view it as that way. I think that if you want the benefits of all the latest architecture on the chips, you just need the memory requirements, which is I just ran over earlier. It's substantial. So I think that every AI task will be different. It's not going to be one paint all of them won't be the same. Let's just say that it's going to be very specific. That's why you're seeing Cerebras have a real place in the market because they're just on the super fast inference angle. There's going to be like 5 or 6 different things. I think it's really important though that everyone knows that NVIDIA is really co-building their architecture with the memory suppliers. So like
Yeah.
that is huge because they're just orchestrating the latest and greatest files before they send it out to TSMC with the memory suppliers. So they're all working together for this because they know how important the AI build out is, and you just need to be a lot more efficient. Any kind of latency is going to be really impactful for the adoption on AI, especially as inference starts booming out, especially for consumers. Like how many stories I hear about like great product, but like it takes forever for them to respond to me, and like I just like
Yeah.
I feel like bones crushing right now on waiting for it, and they move on and don't do it again. So like I think it doesn't matter as much to answer your question, but I think that we're in a prisoner's dilemma, so they're going to want the latest and greatest constantly, and that's the memories game.
Yeah, it makes sense. I'm learning a ton here. I love it. Appreciate you coming on. The last thing I was going to ask you on, and then we probably do have to transition here. Oh, I'm getting news. Next guest is coming in hot. So I encourage everybody, make sure that you're following Shay. Shay, where's the best places for people to get your content on a regular basis?
Yeah, I mean, probably my Twitter, Stock Savvy Shy. If not, Future Equities. Like we're on YouTube, guys. We do a lot on YouTube. We have 5 or 6 videos a week. So check
Oh,
out the YouTube, and you'll see my takes on a lot of these companies over there.
pumping content these days. Love to see it. YouTube, Fox, all the places. Shay, pleasure having you on. Thanks for educating me. I look forward to the next time.
Thanks for having me, Gav.
Absolutely. Thank you to Shay for being on here. We are going next screen. Perfect. I'm back to just me. All right. More good stuff continuing to come up for those that have been watching as well. We have SK Hynix trading out at 17% up. That is trading at 174.71. What are we cutting to right here? All right. Okay. As we wait to bring in our next speaker here, I want to give it from Shay himself. A lot of people think that this is a big move happening within the next year for memory, possibly not 5 to 10 years. So if it is in that next 1 to 2 years, we think we're going to see a lot of people gravitating towards trading tools around these. Of course, there's going to be an options chain, but we have seen a huge rise. I mean, obviously over in Korea, if you saw the 2x leverage trading pieces for SK Hynix over there, it's actually insane. It is one of the biggest ETFs in Korea. So similarly over here, we also are probably going to see big moves and a lot of interest in the 2x leverage ETFs. You've got SKHX. That's going to be a 2x leverage to the upside. For the downside, no leverage, just a single inverse, SKHZ. So again, you heard it from really 2 guests so far here. They think that there's going to be a 1-year move that's going to be large and people are going to want to trade around it, especially right now because memory just pulled back about 20%. If you're looking at Micron and some of these other stocks, and if we do see a catch up back to all-time highs, this could be a really interesting tool to use in the meantime. Make sure you're doing your proper due diligence and actually understand how to use these trading products. But if you do, these could be a lot of fun to work with. We're going to go ahead and bring in our next guest here at 12:30 p.m. Eastern. So super excited for this next one. This next guest actually got me invested into the memory trade. Super helpful for my education there. I am now up hundreds of percent on SanDisk and Micron. So I will give some personal credit to Hamid for helping me to deeply understand that trade more than I would have without him. So without further ado, we've probably done 100 shows with Hamid over the last few years. Probably needs no introduction, but runs Savvy Trader, co-hosts the Buy Hold Rant podcast. Micron is a huge portion of his portfolio. Got me a ton of insights and knowledge into this. So let's welcome Hamid to the show. Let's bring him in.
Hey guys, how are you?
Hey, living the dream. Exciting day. More memory stocks coming to fruition. How you feeling?
I feel really good. I mean, it's I always like seeing new IPOs. SK Hynix is not exactly an IPO. It's
It's a little different.
yeah, it's a depository receipt representation of the share in the South Korean market. So it is a little different, but always sort of fun to have new companies basically emerge in the public markets. So
Yeah, may have not been a U.S. company or a new IPO, but certainly saw a lot of demand. Almost 27 billion, or right around $27 billion raised, 7x oversubscribed as well, and the IPO is already up 17.5% since that opening price at 149. So we're definitely seeing some interest here right off the bat. Very different IPO than the last one we were talking about, SpaceX, which is
Yeah.
a whole different place. SK Hynix is seeing massive demand already for their product and is a key supplier for NVIDIA. That partnership is really established as well. So let's talk about this. One of the reasons that I wanted to bring you on was because you have such a large position right now to memory in terms of Micron. Now, I know that you've, trimmed that position a little bit over time, but still looking right now, it's still at 29.5% of your portfolio. So with that being said, how do you compare, SK Hynix to Micron, something that you've taken a massive position in and clearly have a lot of confidence in?
Yeah. So my focus is investing in the U.S. companies in the U.S. stock market. So generally speaking, if I have the choice of two companies that are similar, I'm going to be picking the one that is the easiest one for me to sort of have a pulse on, and then doesn't have any additional risk from the standpoint of geopolitical risk or currency exchange risk, and other factors that like I don't have a pulse on. Um, so my view is that these companies are very similar, SK Hynix and Micron. Their price earnings ratio are similar, their growth rates are similar, their products are similar. They're both benefiting from the AI boom. Everything is fantastic for both companies. Do I want to own both? Well, what would be the reason to own both? I would
Mm.
prefer to own other companies to sort of like de-risk a little bit. Do I want to, but I do want to own one of them. And then which one would I want to own? Well, I want to own the one that is in the same country that I live in and I have a pretty direct pulse on, and is on the US stock exchange, the one that I can own directly. It's common shares that I can vote. It's direct ownership, not indirect ownership like the ADRs. So from my perspective, there's a lot more benefit to owning Micron if you're an American living in the
Mm.
US than there is in SK Hynix. Now, if SK Hynix was trading at a significant discount to Micron, then it might be worth evaluating the risks that the additional risks that I at least perceived to be there, but it's not, right? And
I think it's a
uh,
slight discount, right?
it may have been for the IPO pricing, but you like if you couldn't get IPO pricing, right now it's already up 17%. I think uh, based on expected uh, future earnings or price earnings ratio, forward price earnings ratio, they're very similar. And most of that information is not even available for the ADR as opposed to SK Hynix's actual stock, which is trading in the um, uh, uh, it trades actually at a lower rate than the ADR does in the US. Even the representation is at a premium to the actual stock in the Korean market, because there's like
Yeah.
in between people who are taking fees and accommodating for the exchange rates and all this other factors that are going into it. So you're paying for that the convenience of not buying directly the stock in the Korean stock market. Uh, you're buying a representation of the stock that someone else owns the actual stock, and you're hoping they're doing all the due diligence, but for all of that work, they're also taking a fee for that. So that's what the bankers do. Um, I'm not a huge fan of that extra layer of complexity. So,
Keep it simple with the US. Yeah, that makes sense to
right.
me. Zooming out a little bit to just more overall the memory industry and trade. This is something that you got into pretty early, comparatively to the prices where things are now. And you've continued to just, maintain a sizable position within it. How do you think that your thesis has adjusted or evolved over the last year? And where do you see this continuing to go?
Yeah, so that's a great question. I mean, basically, there's like a couple of components of the whole memory trade in particular. One is, why is there so much demand for memory? The reason for that is pretty clear, because as the uh, various different AI models are becoming better, and they're able to take in more context and respond faster and with more information, that additional context requires additional memory. So memory demand has been super high as a result of the AI demand and AI growth. And the question is when something like that might slow down. Well, so then we have to sort of like go to the next layer, which is, okay, when do we anticipate AI demand to slow down? And for the past 4 years, everyone has been thinking that AI is in this bubble and that it cannot be sustained, that the growth rate cannot be sustained, and there's no revenues or profits in it. And people were just investing in it. At least for the first few years, it appeared that way. And maybe all of that investment would start to disappear in much the same way that the dot-com boom investments in the late 90s all of a sudden turned off and disappeared. But the difference here is that no, everyone and their mother and every company is using more and more AI today than they were yesterday, and certainly significantly more than a year ago, maybe by an order of magnitude. And this is not just some sort of like isolated group of people. It's just like literally everyone, universally in the whole world. And then so AI is here for real. The companies who sort of like pioneered this stuff, whether it's OpenAI or Google or Anthropic, their revenues are actually they're showing real revenues from their AI offerings, and the growth rate of those revenues have been astronomical. There's a good chance that Anthropic might hit $100 billion of annual recurring revenue rate by the end of this year. So that's just an unprecedented level of growth of actual revenues for a company. So so the demand is definitely there. The revenues are there, the profits are there, and therefore, because this is a race, and the early winners will benefit the most. Whether it's Meta or Microsoft or Amazon or Google, who have been investing heavily, and then now Elon with SpaceX and so on. There's a lot of investment going into it, and it does not look like it's going to slow down in any significant way. Now, it might slow down, the growth rate of that investment might slow down, but if we start to sort of like slow down and we're investing $1 trillion a year in CapEx on data centers and so on, and it just continues at $1 trillion a year, well, that's still like, significantly greater rate of investment than there has ever been. And therefore, a significant portion of that $1 trillion is getting allotted for memory. And we basically saw in the last quarterly call of Meta and Amazon and Google, where they all had to adjust their CapEx spending because of the cost of memory going up. And the memory makers are starting to make multi-year contracts with their customers to make sure that they don't get hit by a huge memory downturn. So as I have been paying more attention to this space, it does seem like several things have happened. The demand has skyrocketed, and it does not look like it's going to slow down. The rate of growth might slow down, even if it flattens right here, and we just like have the same amount of demand for memory from this point forward. Then fantastic. Second thing that has happened is price stabilization through multi-year contracts have started to happen between Micron and its customers, SK Hynix and its customers, Samsung and its customers. There's basically three main memory makers in the AI race. So all of that sort of bodes well that this is not a typical cyclical type of thing that we've seen from memory before, where the pricing goes up and then it collapses, and sort of like the cycles that people have been worried about with respect to Micron or SK Hynix and so on. By the way, that's the reason that these companies, the risk that might still happen, is the reason that these companies are still getting a what would be considered a huge discount from a price earnings ratio perspective. The S&P 500, who's the average S&P 500 company has a price earnings ratio over 20, a forward price earnings ratio of also over 20, which and they're growing at very slow rates, the average S&P 500 company. And SK Hynix or Micron, et cetera, and Samsung are getting forward price earnings ratios of between 5 and 10, right? So less than half of what the average S&P 500 is getting. So that less than half is being discounted because of the risk of cyclical nature that has happened for these companies in the past. But there's good evidence to think that A, the growth rate might not stop anytime soon, and B, the cyclical aspect of it, the historical cyclical aspect of it, might also not apply going forward, just because the companies are actually starting to make long-term contracts with their customers. And the customers who refused to make long-term contracts with them before, such as Apple, and just hammered them hard
Yeah.
on pricing, are starting to suffer, right? Because they're now having to pay whatever the going rate is for DRAM, and then complain
raise their
about
own
it,
prices.
and then pass those prices on to their customers. So and then blame Micron as if somehow they're the ones to blame for the demand going up. But it's been fascinating to watch. So the more I've learned about it, the more comfortable I have been with respect to such a huge portion of my portfolio being invested in Micron.
Yeah, I think it's really well said. And I do want to double tap into some of those fears that people have, because I think it's a good point. It's been a very cyclical industry historically that I think is getting assuaged a little bit. Some of the things that people are looking at now in terms of revenue, other pieces like that, well, people thought that these tokens were going to get cheaper, but Anthropic, as you talked about, with this $100 billion yearly run rate of revenue, is coming because they are making these things more expensive, right? Continue to get more expensive. And I believe that Fable 5, this new one that everybody's super interested in, right, is until 2 more days, I think, included in the plans. And then it's going to like 10x the cost of that as it becomes an API plan. And so it does put a little bit into place in terms of like massive corporations cracking down, saying, hey, like we need to cut back a little bit on the usage of AI here. It's getting more expensive than the things that it's replacing. So do you see, I guess, any fears in those areas or any other pieces that give you a little bit of like, okay, I'm still monitoring this, I'm still paying attention to this, I want to make sure that I am aptly monitoring the data here?
Yeah, I mean, the way I think about it is that for every company that is spending or has employees that are spending irresponsibly, let's say tens of thousands of dollars worth of tokens per month, which there's like literally no reason that anybody should be spending that kind of money, because you can't monitor the output of that much volume of tokens. So sure, that sort of thing is happening by irresponsible employees who should probably be fired, but larger companies don't fire employees as easily. So, so I suspect that like they're moving towards sort of like, I think we saw that they're putting monthly limits where a company might have or weekly limits of $200 or $500, or a monthly limit of $1,000 per employee for AI spend. But if you do the math on that, I don't know of any other product category where the limits that companies are putting on their employees is on the order of $10,000 per year that you can
Yeah.
spend in this product category. There just like aren't any. And this is sort of like Elon, I think, put a $200 weekly limit for SpaceX employees or maybe Tesla employees to spend on non-Grok based, meaning like they can do as much as they want on Grok, but their own AI systems, but don't spend more than $200 a week is basically $10,000 a year. You can't spend more than $10,000 a year on Anthropic or OpenAI or whatever. That's kind of crazy. And this is for a product category that they already have. They have their own offering of. So, and for every company that is spending at those levels, there's companies that haven't even begun their spending yet because they're behind on AI, right? So this is by no means saturated. It's not like these limits being put on by various companies on their employees is going to suddenly decrease AI spending as a overall whole. What it's going to do is it's going to make like a slightly more responsible spending by the companies who have employees who are irresponsible. So, I think it's just one would expect essentially to happen.
Yeah, that's a good point. We have Evan in the back end here as well. Evan, you got any thoughts or questions you want to pipe in here?
Hey, Evan, how are you?
How are you doing, sir? Can we? Yes.
Uh,
Honestly, I was walking around my apartment, so I was a little far away, so I just came running in.
I'm
I,
good, thank
I
you.
always love when Hamid is on. Very, very smart guy. Has been talking about Micron since I said under $300. Transparently, I don't really remember what the price was. When did you start
It
really looking at
it
Micron
was
talk?
it was like 290 something.
Eh,
Just under 300 is when I started buying it.
You
And I
know,
was kind of late to the party actually because I had been ignoring Micron. I had checked out the company several years ago and decided not to invest. And I had because when you like review a company and then you sort of like dismiss it, it takes a pretty high bar to go back and review the company again. And then a friend of mine had invested in it in December and told me about it, told me about it in December of last year at a holiday party. And I was like, oh, I'll look to see, what my thoughts are. And when I looked into it again, I was like blown away by their numbers and how quickly they have grown and the demand for memory chips in general, and started studying the market a little bit.
you know,
Um, and that's when I got convinced.
what I thought was hard for me at that moment, I saw the same thing, but I only bought a little bit because I was kind of a little too carried away whether this thing is stretched. And it felt, and it wasn't even something in a PE or a relative to itself. It was just, I was buying at like 400, something like that. And it just three, whatever, it felt just too much. So what I think is very impressive in this as well is not just highlighting it, but having the conviction to make it into your largest holding and really go aggressively into the seeing an opportunity in this exploded sense. So I'm just like,
Literally 3 times as large as your next holding.
right? It's
Well,
also, I'm
that's
curious to know
also
a little
because
bit.
it has tripled in the past 6 months, roughly speaking. Um,
You've,
so the conviction came from the fact that the AI spend, and but by the way, every relevant news has been such that there's basically more spend happening on AI, and every person is telling you like we're basically compute constrained. They would pick up every memory chip that they could. People like Elon are saying like, if they could make it, we'd buy all of them, right? Um, so the world is constrained by both compute and memory chips. On Even CPUs are starting to get constrained as well. So GPUs, CPUs, and memory chips. So and storage chips as well, because all this stuff and training and so on requires all of these things. So if we think about like where's the future going? Well, the future is going towards autonomous vehicles where every car is going to have a significant amount of AI built into it so that it can drive itself. Like 10
Yeah.
years from now, it would be unimaginable for people to buy cars that can't drive themselves. My car drives itself every day and drives me everywhere. So, when you think about the fact that there's 100 million cars sold every year, those 100 million cars are going to need AI chips on them. They're going to need memory on them. When we fast forward, robotics are going to start to come online where we're finally going to have useful robots, possibly humanoid robots, that are going to do useful things. If you believe people like Elon, he thinks we're going to have billions of those. But certainly, even in conservative estimates, we would have tens or hundreds of millions of robots in 10 years, and all of those are going to need tons of AI capacity and chips. And that's just like the new hardware related stuff that's coming online. But there's so much that we are not doing with AI that we could be doing, largely because it costs too much right now, or we are limited on compute. So AI should be doing all kinds of tasks for us, or reviewing things in detail, or watching things for us and summarizing. And like we're basically not using it in these fashions right now, just because the cost is too much. So as the cost of AI goes down and the tokens go down, the cost of tokens go down, the demand for them actually increases. So some people think, for example, as we get more efficient and and the cost per token essentially goes down, this is going to be terrible for the companies that are providing the services and offerings. No, it actually turns out that we've known this since the 1800s. As you make something more efficient, this is called Jaron's paradox. As you make something more efficient, the demand for that thing actually increases greater than it was prior to the efficiency gains. So that has been true, whether it's like with roads or cars or like computers. The number of transistors we put into a single chip has just grown exponentially, but the demand for chips has never been lower than previous years, right? So there might be blips here and there, but in the long term, the demand just continues to outpace the efficiency gains. And with Micron in particular, every few months or every few weeks, since I've had this stock now for the past 6 months, every few weeks you see some kind of story where it's talking about either Chinese memory makers flooding the memory chips, or oh, Google algorithm is now 6 times more efficient, therefore it's over for Micron, right? Like we now have 6 times more efficiency on memory usage, and therefore we'll need 1/6 the amount of memory. Well, the reality is that even if those memory efficiency gains were 100% a fact and happened immediately, the demand for that would more than 6x is essentially what it comes down to over time. So I still feel very good about the semiconductor space in general, and within the semiconductor space, there isn't a lower priced product company than Micron.
Yeah, it's really fascinating. Evan, did you follow up on that?
I do. My question is, what are we doing now? What do you feel here is next? Because people can say, you look at valuations for Micron and these memory companies, and they are still cheap, but they're at a high dollar price. Does that mean much? I don't know. We'll see. I honestly don't know if I want to ask you this more as a general question of like, if there are any opportunities in the market that are exciting you the most right now. If there's any things you're kind of starting to do your research in, and then maybe it's in with what you think the future for your Micron position looks like. I imagine a 30% holding is just going to naturally be trimmed for you. That's just support there. But
yeah, I mean, at this point, I have so much Micron that I'm not buying Micron. But the stocks that I have been purchasing most recently have been Meta, which again is one of those companies that has been making huge investments in AI and has been their entire AI investment has been given zero, possibly negative value, because if they, again, compared to the S&P 500 average PE ratio of, I think it's 23, 24, something like that. Meta has been getting a PE of 18. In what world should Meta have a lower PE than when it's growing at over 30% annually than the average S&P 500 company? There isn't a world in which Meta should be valued lower. So what that tells you is that all of the investment that they're making in AI is actually being viewed as a negative on the company, meaning the market is saying, not only is this investment completely worthless, but we're going to value Meta at like we're going to take some additional value off of Meta because of this investment, because they're just throwing money away and they're irresponsible. When at any time they could, if that was true, if they were actually throwing the money away, they could just turn that off, and all of a sudden they would be even more profitable, and they would have a lower PE. So it has not made sense to me, and I've continued to invest in Meta as a result of that. And suddenly the shift on the narrative on Meta has begun over the past week, and as they go into earnings and report what they had, that shift might accelerate depending on where their earnings land. So that's one investment that I have been adding to. Another one is Rivian. This is a company that over the past 4 or 5 years has just become, they went from basically not having anything, having a R1 truck that they had 5 years ago when they IPO'd at roughly $150 a share, I want to say. and they had hardly any sales or service centers or charging stations. And today, fast forward to today, they have 4 different vehicles, all of which are loved and highly rated by their customers. They have 100 sales and service centers. They have 150 charging networks across the country. And they just have been knocking it out of the park with their R2 product, which is just about to scale, and they're gonna have 100% more deliveries in the second half of 2026 relative to 2025, the second half of 2025. So the growth rate is just now beginning to accelerate, and this is extremely exciting, like, right? And the stock is at roughly, just under $20 a share relative to 5 years ago when it was at 150. The whole company is valued at around $25 billion. And that just seems like an extremely low valuation to me for a company that has so much technology, so much good going for it, and so much growth ahead of it. So that's another company that I've been adding to.
Love it. Really good stuff. Hamid, appreciate you joining us, sharing the insights and wisdom. You clearly have a great mind for this area. You also did mention that your car drives you around each day. One of your cars, I don't know, is it McLaren doing that yet? I didn't know.
No, the McLaren unfortunately is a dumb car still. But
Yeah, still have to just look good driving that around. So very cool. Any last comments for the audience today from you?
No, I appreciate you having me on. It's always fun to chat about stocks, and yeah, I can be found on X, and my portfolio is also public if anybody is interested. So
Yeah. Make sure you're checking it out. Hamid's portfolio, savvytrader.com/Hamid. It is up 833% just in the last few years. So top tier
in four
investor.
in 4 years. Thank you.
Yeah, but most of those gains came in the last 3.
That's true.
So,
The first year was down slightly.
yeah, there you go. It's 3 years.
So, what I
Very cool.
Shout out to Hamid. That's kind of what Savvy Trader fixes. A lot of people just say numbers. It shows you the proof. Actually there, tracked. There we go.
I love to see it. Hamid, thank you for being on with us today. Looking forward to the next time we talk.
Thank you. My pleasure. Take care, guys.
Take care. Before we do so, quick look at SK Hynix. SK Hynix is up 16.65%. And also want to give another thank you and shout out to today's live stream sponsor, that is Leverage Shares. Leverage Shares is putting out 2 products. They're going to come early next week, Monday, Tuesday area. You're going to see SKHX. That's going to be 2x long. SKHZ. That's a 1x short. I think the thesis is pretty straightforward and simple here in terms of how people are going to be using them. You've already seen, by the way, this is like one of the craziest demand areas over in Korea. Eric Balchunas, who'll be coming on shortly here today in about 30 minutes, was talking about how he's never seen demand like the investments that are happening inside of these 2x leverage ETFs over in Korea. Wonder if that will carry over to the US as traders take a stab at a highly anticipated IPO. We shall see what happens there. But again, pretty cool way for people that want to trade around this to utilize it. And I really do like having that option of the 1x inverse as well, just because I'm not a person that really likes to play puts. They're not typically in my portfolio. So if I am going to play downside on something, I will typically use a 1x inverse. It's just simpler for me. I don't have to care too much about the time frame like I would with puts. With that being said, thank you again to Leverage Shares. Excited to keep rolling here. Another return guest coming up from our SpaceX live stream, which is so cool. Appreciate everyone that's coming back from this one. Jose Najarro is going to be joining us. I think Sam Badawi might be joining us as well here in a minute. But Jose is really going to be able to give us a deep dive understanding of that's, what's actually happening inside of a chip fab and where that matters to your portfolio. And that's because before he was a financial content creator, he was a practicing electrical engineer. And so this is the perfect guest to have on a conversation like this. Again, I mentioned it last time, he runs What the Chip Happened, a newsletter and podcast that breaks down the AI chip cycle. And so I honestly don't know if there's somebody that's more apt for this conversation. Let's go ahead and bring Jose onto the stream now.
What's going on, man?
Welcome back. Good to see you again.
Thank you for having me. Yeah, it's fun. Fun time in the AI market for sure.
Yeah, Jose's too cool. I'm gonna have to bring these out. All right, Jose, let's get into it. Let's talk business. What's happening here? SK Hynix. I know you're gonna be breaking it down on the channel. What are we watching for?
I mean, it's definitely a great time for them to kind of do this IPO here, get some I forget, raising nearly $28 billion. I mean, it's for them, the theme is the perfect timing. You have everybody talking about memory shortages. You have them talking about new fabs not really being built out until late 2027, until 2028. Micron just reported earnings about a few weeks ago, showcasing that memory prices are up on a quarter-over-quarter basis, 70%. So if you ever are a memory company and you want to go to an IPO to raise funding to build more of that fab, I think right now is that perfect timing.
All right, let's get a little technical here. Maybe you can do this in as plain English as possible, but it's still a technical question. Something that makes SK Hynix so appealing to investors is that they own about 57% of the HMB market. Why is, and we got Sam Badawi coming in here in a second too, we'll bring him in right after this question. Why is HMB so much harder to manufacture than standard DRAM?
Yeah, so high bandwidth memory, it's the reason it's hard to build is management has talked about it. There's a trade-off ratio. For HBM,
Oh, sorry,
you
HBM
actually,
as well. Sorry, I said the letters wrong.
you have to, first thing, one of the issues is you have to stack chips on top of each other, and that alone is very difficult, right? Because I mean, when you're stacking things each other, the actual connection pin, and I don't want to get technical, so let's just talk about it. The actual connection pin to be able to do this it's kind of hard work, right? So there's yield issues, there's manufacturing issues, and for that reason, only certain players can do it. Only certain players who have the right equipment can do it and can spend that type of money. And because it takes this, there's this trade-off ratio, it eliminates a lot of the supply for all the other stuff, right? So, and this is why we're seeing kind of a huge price increase in consumer tech, because that same DRAM, you're kind of using that trade-off ratio. And Micron has mentioned, I think for HBM3 was like a 3-to-1. As we go to HBM4, as we go to HBM5, the trade-off ratio could be something like 4-to-1 or 5-to-1. So for every, in theory, 1 gig of HBM that you're making, you're losing, in theory, if you kind of put that trade ratio, about 4 gigs of consumer market. And in a space where you only have limited amount of fabs, that supply is what creates kind of this crazy movement in the prices as well, of a typically known commodity product.
Does them having such a large market share of the high bandwidth memory give you more interest in them over a Micron, Samsung, pieces like that?
I mean, it's definitely a kind of being the top player is always it's a double-edged sword, right? You kind of have that great partnership with all the big players already, but then it's like, hey, does this mean you're going to lose market share? Just like with I mean, you can kind of say the same argument with Nvidia. I prefer Nvidia because it's the top AI king, but the biggest bearish case is like, what happens when these other players start to kind of catch up or take market share? I think in the current industry, a few things is AI accelerators and the demand for AI compute is only going to continue to grow. And like a lot of these companies have mentioned, the actual manufacturing fabs for these are not going to really start till 2027. So there's still a time, and we're seeing long-term contracts coming into this business as well. That's changing a bit the typicalness of this industry.
It's a good point with the comparison there as well to NVIDIA. Let's go ahead and add into the show here, host of the Solid Report, daily streamer on Wolf Financial, Mr. Sam Badawi. Sam Solid. What's going on?
Sir? Doing good, doing good. Big day today, right?
Yeah, it is a big day. Not often that you get, $1 trillion IPOs just popping out, but apparently
I know,
this is the year of them, huh?
Definitely. I mean, supposedly we were supposed to get OpenAI, but then they postponed announcements for that in 2027. But Anthropic's still on the table. I'd imagine that that's probably going to be a $1 trillion IPO as well.
For sure. You saw the Sam Altman comments. He's like, I wouldn't entertain anything underneath $1 trillion. So it seems like they're pretty locked in. Sam, what do you make of all this?
So I am seeing, just leading into this event, you saw a little bit of the sell-off in semiconductors, and we saw the Samsung earnings, we saw the Micron earnings. Like, those numbers were just spectacular. Like, there was no reason why those stocks should have been down after earnings. In fact, well, actually, Micron was up after earnings, but it's given up all of those post-earnings gains, even though its gross margins are just insane, like software-like gross margins, and its profitability standpoint is pretty wild. I mean, I was I was charting it the other day, and Micron has basically in a single quarter produced more revenue than it did in 2024, and Samsung was even more. Like, the amount, I guess the amount of leverages these companies have is pretty vast, considering that the memory prices just keep going up. Even Samsung, I was surprised to see the stock down, but you know how the stock market works. Just because the numbers are good, it doesn't mean Wall Street's going to react the same way it did. But surprisingly, when you see margins expand a lot further, profitability expand further, and you have companies that were basically burning cash just a few years ago, now printing almost as much money as at the acceleration, as much as Nvidia did back in 2 years ago. It is surprising seeing how these stocks just don't perform well, but at the same time, the market prices in a lot of these things ahead of time, and the market is very much forward-looking. I think the theme, as I look at it today, is that the market is fearful that one day this is all going to stop. Anyways, I mean, we've heard that argument for the last 3 years. Not saying that it's definitely going to continue at its scale today, but a lot of them people have been fearful about this for several years at this point, and it's very difficult to time these things.
Yeah, I think that's good points. I am curious. I'm going to ask a question to Jose, and then I'm curious if you have any that you want to throw at Jose while we have him here as well. One thing which is talked a lot with SK Hynix is the relationship that they have with NVIDIA. And NVIDIA's Vera Rubin architecture is reportedly built around HBM4. With that being said, how much of SK Hynix's 26, 27 is already spoken for by that one customer relationship? And do you think that, you cover AMD really closely as well. Do you think that AMD could do anything to kind of force SK Hynix to diversify away from being this NVIDIA dependent?
Let me start with the back question first. I think, I mean, at the end of the day, any company is always going to want some form of diversification. I do believe AMD is working more with Samsung on some of their memory solutions. But as the market continues to expand, I think you always, just for any play, right? If you're a customer of a business, one of the things you always want to have multiple supplier, because it allows you to have that pricing power or kind of that negotiation on the table. Right now, for the vendors themselves, it's also great to kind of have a different amount of customer base because similar things, especially in the market that there's a shortage in the industry, just having multiple customers allows you to kind of have, again, that pricing. Oh, you're not going to take it at this price. Maybe I can sell off a few of this of my percentage to another company. So it's not impossible to see that diversification just for that reasoning. But that's why big companies like NVIDIA and other ones are making these long-term agreements, right? To kind of help make sure that they stay with that cycle. And yeah, sorry, my apologies. I forget the kind of first part of the question.
The first part was basically, how much of SK Hynix's 26 and 27 is already spoken for by NVIDIA now that they're building Vera Rubin around the HBM4.
Yeah, so I'm going to be honest. I'm not sure of the percentage base, but Nvidia, I mean, they have what, over $100 billion in inventory spoken for. Obviously, mix of all types of inventory, but as we know, memory is a major portion of that cost for their products. So you would expect a good amount. And what we hear from Micron, right? And I think this is also one of the exciting things is maybe now investors are going to focus more on SK Hynix earnings. I think most US-based investors just really focus on Micron's earnings because most US-based investors hold it. But now we're going to get more of a I think more eyes are going to be there on SK Hynix. I mean, from Micron, we know they're sold out for 2026. Good portion of it is sold out to 2027. Their previous CEO mentions that their current CEO previously mentioned that they don't expect supply-demand imbalance to shift anytime soon, right? They expect this to be until 2028. Obviously, these companies are going to share that, but there's probably some truth with answers like that.
Yeah, that's fair. What do you think, Sam? You're muted.
Sorry about that. Yeah, so I do think that the fact that SK Hynix is coming into the US markets as far as an ADR goes, I am favorable on Micron out of all three, mostly because if you think about that US onshoring theme that has been going on for a long time, Micron is the player that has been in the US for a while. But if you do see just the sentiment of Samsung and SK Hynix looking to come into US markets, and we also heard the announcement yesterday that SK Hynix is looking to invest billions of dollars in the US economy, the runway can be a little bit longer for these ex-US companies, or at least the companies that originated outside of the US, especially since there's a lot more investing interest for people who don't necessarily have South Korean brokerages for the Kospi to be able to invest in these companies through ADRs. I mean, this is the first time it's been available outside of course, the OTC markets. As far as the market share goes, I think the memory TAM is quickly expanding, and this is the same story we heard with NVIDIA, where, hey, look, NVIDIA is going to lose market share to all these other players. But if you think about the TAM as a whole, that's expanding big enough that even if a company does take some market share, NVIDIA is still growing in that business segment. And this goes with the same thing for the memory case as well. Even though, yes, SK Hynix will likely take some market share from Micron in terms of US onshoring goes for memory, the TAM for memory, the demand for memory is still there, that I don't want to say it won't even matter, but it's not going to have as much as an impact where you have a TAM that's basically flat year over year, and you have another company start to take market share from Micron, meaning that Micron is going to reduce its market share in terms of absolute dollar value. I do think that they're all going to be beneficiaries of it. The problem is, of course, is the sentiment as far as the stock prices go. That I think is very much separate from that, because that always is, of course, forward-looking as the way the market is all the time.
Yeah, and I mean, I agree there with Sam. I mean, this is a market where the TAM just continues to grow, and I think this is the volatility with just the whole AI industry. Is every year we kind of get a new bearish thesis or a new bearish thought that, hey, like, is this the end of AI capex, or is this the top? And I don't think we're anywhere near there. But every year you're going to hear something in the memory business. Now you get every other month that some companies trying to innovate in some form of memory improvement, and the whole market takes that as a whole. But it's like, what's stronger, what holds more weight right now? The demand for AI or a 5% improvement? Even if you get a 5 or X% improvement, do you still have a demand that doesn't really matter compared to the overall supply and demand imbalance? And I think that's the real story here, where you're going to get a lot of volatility. I mean, just this past week or 2 weeks, we saw reports that Apple was planning or is testing using Chinese-based for memory solutions. Like, that doesn't really impact much of the AI server space. It should really not, but it does create kind of that negative sentiment towards the whole industry.
How are you right now? Kind of question to both of you, but first, Jose, how are you positioned from a portfolio perspective around the memory trade? And is there interest in adding SK Hynix into there?
For me, I'm not directly into any of the memory players. I do have, I would say, kind of offset memory solutions. Silicon Motion is one of the companies I own. Form Factor is another company that I own, and Rambus, ticker RMBS. And these are three companies that provide some form of solution or have some form of licensing within the memory space. So it's not the direct players, but at the same time, again, my whole portfolio is pretty much in the AI tech space.
Yeah.
So sometimes I'm like, I don't need to follow every single shortage in the industry, and that sometimes controls me of what I buy.
Do you think, I guess that makes sense. Is there interest in the SK Hynix side or anything, especially if there was to be a further drawdown?
I mean, I think of a further drawdown, definitely. I just think in the semiconductor industry, I'm pretty sure Sam also talks about it a lot, where there's just so many shortages that you don't have to choose everyone and you don't have to chase everyone. But if we do see kind of just a unique memory sell-off, if not the whole industry, but just a unique memory sell-off, that would definitely open my eyes more and make me more aggressive if I wanted to enter the memory business.
Yeah, that makes sense. Sam, what do you think?
Well, I mean, I agree with Jose on that. The Silicon Motion play that we were talking about months and months ago before the thing more than doubled. was really interesting because it was something that a lot of people were talking about, and obviously memory stocks have ran. And it is a much smaller company in terms of market cap compared to Micron, SK Hynix, or Samsung. I mean, really, if you're thinking about companies that are going to benefit the most, obviously these bigger players will benefit the most, but the market gives more appreciation to stocks of smaller market cap value that show massive growth. You know, you're not going to get like a double in revenue for Micron at these points. Maybe if it does, but probably not for a couple of years. But these other companies, they can guide for tremendous growth from nearly flat or negative growth in a very short period of time. And that sort of surprise when it comes to Wall Street creates the re-rating factor upwards and creates that massive trajectory move in stock price. We saw the same thing for Nvidia back in 2023. We saw for Micron, and sometimes these players that are part of these themes by proxy find a lot of appreciation. I mean, there's a company ACLS or Acellus, which they're basically a competitor for Applied Materials, which has ran tremendously, been on a crazy run. But Acellus is a competitor of only one segment for Applied Materials, where they're basically the leader when it comes to ion plantation for these memory chips. And that stock has basically doubled in a very short period of time, and it was coming from very small growth. And yes, it is not as large of a company as Applied Materials, and probably won't be, especially for a long time if it does. But when you think about what the market's pricing in versus what they eventually price in the future, that I feel like that is where you get your like 2 times, 3 times. And you didn't have to be owning Nvidia stock since it was $300 pre-split before in order to make that 10 bagger. You could have done your research and found one of these companies that were beneficiaries of this theme through shortages, bottlenecks, whatever it is, and figure out like, hey, look, you might not have to buy the leader in this, but if you buy a secondary leader that specializes in a certain segment that's in very high demand, they're going to have that quarter where like all of a sudden Wall Street just re-rates these stocks. And we saw the same thing with Amcor on semiconductor and a lot of companies that people never heard about that surprisingly a lot of people talk about now, like these undiscovered names. That's really what Jose's been doing for a while with What the Chip Happened. I mean, he's talked about these companies that no one's even heard of these tickers before. Now everyone's talking about these tickers. And I still remember when people thought Micron's days were over. Of course, they were burning cash left and right back a couple of years ago. And I was one of the early investors of Micron, but of course, your boy sold too soon on that one because I didn't think it was going to 10 times from there. However, at the same time, you know, it is interesting to do your research and find these bottlenecks. But I think in this current market, everyone's looking so aggressively for these bottlenecks, and there's a lot of value in the market outside of course, semiconductors. I don't want to shift over the conversation or anything, but
No, go
this
for
really
it.
is a point in time where like everyone's looking in just one sector and they're ignoring other parts of the markets which could find a little bit of rotation.
Well, let's talk about those other pieces. Jose, you mentioned that you see other areas where there's plenty of shortages, right? Imbalances. People have been referring this to a bit as the bottleneck trade, I would say as well. Can you talk a little bit deeper as to, hey, I think that there's multiple shortages, but I see more value in this area. So that's where I'm gravitating and maybe a little bit more into the research that you're doing there.
Yeah, I mean, most of my research will always fall back into the semiconductor and AI industry, and but like Sam mentions, there's probably others. This is where I just stick like my head in the dirt and just spend more time. The one that I personally enjoy the most right now is one that gets hated a lot is the neo cloud business, right? I do believe the neo cloud business is going to do extremely well, and that's because of just my research. The amount of compute that we need is going to be ridiculous, and no matter how much data centers we continue to build out, how much AI chips we continue to build out, these data center, we're still going to remain in this supply demand imbalance. And any kind of neo cloud company who has a form of long term power contracts already, or who actually have a lot of active power right now. For example, one of my favorites, and I know it gets a lot of hate, is CoreWeave. CoreWeave has 1 gigawatt of active power GPUs. And one thing that we are seeing with like GPU pricing, right? GPU pricing for the past 2 years has either increased or stayed relatively flat. When these businesses started, their modeling projected that GPU pricing, and just like anything, right? If you have something, a product for 2 years, the pricing would go down. So a lot of these companies, the models were way worse than what the actual business is actually doing, right? They're doing a lot better. We see old chips like the A100 still at same prices of almost 2 years ago, sometimes even higher. Same with the H100. Blackwells are also doing amazing. And to me, we are still very much in an early AI push. We just saw massive amount of companies release a nice amount of AI models yesterday alone. So the competition is still intense. And when competition is intense, it forces new innovations. It forces new markets to appear. It forces them to look at places that they can serve that might be unserved. I believe the compute story is it's one that gets punished, and rightfully so. It in the typical market, you would think that compute would be a commodity. I think right now that commodity, if it is extremely, extremely short in supply.
I know Evan's bullish on CoreWeave. He's been hoping, holding out. I wanted to also ask about some of the phenomenons that we've been seeing in Korea, kind of bringing it back to SK Hynix for a second. Because right after this, we have Eric Balchunas that's joining from the Bloomberg team, and he was basically tweeting that like we've never seen such, I don't want to say degeneracy, but such interest in these leveraged ETFs like we have in Korea. The 2x leverage SK Hynix ETF over in Korea, I believe, was the biggest 2x leverage ETF in Korea. He was doing some comparisons by market size, but it'd be like massive here. We are going to see these ETFs also come out this coming week. Monday, Tuesday, you're going to see some leverage ETFs launch, some inverse ETFs launch. Do you think that there's going to be a lot of interest in these? Because, and one of the reasons I asked that as well is a lot of people, even if they don't necessarily think along the same lines as you do, as, hey, there's a 5-year trade here or 3 to 5 years. I don't think anybody's saying that this is ending right now. A lot of people are saying there's at least another, year plus of big moves and pieces like that. So do you think a lot of people are going to gravitate into those like we saw over in Korea?
I mean, people really like what they like, and when they like it, they try to go strong with it. Personally, I'm not going to try to do that. I try to be the opposite of usually what the market is doing. But yeah, I mean, I wouldn't be surprised to see a lot of investors get into these leverage ETFs. But again, it's not. It might be even much higher than what we saw, and it's definitely going to create a lot of volatility. And that's the thing with with especially the memory space, right? Any recent press release, oh, shortages is getting even tighter.
Yeah.
Markets are going to rip. But another kind of, oh, we have another company creating a efficiency improvement. So volatility goes both ways, and I think it's going to be fun for traders who tend to love these types of moves.
Yeah, I mean, when something moves 1,000% in a year, you're going to have volatility coming off of that. Sam, did you have any thoughts on that?
Yeah, no, I agree. I mean, one thing that people got to remember is that with these leverage ETFs is that I look at them as trading vehicles, not investment vehicles, because people forget that just because it's a leverage ETF and the stock goes 100%, you are going to get that boost because these are a daily reset ETF. So because they're traded on swaps, if the underlying goes up 2% in one day and then goes down 2% in one day, you're going to lose more money in the leverage ETF because it's 2% from where it was before, since it's resetting on a daily basis. Meanwhile, the underlying, you'll still be at break even or about break even. Actually, you'll be slightly below break even, but you'll have a more amplified effect with these leverage ETFs. They're not meant to be investment vehicles. They're meant to be trading vehicles. And it's worked out for a lot of people in both directions. But of course, like Jose has mentioned, when people go really hard with a theme, they see a stock go up 1,000%, then they see it drop 100%. They think this is the greatest opportunity ever because it's going to continue
can't drop
going
100%.
up. I know it could. You're the most you're going to lose is 100% of your money. But what people got to understand is, hey, look, NVIDIA basically did a 10 or 20 times in a short period of time. You can't buy NVIDIA today and think a $5 trillion company has become a $100 trillion company, right? So like that's very unrealistic to expect.
I can think what I want,
yeah.
Sam.
Okay, well, maybe at some point, Jose.
I'm joking. I'm joking.
I know, but
in
I
our
think,
lifetimes,
yeah, I don't know. Who knows? Maybe we're printing money left and right, but it's just some people get very carried away with this stuff, and you've seen it with the country's stock market with the Kospi. It makes wild moves every day as if it's a small cap high beta stock. Like the Kospi, the entire South Korean stock market moves on an average of 5 to 8% in the last few days. Like that's a wild move for the stock market, and it's because all that leverage that's in there. You know, a lot of people are chasing certain prices. They see it go up like 3%. They think it's gonna go up 3% more. That they want to be able to make up for whatever they had missed before, or fear of missing out, or FOMO. And that's what causes the massive volatility in the up and down direction in these markets, because people really press their bets. But it's not just retail traders with a Robinhood app with $1,000 in their account. These are billions of dollars being thrown around these ETFs on maybe hundreds of millions on a daily basis, and it moves markets at that scale. And it's a little bit scary, I'm not gonna lie, because you do wonder what's gonna happen when all of this gets drained out, because it will at some point, like it always does. You know, nothing lasts forever. But the volatility in the up and down direction is going to be brutal, and I think this is just the nature of the way markets are built today. You know, it's not, this isn't going to be like 2015, you know, where you get your like slow grind up or slow grind down. You're going to get massive 1 or 2% moves in the indices. And we already got a preview of it in the Korean markets, and we're starting to get used to it here in the US markets. It's just the nature of the way markets are built today, especially the computers and algorithms, and just how liquid capital is nowadays. You can easily just buy a 2 or 3 times ETF and then sell it like just 1 hour later. It's, the liquidity has become so vast in these markets that you just have to get used to it. This is the way the market is today. This isn't like the 1990s or the 1980s where you can buy Apple and hold on for 10 years. Like, there's always going to be opportunity. And just the, I mean, you already know yourself, Gav, with just the growth of social media, people are way more exposed to getting news in just a minute after a price's reaction versus reading it in the newspaper the next day. That's just the way the market is today. And I think people have to get used to it that way and learn how to play around that.
Yeah, it's pretty crazy stuff. I mean, this is the 16th largest company in the world right now. So it's going to come with some volatility around it. And it's in just such a different growth stage than something like an Apple, right? And other pieces like that. So you are just going to see big moves. Loved having you both on. I want to just come to each of you for some final comments here. Jose, anything else you'd like to tell people as they look deeper into this memory and tech trade?
It's I don't, there's so much to look at. I mean, just find something in this industry there. If you're into the optics, if you're into the networking, just try to find it, and just do some research. I think one thing that investors should really do is find a thesis and hold on to the thesis, because when you have a thesis, it helps you protect during these downturns. So many people, for example, unfortunately on YouTube comments or that I talk to, is like, hey, I sold off. And I would be like, why did you sell off? It's just price action. It's like, was that really your thesis the whole point? So if you follow into this market, try to find a thesis that you want to hold on to. I think that helps out in the long term of things.
Yeah, that makes sense to me. Definitely. And, you know, it's sad because a lot of people don't take the time to form a thesis until something is up hundreds and hundreds and hundreds of percent. But I will tell you this, better late than never. You know, I got into Micron at like 400, thought I was late to the party, right? Everybody was all over it and doubled from there. So there's still possibilities here to continue to keep an eye on. Sam, like Sam said, they're just printing tons of money. Sam, any other thoughts for us as well here today?
Yeah, I mean, I agree with that. You know, it's, again, the access to social media, seeing everything happen right in your front of your face, in the palm of your hand, every single day, every single minute of the day, every single second, whatever it is. It causes people to get scared out of position when, yeah, sometimes you get like really good earnings, like we've seen with Nvidia for the last couple of quarters, and nevertheless the stock sells off, and that scares people out of the position at probably the worst time possible. And then they come chasing back into it when they see the price move up, when the thesis has only gotten better. So I do say that, you know, unless you're more of a swing trader or active trader, if you're a long-term investor, these daily swings, especially the macro news, it either creates buying opportunity or it's just noise, right? Like, I don't know, people who are investing in Nvidia for the next 5 years, this price action right now is the least of your worries. What you need to be focusing on are the fundamentals of the companies, and they are amazing. Like, Nvidia is one of the most valuable Mag 7 stocks in the stock market right now, at least after Meta had made its move in the last couple of days. But yeah, that's pretty much it.
Super cool. Two great minds. Make sure people are following them. Real quick, you know, just to mention this, Jose's super active on YouTube. Make sure that you are checking him out. I see some of his YouTube friends actually in our YouTube chat right now. So make sure that you're going and looking at that. You can also find him on Twitter. And then also Sam _Badawi on X as well. Streams weekdays on the Wolf channels as well, to YouTube and to X. You can catch him on both of those. Appreciate you both for coming on today. All right. Thank you, guys. We are going to keep. Yeah, thank you. We're going to keep rolling here today. We are going to have a couple guests coming up here in a second. Definitely Austin Hankwitz, potentially Eric Balchunas as well. Messaging with him, see what will happen there. Before we do that, we can take these other guests off the Zoom, and there we go. On screen, perfect. All right, quick thank you and shout out here as we keep going. You heard from both of them discussing that they believe there could be a lot of interest in these leveraged ETFs. Mentioned again that these are trading products as well. Shout out to Leverage Shares for everything that they're doing. So super excited to be seeing those things continue to happen. I think that there's gonna be a lot of activity as well. The US, people are just becoming so active with the stock market these days and so much interest. And there's a variety of products that allows them to participate in and around IPO. So make sure that you're keeping these on your radar. We are, I'm gonna pass 131 here. So I'm gonna keep us rolling here into this next conversation. I see the good-looking Austin Hankwitz in the back room with us already here. I think Eric Balchunas will join in a couple minutes, messaging with him. We'll see. Regardless, I can always have a conversation with Austin anytime, any day. For those that are unfamiliar, general partner, Wits Ventures, built his following teaching people a long time ago. He's actually one of the first people that I was watching to, learn financial literacy and pieces like that on TikTok. And he has just really taught an entire generation of investors the world of investing, both from the stock market, private investing, a lot of other pieces. Was on here for our SpaceX one. I saw an article written about how he got a bunch of his followers into the SpaceX IPO, pre-IPO. So let's talk to him here about SK Hynix. Let's go ahead and bring Austin into the stream for now. Perfect. Austin, what's going on, man?
What's up, brother? Good to see you, my friend.
Good to see you too. Just a heads up, I know we had on our schedule within these pieces, working to get Eric in here. Might be having a few issues, but if we can't get him in, I figured me and you, we're always good
chilling.
For a
it's all good, man. It's all good. How's your week going?
Ooh, this week's been busy. Was flying on Tuesday, traveling on Monday. We had July 4th weekend, got back into the saddle, prepping for this live stream, ready to go here. The team's been putting together the graphics, the back end, the guest list, all those pieces. So excited for this. And listen, another $1 trillion IPO keeps me invested in the market for sure.
Dude, it's wild though, right? I mean, it's, you think about, and we kind of zoom out and kind of go back in time. A lot of people were speculating when Alphabet did their sort of, equity offering of 70, 80 billion, whatever they ended up doing ahead of SpaceX maybe a month or two ago. People were thinking, okay, maybe there's only so much capital to go around. There's only so much money for these new IPOs and things like that. So they were trying to get ahead of that. But obviously now, what is it, 24, 25, 26 billion that SK Hynix is raising here? I don't know the exact number, but, it just goes to show as the largest foreign sort of, U.S. listing, there's a lot of capital to go around. And I'm excited to hear from Eric and his perspective when he's able to join us.
Yeah, we've got Eric here to join. Perfect timing. Really excited for Eric to be on. He has covered ETF since before most people knew what ETF stood for. He's a senior ETF analyst at Bloomberg, co-host of the Trillions podcast, and author of multiple items that people should be out there reading. If there's a semiconductor ETF, a leverage fund, or a thematic wrapper built around the AI memory trade, Eric is already tracking the flows and will have them available to you in the best format. For me, following Eric's feed is kind of like following my favorite sportscasters. They pull these great stats and they put them together and they make this world interesting to follow along with, and Eric does it just the same. Let's bring him into the stream now.
All right.
Eric, how's it going?
Good. Nice intro. It's funny. I have looked at Stephen A. Smith and Skip Bayless and Nick Wright. The sports pundits, I feel, have it right. But you got to have the data and bring in the data. But if you can add a little on top of that, I think you can break through. And AI, by the way, AI is going to be able to put words onto data and write like a machine. So I really try to put a lot of my personality into it. I'm glad you appreciate it. But that's one of our goals on the team, is to have a voice.
Yeah, I think you turn data into really understandable pieces of content on social media, specifically around the ETF world. And one thing that I have been really watching over the last few months is you talking about the leverage ETFs around SK Hynix happening in Korea. And you were making comparisons showing this is an absurd amount of the market that is piling into this. We have never seen interest like this in items like these. Now it's, coming to the US markets. Just curious if you could kind of recant maybe some of those interesting data you've seen, and as you've dug into this, what stood out to you?
Yeah, well, leverage ETF's been around forever. I've tracked them forever. They started doing stocks a couple of years ago, and there's some big hits. SK Hynix is a really unusual story because it didn't exist in the US. In Hong Kong, they made an ETF over there, 7709. There's like no personality in their tickers over there. It's all numbers. But anyway.
709. Yeah.
Everybody gets like a license plate. In China, it's like a social security number. It's like 51253. Anyhow, 7709 is the ticker in Hong Kong. And it at one point became the biggest ETF in Hong Kong, which is crazy. It was 15% of the whole market. It'd be the equivalent of like a 2x ETF here growing to $1.5 trillion. It would be
Wow.
it wouldn't make any sense. So relative to the size of that market, this thing was crazy, and we followed it. The reason is that this stock was just hard to get. When you have a hard to get thing, and the ETF can make it easy, sometimes you can have the ETF get too popular, and I think that's what happened here. SK Hynix ended up being like half or a little more than all the volume of the stock too. That's rare. Now, the ADR here should release a lot of that because now people can just buy the ADR. There will be leverage ETFs launched on the ADR on Tuesday, and they're going to have a whole, I call it a derby, because sometimes ETFs launch on the same day and they're all fighting for the same thing. So I've already seen press releases. One of them is like, well, we're the only people who have a negative 1x. Corgi is like, we're the cheapest. And they're all going to like jockey to try to get that early volume. Because once you have a couple days go by and you're the most volume, you're pretty set. I mean, you're gonna make a lot of money in that fund. And then if you don't, then it's hard to steal volume from someone else. So the first couple days are really interesting. So watch for that on Tuesday. This will be similar to the SpaceX 2Xification that we saw about 3 weeks ago. But yeah, they are now filing for ETFs that haven't even IPO'd, and they're trying to launch the 2X almost right on top of the IPO. In this case, they had to wait 2 days. SpaceX, it was 1 day. There was even people who tried to cut the line and cheat to get out early. But it is like, it is a very competitive industry because first to market, especially with lever, I mean, stuff that traders use, if you're first to market and you get the volume, it's impossible. It's like you have a lot of pricing power. You're kind of set for life. So the competition is just ridiculous.
I want to linger
Yeah.
on this a little bit longer. You're talking about how these folk don't have access to, I think you said 5702 or one of these numbers, right? Like it's easier though for them to do it in one of these sort of wrappers. And to your point, $1.5 trillion kind of equivalent here for the United States and in the US stock market. But then I also saw that these leverage ETFs, they had tremendous pullbacks recently, right? You see the ups and downs. It's leverage, right? You go up, down, left, right, and in circles. Do you think with the rise and sort of bringing that specifically now SK Hynix to the NASDAQ, do you think that we're importing that volatility here? Are we welcoming some of that, you think?
I mean, look, there's 2X quantum computing stocks, ETFs, that will blow SK Hynix away. I mean, I tracked one. It was on like this stock called Qbert. I know that's not the name, but it's like QBS or something. It's like some quantum. And at one point, the volatility was like, I want to say like 300-400%. All right. The S&P is like 20%. So it was like, I call it the ghost pepper of ETFs because it was like, I call all that stuff hot sauce, but this was like Carolina Reaper level hot sauce. SK Hynix, definitely volatile. And to your point, over there, I have this, it's like sort of like a anecdotal metric, degen per capita. And I think in the US, we have a lot of degens per capita, but we don't hold a candle to some Asian countries. They blow us away. In fact, they don't even do much investing. They just trade and gamble. China is one of those countries, but they don't have 2X ETFs. They're illegal there. So I think the government knows, like, we can't even let the people have these. In South Korea, they're way too popular. They have to like make people take classes. And then this one was in Hong Kong, and it was traded by Hong Kong people and I guess South Korea people if you can get, you know, a brokerage account that had the shares. But it became so popular, it was like almost like a household name in Asia. And somebody had CSOP, who is the company that makes these, made these vests with advertising on the back. And one of the influencers over there, influencers are big in Asia in terms of like getting people to use stuff. Like they're like way more impactful there than maybe other places. They wrote extra words on it that said, "Stop selling. I have to feed my family."
Oh, wow.
So it's like a whole thing over there. Like it's been memed almost. It's that big of a deal there. Now, when it comes here, look, I think that it's down 50%. It went up 800% and then went down 50%. So it's had like, it's overall still up a lot. But anyway, when it comes here, you know, SK Hynix was already pretty volatile. I think the more liquidity and money get into this, it actually will be less volatile. I think these things, when they're just discovered, they can be like really like a bottleneck of demand trying to get this thing, and it goes skyrockets. I think over time people get it. The memory trade is like a little had, you know, people really bid it all up, and we'll see what happens. I just don't see these being, you know, tens of billions of dollars. Maybe like the biggest one will have like a couple billion. The volatility will be pretty good. I will say this, the more volatility, the better, by the way, for the people who use these. I mean, they want heat. You know what I mean? That's the whole goal, is to make in a day what you would have to spend a year doing if you did it the hard way, you know? And I have a report on leverage ETFs coming out on Monday where I'm okay with them. You know, it's a big tent. You know, fast food and whiskey is legal. It's not healthy, but it does the job. Like if you want to just a quick fix, both those things are fun to eat, right? Same thing. These things are probably not that healthy for you, but they're legal. I just wonder, do they serve the 2x every day? Like, in other words, if I'm like a food critic, I would say, okay, it's fast food. Is it good fast food? Like, do they serve it fast? Does it really hit the spot in terms of having a lot of grease? Like, I would grade it based on fast food. I wouldn't grade it versus some health food at Whole Foods or something. So I think with these, you want to make, does it deliver 2x per day? It does. Most of them do. They really do right about nail the 2x. Over time, that unravels a little because they have to reset the leverage every day. So I always tell people, just you try to trade them if you're going to use them. But also, you know, I guess like Vegas, you have to be honest with yourself that you are straight gambling. That's all this is. But it's legal. I mean, the professionals gamble all the time. They just use derivatives, and somehow it's like appropriate. But it's the same thing. People just betting on things, trying to make money, outsmart the market. These just make it really easy. ETFs as a whole, their main thing is convenience. They take what otherwise was a little bit of a pain in the butt and they just deliver it to you. You click a button and the trade is on. So they package all kinds of trades. There's other ETFs that go long this, short this, hedge this out, do this, do that. So it's not just long. And these are ones that give you 2x or one-time inverse. The pros know how to do this very easily. This is just making it very easy and a one-click button thing. And so they're pretty popular. But again, if you add them all up, they're only 1.2% of all ETF assets, but they account for 13% of the trading. So, but that's fine. They should be traded. So they trade way more than their assets. And I would say they're being used as designed. You may not like them. You may not use them. They may not be healthy, but they exist. And I just want to make sure they do what they say they're going to do. If they don't give you the 2x or inverse on that day, that is what I would ding them for. But I wouldn't judge the morality of somebody who wants to gamble or trade. I mean, it's legal.
Yeah, great question, Austin. Do you have any follow up on that?
Well, I mean, sort of my follow up on all of this, and you obviously live in like index land, so you know this stuff, Eric. Does a NASDAQ listing tee SK Hynix up for something like an inclusion in the SOX? And if yes, how big of a deal is that, specifically the automatic passive flows that are now going to go into the stock? Like, is that something that investors maybe aren't taking into consideration right now?
Yeah, that would matter if that's happening. I don't know. I can't confirm that right now, but let's say it got added to, I mean, I'm gonna be honest, like all the indexes outside of the S&P 500, not that big of a deal. Even the
Okay.
Qs, like I mean, they're big, but if you get out of the S&P, that's a different story because that has like $23 trillion benchmark to it. All these
Mhm.
other ones are like, you know, a couple trillion tops, if not in the hundreds of billions. So that's where SpaceX was interesting because the S&P says we're going to wait a year. The other ones took it in early, fast tracked it. So therefore, the index aspect of SpaceX, it wasn't that big. You couldn't game it too much. But when S&P is predicted to add a stock, believe me, people are trying to front run it. Happens all the time. So I think it matters. The other thing is if it gets into an index, it's like kind of a symbolic that it is a legitimate stock. It's part of a trade. It'll be in all the theme ETFs, and then all of a sudden it'll be like, watch, it'll be value stock someday. Then it'll, you know, some people say it's growth. Then it'll be momentum, quality. It just sort of gets into the whole like apparatus of all these funds that trade stuff, and so that's probably, I think, what will bring a lot of money to this stock is that once you get into the U.S. financial markets, I mean, there's just so much money sloshing around. But outside of the S&P 500, I wouldn't over. In other words, if you know if somebody's looking to trade this, like I wouldn't lean on the index in this case. I think I would just look for like, is this memory trade out of gas or does it have room to run? Because there's I think 95% of all the memory stocks are of the market is three stocks.
Mhm.
So this is one of the three, and so really, I think that whether you think memory is going to have more demand in the future and that valuation is less than it will be, that's the most important thing, I think. Sometimes people will ask me like about the structures and how much demand this will mean. In the end, like that stuff can move the needle a little, but at the end of the day, you know, the stock has to move on its own up or down. Like people have to want it or not. Like the actual root demand or lack thereof is going to overwhelm the vehicles it's in.
Do you have a perspective on memory as sort of a secular growth trend here, maybe for the rest of the decade? I'm not trying to put you on the spot to make some sort of like price target or, you know, CAGR analysis or something of that nature. But yeah, to your point, you know, SK Hynix is like 55% of market share. Samsung's around like 30-ish, Micron like 20-ish. So it's like, you know, I don't even think that added up to 100, but you know what I'm saying? It's like, you know, that's kind of like where they're all here kind of coming around. And it's interesting that three of these names make up so much of this. And as we kind of take a zoom out and think around, like, okay, we've seen a lot on X recently, in my humble opinion, of like these, you know, embodied AI. And that absolutely is going to need memory. And we haven't even scratched the surface of that, right? So, like, what's your take on that, Eric?
Yeah. So I'm colleagues with an analyst who covers this, and we talked to him, and I wrote a note with him. And it's funny, I didn't realize how like boring the memory industry was for many years. Like if you look at Micron's volume chart, it's amazing. It's like it's been living in oblivion since Ronald Reagan was president. Just like didn't you need little dips here and there? But then the last couple of months it goes like that. I mean, it's just crazy something can exist for 40 years and then all of a sudden its number comes up. I get it though, because if there's if there's a lot of demand and a little supply, that means price has to go up. I've been reading this book on AI written by like a regular reporter, just going through like all the different areas. And I mean, if you really map it out, it could be a real big part of our life, just like computers and the internet, right? Could just be like, are we going to have like AI agents working for us? I mean, how far will this go? If you kind of let your mind go with that, then I think you get pretty bullish. This guy said that our analyst that I work with, my colleague, he said, you know, it's hard to tell what inning it is because it had been so boring for so long and like it feels frothy. But then again, like he predicted that the underlying market would grow 75% in the next, I think it was 2 years or year even. And that's pretty good. That's an underlying growth. But the stocks, I think, are up more than that. So that's where I don't know. Like it's tough to say. I also just generally think that this is why you invest, right? You invest to get your hooks into these really exciting trends. Trading them is harder because you just don't know day to day, and other things can affect that. But I don't know. It's very logical to me. I mean, it makes sense. I just don't know what price is right. That's the $1 million question. But what I will say one thing about DRAM, which is the memory ETF, I've never ever seen a thematic ETF grow like this. I mean, we haven't seen anything close to this. This thing is $22 billion. I mean, you got to 20 billion in like, I don't know, 3 months. Outside of the Bitcoin ETF, nothing has grown that fast. And in a couple stages, it had grown faster than Bitcoin. It got to 10 billion faster than IBIT. And I didn't think IBIT's record would ever be broken. Now, whether it gets to 50 billion faster than IBIT, I don't know. That's to go from 22 to 50 is a whole nother leg up, but
Yeah.
unbelievable launch and unbelievable growth. So there was clearly demand for this thing, and it started from day one. So one of the hottest areas, but I'm old enough to just remember like when stuff gets real hot, it eventually cools off, but it usually comes back. It's just so tough to time this stuff. Again, the older you get, the more I think, you said I live in index land. I kind of do in spiritually too, because the index is wonderful because it takes care of all this for you. Because if people think Micron is really great and they start buying more, the price goes up. That means the market cap goes up, and the market cap means it gets a higher weighting in the index. And so you don't have to lift a finger, and all of a sudden, the market's voting is reflected in your passive exposure. So I always say active controls the weightings in indexes, which is ironic. But as an index investor, it's a perfect scenario. And they're so cheap that you get a lot for that value. And so you sort of let the market suss this out, because I think it's even tough for people inside this industry to tell you what price it should be. So those are just some thoughts on that, but certainly I'd say it's a top 3 story of the year.
I was going to bring up DRAM there as well, which you had mentioned. And I think that it was appealing to people for 2 reasons. One of them was because people just saw this memory thing happening. And like you said, ETFs make things simple, one click. I don't have to worry about it. Someone will manage this for me. I think something that was also a massive driver of it was people not being able to get direct exposure to SK Hynix previously. And they had a very large percent allocation, about, I think, 20% allocation at one point inside of the DRAM ETF. And so people were saying, okay, if I can't buy SK Hynix elsewhere, I'm going to buy it here. And that's why I also think that now that it's coming to the US, you actually will see continued interest now that people have access directly. Do you think that it could actually affect that move of DRAM potentially going from 22 to 50 now that SK Hynix is out in the market?
Good question, a little. But you have to remember, SK Hynix was already in the South Korea ETF.
Yeah.
But I think that's what Roundhill got their idea. They saw the South Korea ETF start to get like out of the ordinary flows. And I think they were like, what's going on here? I also heard anecdotally that somebody inside Roundhill was trying to build a computer. They're like a computer nerd, and they were shocked at how expensive memory was, and like started talking about it. I can't confirm that, but that's what somebody told me. Either way, there was a heads up launch. Nobody else saw this. The thing they did that was genius was the ADR wasn't out, but there's also the Samsung. Is that ADR yet? Is it? I don't even know. I think it's not. Anyway, there were 2 South Korea stocks, Samsung and SK Hynix, that neither had an ADR.
Yeah.
Let's just assume they're both ADR'd right now. Let's say they both
Samsung
are
does
ADR. You can
not
get all
have
of
an
them.
ADR on
Samsung's not.
major US stock
there you go.
exchanges.
Yeah.
So that alone is going to keep DRAM in business. But here's the other thing, is that DRAM gives you mostly just those 3 stocks. It figured out a way to just like deliver you just the meat, no fat. And there's a couple other little layers in there, but Roundhill's smart. They probably put some other things that are like byproduct beneficiaries, but mostly they're just serving up the goods. And I looked at other ETFs. South Korea had 2 of them, but in small weightings, like maybe 8% total of those 2 South Korea stocks. Micron was in a couple, and there were a couple AI ETFs that had all 3, but their total weighting was like 6, 7, 8, 9%. This one comes out and says, we'll give you like 80% exposure to these 3 names. So DRAM had multiple attractive features, not just the ADR. So I think it will continue to grow because it captures that whole market. And but certainly there's probably there could be like a hedge fund or an institution who was like using DRAM as a surrogate, and now they'll just buy SK Hynix. So I think maybe at the fringes it could lose some business, but it's not the only thing it offered.
Yeah. Yeah. And I think that that's where ETFs have seen this awesome rise as well, just making things possible for people that they couldn't get themselves, whether that's something in a foreign market, an option strategy, right? Whatever it is, I think people are just, I don't want to touch that myself. I'd rather pay. And to be honest, the fees are relatively minimal on most of these at this point, driven by the massive rise in competition that you've seen in the ETF market, I think has been a big part of it. So it's really good stuff. Austin, do you have any, maybe a final question here for Eric?
I mean, again, I feel like I'm putting Eric on the spot and over here accusing him of living in index land, all this fun stuff. I think he liked it though. I think he embraced it, right?
Oh yeah, I'm
The
fine.
Bogle effect.
Look,
Yeah, man. What
yeah.
a great.
Yeah, I mean, I can't. It's not. Well, A, it's not insulting, and B, I don't know. I'm not touchy in general. I don't really.
No, I just, you're
As you get older,
obviously.
you just don't give a shit. That you don't. It's just not. Nothing's really
Yeah.
that big of a deal.
Eric, you're on social media too much to be touchy, and you
Yeah.
tweet too much about the World
Yeah,
Cup to be
that
touchy
too.
because those fans will
Oh
come
my
after
God,
you.
yes.
Well,
No,
here's
definitely, it thickens your skin.
here's my last question here for you, Eric. You obviously have an incredible just eye for this stuff. And I would argue you probably spend more time following flows and trends, and you have so much, perspective as it relates to ETFs. Is this, and obviously you've had so much experience over the years too. You've been doing this for decades, right? How do you feel right now when it comes to AI mania, this AI bubble? This is obviously the largest foreign listing on a US exchange, beating out Alibaba. I'm not trying to have you call tops or, anything like that, but the more I look at the SOX, right, go vertical, and I kind of overlay that on top of the Qs back in 2000, and you're like, wait, that looks really similar. And like, we've got these names jumping in. So I just, I'm not asking you to kind of definitively do or say or call anything here, but like, what's your gut check right now on the markets, maybe for the back half of 2026 as well?
Yeah, AI is the flavor of the month, but it's a biggie. I mean, if you really start to play out how much it could get into our lives, it's big. I just don't know how big. Certainly, the internet was right up there. We did a look back at a trade that I thought was similar. It was called the death of the mall. You were supposed to go long Amazon and short brick and mortar companies, and they even made ETFs that did that, similar to the way they're making AI ETFs. This time you're supposed to go long AI stocks and short software, something like that. But over the last 10 years, XRT, which has the brick and mortars, did better than some of the death of the mall trade stock ETFs. And VU, the S&P 500, did even better than XRT. So I sometimes, as an indexer person, I just sort of let the market take care of it. So that like takes my stress out. If I was trading it, well, the volatility probably would be fun. But yeah, it's like musical chairs. You don't know when the music's going to stop. I think that I've seen all these like perma bears, and they've been saying the music's going to stop for like 10 years and 400% ago. So you can say it again, but that doesn't mean it's going to stop. And I just wrote a piece saying that there is this underlying persistent bid in all stocks, I think. Vanguard, BlackRock, and like advisors across the country, they are very aware of behavior. They don't want to sell or time the market, so they just keep investing. Further, I think most people sense that the Fed put is real and that the market is owned by so many Americans that it, unlike in 99, I think like 20, 30% own stocks. We're at 58% now of Americans that own stocks, and that's going to go up to 70% with Trump accounts. So if the AI bubble bursts, then it brought the whole market down with it. You're probably going to get some help, I would think. So that gives me a little less nerves on it. But sector to sector, if AI bubble bursts and they decide like the masters of the universe want to go into industrials for a while because there's something going on there, I get it. But I'm generally speaking, the index takes care of a lot of this for you. And if you're a trader, you should like the volatility. But generally speaking, US companies are run by really smart people, and they're very well aware of this trend. And just like Walmart has a very good online presence now, a lot of companies will figure out AI. I've seen it, and I think sometimes people can over extrapolate too quickly and not give humans and U.S. companies in particular the benefit of the doubt, this market is really, really good. Like these are, and everybody's all hooked into the same information. They know about this. So I don't know. I just think a lot of companies will figure out how to get AI working for them, even if there's some like winners and losers early on. But yeah, no, outside of that, I'm flat out don't know the future. Like the future is unknowable.
I think that's a wonderful perspective to share, Eric, and I could not agree more, right? Those companies that like there's absolutely going to be companies that just fall flat on their face, but there's going to be a ton more companies that figure this stuff out, propel that American capitalism forward, and I appreciate your perspective there, Eric.
Yeah, no, it was great to
Great.
join you, and thank you.
Yeah, thank you to Eric and Austin. Appreciate you both coming on, making the time here. Another historic IPO in the books. I'm sure it'll lead to some historic ETF action. You guys are great. Encourage everyone to follow both you on social media, and I look forward to speaking with you soon.
See you guys.
All right.
All right, take care. Bye-bye.
Thank you both. We're moving quickly here. We are rolling right into our next guest here at 2:01 p.m. Eastern. We're going to go ahead and bring in David. Perfect. All right. Coming in hot, David is from the Vista Shares team. Been a big fan of them for a long time. Have had Adam Patti on for many, many, many conversations. And now David from the team, the portfolio manager, is going to join in with us as well, give some insights here. I'll kind of outline specifically why I wanted to talk with their team because they really got me on the SK Hynix boat originally. But let's go ahead and bring David into the stream now so I can bring him in as a part of that conversation. All right, we are rolling in here with David. Still got Austin's face. There we go. Perfect.
Hey, how's it going?
Nice. What do we got there? Little espresso.
A little espresso to get me going.
There we go. Perfect. Excited for it. All right. So here's some background context as to why I wanted to have you guys in for the conversation today. So Adam Patti's the one who put SK Hynix on my radar originally, and this was through AIS way back when. I think it's run about 800% probably since he originally started talking to me about it. But I thought this was such an interesting picks and shovels play at the time for the AI industry. And the idea was, hey, as you're building out these warehouses and data centers and all these pieces, where is the money actually getting spent, right? It's getting spent on cooling and other items, but a lot of it clearly was getting spent on memory. And that company has come so far since then. You're somebody that's in the nitty gritty of these portfolios. So I'd love to hear your take on SK Hynix from where it was to where it is today and how it's evolved in your view.
Yeah, I think at least in our view, it hasn't necessarily evolved too much. I think it's more that it's just being appreciated differently. We always kind of use the example of like everyone wanted to talk about, NVIDIA at the time, and that's amazing and that's extremely important. But like, what's a rocket without rocket fuel? And we always kind of viewed like SK Hynix specifically as like the rocket fuel of the industry. And which is why it's been on our radar, why we've, held it for so long. And it's nice that it's finally getting a lot of the recognition. I think now it's even just like more even accessible for people. A lot of times, anyone in the US would have to go through some sort of proxy to get exposure to it, whether that was through an ETF or whatever that may be, or just, finding others in the ecosystem that you think can kind of give you the same exposure. But now, you can go direct to the source. I think it's really awesome.
Yeah, makes sense. And because I did mention AIS on here, and you guys are partners as well, just a disclosure for the audience as we go through this, for anything that we talk about specific to tickers, please make sure that investors are carefully reading and understanding the prospectus, which contains information on the expenses, ratios, other pieces along those lines. Those can be found on vistashares.com. Great website. Encourage you reading through it. A lot of awesome research for people to find out. Just wanted to put that out there as we've been working together with you guys for a long time. With that being said, let's dive a little bit further into here in terms of actual risk management inside the portfolio, specifically discussing SK Hynix was originally probably a 3 to 5% position, ballooned from there. It's been trimmed over time, still maintaining it as I believe a 12-ish% position at this moment. Maybe it's a little bit lower than that. I'll look at the exact right now. Okay, it's 8.6%. So it's obviously fallen back a little bit recently, but over time, how have you thought about managing risk when it comes to this name?
Yeah, I think a part of it is risk of the individual position, but also areas that we just wanted to get other exposure to as well. So as you mentioned, we kind of trimmed it down a little bit from 12. And that was mainly because we wanted to kind of get a little bit more exposure to some of the networking names that we really liked. So it was a little bit less of like pull on one that we had a lot of success with. As you mentioned, it was kind of like one of our first top core holdings that really differentiated our strategy when we launched. And then we kind of just realized like it's had a really good run. We've done really well with it. 8.6 is still meaningful. It's not
Yes.
small. So we kind of just pulled some gains off and kind of reallocated to some of the other networking companies that we liked. But that's kind of always what we're looking at, is just like, do we still, see the thesis on the ground? Do we still kind of see the long-term value? And then the second kind of, when those check, it's, okay, well, is there also other areas that we just want, opportunistically get some better exposure to that, maybe now's the right time and kind of use the gains to do so. So that's a little bit more like we still love SK Hynix, love Micron. Still kind of think, Samsung Electronics is great as well. Those
Yeah.
are all kind of within our top holdings as a core position. So, yeah, we're still pretty bullish on the long-term theme. I think the one area that does kind of has been also a question that we've kind of been grappling with and is a little bit part of why we would take the position down, is when you see a lot of these CapEx projections, and I mean, SemiAnalysis came out with one pretty recently that was pretty bullish. And 40% of that going to memory. It's like, how long does the industry really put up with something like that before they start trying to find different architectures or ways that they can get around it, and whether that's finding other ways of like moving the data instead of storing the data, or whatever that may be, in like an overly simplistic term. And obviously innovation takes a very long time to actually become live. But how long do people put up with 40% of the cost going there? And right now there's no other alternative, but that doesn't mean people wouldn't, try to push the front on innovating and try to find, new architectures to potentially get around it. So that's kind of one more philosophical question. We don't have an answer to that. There is not really an answer to that yet, but as we're kind of projecting, 3 years down the line, that's kind of one that we're grappling with.
Got it. Makes sense to me. And then I've one more question here, and then I'm gonna bring in Evan from Stock Market News to help run this for a few minutes. It seems like a lot of the names here, the common factor beyond them being picks and shovels plays, is that there's a lot of bottleneck plays, right? We spoke with Jose Najarro, who's a very popular YouTuber in this area, earlier today, and he mentioned Silicon Motion as one of the holdings that he's gravitating towards, saying, hey, I don't need to necessarily have Micron and some others. There's so many bottleneck plays in here. And so I'm just curious as to if that's kind of part of your thought process, is looking for areas where there's really, 1 to 3 companies, high demand, low supply from that area, and trying to seize those opportunities.
Yeah, that's exactly it. And our approach is, specifically for all of our growth equity and super cycle funds, is we partner with industry practitioners to form an investment committee. These are people that are actively building innovative companies like in these industries. So whether that's distributed battery companies, whether that's space companies and defense companies that are part of the Golden Dome initiative, whether that's one of our investment committee members was the president of Grok before it was acquired by NVIDIA. These are all the people that we kind of keep within our investment committee and in our orbit, with the idea being they're actively building, they're actively running into these bottlenecks. They're actively running into a bottleneck on tungsten. They're actively running into bottlenecks that wouldn't give us
Yeah.
the inclination to go look into gas turbines. So that's kind of part of our thesis, is partnering with people that can kind of give us these signals, and then we kind of run with those signals and try to find areas through our own kind of like fundamental research as to like who are the best companies that we can get exposure to that can kind of reflect that theme of supply constraint. So like an example could be, I think towards the end of 2025, we kind of went into the substrate side of things, mostly because there was a couple companies that we really liked that a lot of people didn't really have exposure to, and we couldn't really find anyone on the proxy side from like the ETF perspective that would give exposure to them. Kind of like the two main players in that space, it's like Ibiden out of Japan and Micron in Taiwan. And we were like, okay, well, we wanted to get exposure to that. So we kind of like, again, kind of pulled off some of our winners and would go into an area that we think was underappreciated, and made a position in Micron that way. So that's kind of like the philosophical way into which we kind of do it. It's like operator signal leads into fundamental research, and then we kind of look for opportunistic areas to also give people exposure to geographical companies. I mean, this like AI is global, and a lot of people kind of forget that, and a lot of funds can be like 90% US based. And we really want to try to differentiate ourselves by finding some of those companies that are maybe a little bit harder to get. We'll keep them in line, and then kind of giving people exposure that way.
Yeah, that makes sense to me. I'm gonna actually, as Evan goes, I'm gonna swap Evan in for myself for a minute here to take over for a few questions. Evan, go for it.
Got me?
Yeah.
David, how are you doing, sir?
Doing good. How you doing?
I am doing fantastic. I am excited to have this conversation. SK Hynix is finally public here.
Yeah, happy Hynix Day.
Yeah, happy SK Day. We'll figure out what we call it. I'm also looking forward to what we have later in the year as well. Maybe Anthropic and OpenAI, some other stuff going on. As you guys are maybe thinking about possibly moving down memory exposure a little bit, and that's an in theory thing. You didn't say you were doing that, but maybe there's some thoughts of that happening. Where are the thoughts where you would put that money into? Are there, again, I don't need specific answers in here, but just what general parts of the market do you think of this AI trade are maybe being underutilized right now? I know over at Vista Shares AIS, you guys are using a bill of materials. What that means is actually you guys have people on the ground. They are telling you, hey, this is when we build the data center, this is where we are putting money into it. And then you guys are kind of constructing the portfolios around that. Hey, this thing is 30% of what the costs are going into. So generally trying to get the funds there. I know it's a little bit deeper than that, and I don't want to put words in the mouth, but I'm curious in where maybe you think that I hate that word bottleneck, but maybe where the money is going into, and parts that if in a world where memory becomes a little bit of a looser market, I know there's some conversations around Apple and possibly trying to get some memory demand for the Chinese market from a Chinese memory company or two. So who knows what the forward looks like? Yeah, I want to get your thoughts of maybe what you would adjust into in that world.
Yeah, so the one area that we still kind of view as underappreciated is a lot of just the networking and interconnect plays. And, part of it has also been a nice pullback over kind of like the last week and some of those names. So those would be areas that we would look at. I think specifically we still quite like companies that are positioned well, where the market kind of makes it a zero-sum trade-off, but there's actually some companies that fall in between, and you can kind of see a little bit of that earlier with Marvell, for example, and like the NVIDIA versus TPU architecture. And you can kind of see the same thing on like signal integrity. A lot of it was like copper versus lasers, and like they would kind of move inversely to one another when they had this like, oh, one has to win mentality. We kind of view the same thing happening a little bit, and we like signal integrity as kind of like an area that we'd look at. If you want to move as much data as fast as possible, keeping the latency in check and making it very power efficient is super important. So there's companies like along that theme that we've been looking at, that we kind of like thematically, and also just how they're positioned in the architecture, their moat, their durability, and how they're valued. So when we think about other opportunities to pull back memory and add it into other specific pockets, that's kind of like an idea of how we would think about positioning it.
Yeah, that makes sense. There's a lot of different parts of this AI trade and AI thing. I think maybe this version of the trade, I don't know what inning we're in, but I'm pretty certain with the long term of this, we are in the first half of the first inning. When we talk about robotics, when we talk about all these other things, I know we've had a lot of people talk about voice AI and connected AI and how much more latency and just the more technicality of this stuff going on in the future with what we're getting into is only going to continue. So the use cases will be crazy. But one of the themes kind of within that, I'm a little bit of a hard pivot, but it does make sense. You need to power all of this. You do need to power all of this. And that's been one of the themes as well, that not only do you need a way to get the energy and have to do all this, but you need to either build the power plant at the data center. You need to get the energy from where it's being made to where it's going through a grid that is very old, that wasn't made for this much power for the usages that we have going forward. I saw a tweet from you guys the other day that was talking about the grid came 2 gigawatts away from its max power usage ever in this last heat wave that we had coming up here. So I wanted to hear your thoughts on this one. I know you guys have another product. There are 2 thematic ETFs, 3, sorry, maybe even more, QUSA as well. I
Yeah,
apologize.
we have two thematics, AIS and POW, that are live. They both follow our bill of materials approach. And like it's pretty much as you mentioned, POW, it's all about, you know, getting the electron from where it's generated to where it's actually needed and consumed is like a pretty big archaic infrastructure problem in the US. A lot of it needs to be updated. Some of the components are like 100 years old. And it's kind of like AI's just flashed a light on all of this, you know, chaos and problematic architecture that we've had on the grid. But it's kind of always been there. Just we're only paying attention to it now because we have this like other sexy thing like AI that's really important. And obviously I'm simplifying a little bit, but it's kind of pulled the cover off a lot of the neglect that the grid's been under. So we kind of view it as a very separate investment cycle. AI is kind of dependent on power. Power is not dependent on AI as like an investment super cycle. And that's kind of like a very core distinction that we wanted to make. When you think about $1 trillion of going into the grid and just upgrades, that's in our mind, you know, very distinct. There'd be very different ways that you want to play that than potentially getting exposure to some of the power companies or architecture companies that are, you know, enabling AI. So as you mentioned, it's all about like high voltage cables, power transformers, you know, substations, switch gears, like all that fun stuff. And I mean, again, kind of very similar to AIS and how we try to make sure we have a pretty good sleeve of international names. The same thing is true for power. A lot of the transformers, I think it's 80% of transformers are imported into the US. Over 50% of power electronics in the grid are imported. You have a massive base of when you hear this $1 trillion of capex, you're like, oh wow, it's a nice big number. How do I get exposure to that? A lot of it is actually going to companies that are manufacturing these components overseas and selling into the grid. Some of them have set up U.S. Domestic facilities, obviously, but you can get exposure to them through other, you know, interesting ways in other international markets. So that's kind of how we've positioned it. And again, our kind of view, for the most part, is we actually don't as much have a generation problem. If you look at the levelized cost of energy over time, it's going down. We do have a, you know, power transmission and distribution problem, and that's kind of how we've positioned that fund to really capture that theme.
Thank you. I appreciate the thought there. Where is a lot of the conversation is going on to energy creation and generation of the energy, oil, gas, solar, all those things there. How much of this trade is actually just like this grid is really old and we need to put a lot of stuff through it? And it kind of, I like you were saying there, it makes it into a little bit more of a boring trade, which I feel like when you look at this AI thing, it's kind of popped up a little bit. I had no idea what photonics. I had no idea what half these things. I knew Micron. It's been around for a while, but there's a lot of these things I just did not know. Yeah, I'm just curious on what are the boring things within this power grid infrastructure. The thought that we have a lot of AI coming. There's a lot of data centers. We're going to keep using more power. Grid needs to be updated. What are the boring stuff within this?
Well, I think the maybe not boring, but like I actually kind of find like interesting as like a moment in time. And it's a really unique opportunity. Most of how a lot of this would get, you know, distributed into the greater utility companies would kind of, you know, upgrade the infrastructure, upgrade the transmission, upgrade the distribution, pay for all of it, and then distribute it among the ratepayers. So it's kind of like a lot of the people that were in the rate pay base would end up kind of seeing their energy bill go up. And like when you open your energy bill, a lot of times it'll be like the wholesale energy price is like 1/3 of the bill, and then like 2/3 of the bill is getting it from where it's generated to where it's needed. So it's like the utility companies are passing it along to the ratepayer. I think that's kind of one of the things that's like a little bit of a misconception with data center. A lot of the voodoo, like boogeyman data center stuff that's going on now, of like, oh, it's going to increase my bill. It's like a lot of the utility companies also upgrade the grill and pass it on to you anyways. So that kind of already happens. You have this like really interesting, unique opportunity. We have this almost like price insensitive buyer that's willing to do like anything for power. And you have a lot of these like municipalities and areas that would do a lot to upgrade their energy infrastructure, and they're almost like losing the moment So I think it's actually a pretty big inflection point for the grid in the sense of you have tons of CapEx going into AI infrastructure, even kind of like redirecting a sliver of that, which a lot of these hyperscalers would easily pay to get access to the grid in exchange for upgrading some of the transmission infrastructure and distribution infrastructure, which would then benefit the rate base because they don't have to pay for it through their energy bills, which they already would do anyways when the utility companies would do their normal, upgrade infrastructure cycle. So I kind of think it's a really interesting moment in time, and I really hope that there's so much alignment, and a lot of it kind of gets lost in the noise. AI kind of has like the worst PR that you could possibly imagine right now. So, getting people to be pro AI in a lot of these local towns is really hard. And it's a really easy piece for kind of like local politicians to pull. And I mean, there could be some warrants to that depending on like how those specific energy deals are structured with the hyperscalers that are going up in those areas. But for the most part, I think there's a solution. There is alignment over the long term for both of these to like coexist and actually benefit the rate pay base where they don't need to put up with, having 2/3 of their energy bill going to, transmission and distribution because it's so archaic and they have to pay for all these upgrades. It's like doesn't have to be true. There is another way. And just getting everyone kind of like aligned that way is like a really interesting theme that we're watching for the rest of the year.
I do see we got the wonderful God back on the stream as well. I appreciate you, David, for answering my questions. I will say, people should like and subscribe to the channel if you're enjoying this. We got a lot more content coming. David, Adam, VistaShares team, big fan of the stuff they do. Awesome partners for the team. Go check out the website. Yeah, Gav, back over to you.
Yeah, I think you hit on some great points. Really intrigued to see this continue to go. I continuously watch the holdings because I feel like you guys do a great job of discovering names like this early. And as continued pieces, whether it's in the memory trade, the AI trade, or elsewhere, are going to pop up, this is a great place to find them. So it's somewhere I'm continuing to look. Do you mind just talking for a second or two about like what that research process looks like? I know John McNeil's involved, Sunny Madra, and like how they're finding names like this.
Yeah, so part of it is, again, we kind of meet monthly as like an investment committee, again, operators that are building the future, kind of, and helping us inform where we want to position the fund. And then we also have on our investment committee the former dean of the NYU Stern School of Business, Robert Whitelaw, kind of a professional in portfolio construction that also kind of helps us, package a lot of the insights and thematic research that we would do. One from what we're seeing on the ground in the field, and then two from like evaluation perspective and potential companies that we think have catalysts over the next 6 to 12 months, or are just, very long-term opportunities that we'd like to get exposure to. And then third, kind of like combining those two things into the third component, which is portfolio construction. So we're pretty active around like collective, we've done a good job of getting as many smart people around us as we can, always try to be the dumbest one in the room. And we've been able to kind of translate some of that into what we've seen with VistaShares from a portfolio construction standpoint. And that's awesome. We do kind of think that's just the beginning. So we have AIS and POW launched, and we have three new funds launching next week around robotics, defense, and space, kind of using similar bill of materials approach. So if you think about defense, a lot of defense ETFs have primes. Primes are actually not great. We would think they would be amazing investments because they suck so much out of the industry. But when, in times of like war or like increased defense budgets, they actually don't turn that very strongly into earnings power and stock performance as much as you would think. Right. So we're kind of taking the same approach for all of those funds of, targeting the different components, targeting the different suppliers that are actually the ones that are earning a lot of that CapEx or a lot of that, military budget. And we have our investment committee member who joined for space, Ian Cinnamon. He's CEO and co-founder of a company called Apex. They're part of the Golden Dome initiative, and he's also their company manufactures, satellite platforms. Those satellite platforms essentially go into like almost every satellite. They sell them, they're standardized. And on those satellite platforms, essentially take all the different components that you would need, and they plug onto this like uniformed spine. So we're really excited to have him on board as well. And we're really excited to launch those products next week.
Super cool. Looking forward to those coming. David, I appreciate you taking time out of the day to join us.
Awesome. Thanks for having me.
Thank you. Appreciate you as well. Let's put it back on screen now with me and Evan here for a couple of minutes. And I know that we're going to have Alex from ticker symbol U here in just a moment as well. All right. Before we get into it with Alex from ticker symbol U, great conversations throughout the day today. I think the one that's coming up, one of the first people that I'd really scheduled for this, going to be a master when it comes to talking memory, GPUs, NVIDIA, SK Hynix, and others. So get ready for that. Before we roll into that conversation, we'll let him in just a second. From the waiting room, we wanted to talk for another minute here about our amazing sponsor for today's live stream, which is Leverage Shares. They've got a 2x long SK Hynix product, which is going to be coming out on Monday, Tuesday area, and a 1x short SK Hynix product. You heard just 2 segments ago from Eric Balchunas. He really does expect these products to have significant attraction from people. He said when you look at the Korean market, the 2x leverage SK Hynix product, it was the equivalent of if it had 1.5 trillion in it in the US market, which is unheard of, obviously, for an ETF, even if you look at SPY or something like that. So curious to see if that does come over here, but we do know that this is expected to be volatile. It's already like 16th largest company in the world. We're expected to see big moves here. It is an ADR. It's a little bit unique, but for those that are looking to trade this is probably going to be the best go-to way. Again, just for my thoughts personally, like I trade a lot less options these days, especially if I'm trying to play a short-term move, play a catalyst or something, because these ETFs are just so much simpler when it comes to not having to deal with time decay and other items along those lines. So again, put these tickers on your radar, SKHX, SKHZ, and a special thank you to Leverage Shares again for sponsoring this segment and this live stream. Evan, any thoughts on those before we roll into this next chat here with Alex?
I always love hearing Alex. Fantastic YouTube page, which everyone needs to subscribe. I don't need to pitch it because you're going to hear why over the next 30 minutes. I am very excited to see how this IPO ends up playing out. I am excited to see how people end up playing this. But I find it to be a very interesting time in this market. Niles was talking about memory with China, and that's a little bit of a conversation with Apple. We'll see what ends up happening there. I'm more excited about the thought process of we're going to continuously need more memory going forward because there's just more and more AI use cases coming into the world. We haven't really gotten to a point where self-driving cars, robotics, there's just so much of this real world AI. A lot of the AI conversation is centered into the online world, and that still hasn't really been built out. So I am just looking forward to it. There's going to be a bunch more memory needing to be used going forward. There are some industry dynamics that I'm excited to ask Alex about over the next couple of years as all these companies are in a rush to invest now. Does this lead to that glut at some point? And maybe this becomes the same cyclical story, just at a continued higher level. That doesn't mean the company is not going to be bad. That probably means the company is continuously doing great, but it kind of pulls back at a higher level. But I'm very excited for this Alex conversation.
Yeah, I mean, you hit on it. Our next guest here, from MIT to being an actual rocket scientist to deciding that YouTube was the best use of his engineering brain. He now runs ticker symbol U, where he breaks down Tesla, NVIDIA, and the AI supply chain for an audience that actually wants the technical details to be explained the right way. Let's welcome Alex to the show. Bring him in now, please.
Hey, I'm on the line.
All right. Coming in here. He's on the line. Beautiful. Let's get right into things. Alex, we've had a couple of conversations in this area, and funny enough, I don't even think that we knew that SK Hynix was going to be IPOing today when we originally planned this discussion. We were just like, hey, we want to talk memory stocks. We want to talk things that are happening. We wanted to talk SpaceX originally. SpaceX, that's a whole nother story. We'll have to get back to that another point. But SK Hynix is here, $1 trillion plus IPO, raising like $26 billion. There is a lot of money flowing around this ecosystem. Wanted to hear from you kind of off the top, just, pure thoughts on SK Hynix before we go further.
So SK Hynix, first of all, thanks for that awesome introduction. Much nicer than my channel probably deserves. Happy to be here. Thanks for having me on again. SK Hynix. So I actually really like this company. I've been wanting to buy it for a long time. I own the DRAM ETF and I own the EWY ETF, which is like the two primary ways to get exposure to SK Hynix currently, since it's a South Korean company. I think the company is fundamentally undervalued, which is a little weird to say since it's already over $1 trillion market cap. But if you compare it to Micron, for example, Micron, another great company that I've been sort of talking about for years now. SK Hynix trades at a deep discount to Micron. I have a video coming out next Thursday on it. Not trying to plug my own channel here, but like
No,
I've
please.
been working through the through like a deep dive analysis of SK Hynix sort of all week. It's kind of the first time I'm seeing a lot of the in-depth numbers because they filed an F1
Right.
to go public as a, sorry, I should be clear. They're not going public, right? They've been public on the Korea exchange, but what they are doing is they're listing on the NASDAQ as an ADR, right?
Yeah.
So they filed an F1, not an S1 form, but it's like almost identical. And in it, there's a lot of new information I didn't really know before because I haven't been reading translated versions of their, Korean stock exchange earnings reports and stuff like that, right?
That's what
So
AI is for, man. Yeah.
exactly, yeah. So I'm going through it. I've actually been going through it manually just because, like, AI still does a lot of like summarization and stuff like that. So it's like a 150 pages report, and I've just been kind of like chilling out, reading it all week, and there's a lot of like really interesting stuff in there. So anyway, I'll pause there. Really excited about the listing. Really think it's fundamentally undervalued to Micron. Really excited to cover it next week.
Well, let's start there. Fundamentally undervalued to Micron. Why?
Yeah. So if you look at their their forward PE ratios, I think Micron right now is at something like a 12, which is still relatively low for how fast the company is growing. And SK Hynix is at something like an 8. It changes day by day based on the share price and stuff like that. But yeah, that's like a 33% discount to Micron. And I wondered why all week. I've been reading through the filing and I couldn't figure it out. And then I started like Googling just like random stuff, right? So it turns out that the big reason that Micron is, and sorry, I want to be clear, Micron's not overvalued. SK Hynix is undervalued relative to Micron, right?
Mm-hmm.
The reason why is because Micron is in the S&P 500, the S&P 100, and the NASDAQ 100. So it has a lot of passive institutional flows that go into it, no matter how it does on earnings or whatever, right? Like retirement funds buy index funds that track these indexes, right? The S&P 500, the NASDAQ 100, and Micron's been in them for a long time. It joined the NASDAQ 100 earlier this year, but the S&P 500 is by far the biggest like index, and the NASDAQ 100
So
is
much bigger.
the second, right? So it's these passive flows that have juiced up Micron's share price just because it's being bought no matter what. And so SK Hynix hasn't had that privilege.
Right.
SK Hynix is going to, my suspicion is, this isn't confirmed obviously, that SK Hynix will join the NASDAQ 100 soon after its listing. The NASDAQ changed the rules on how it allows stocks into the NASDAQ 100 before SpaceX's IPO. And SK Hynix should meet those same criteria, right? I don't think that'll close the valuation gap completely because the S&P 500 doesn't allow foreign companies. So, SK Hynix will never be in the S&P 500. It'll never be in the S&P 100. But being in the NASDAQ 100, we should see like a big bump in the inflows for that stock.
Yeah, Eric Balchunas was on here like an hour ago, and he was talking about how much bigger that S&P 500 is than NASDAQ, and people not realizing in terms of the flows that come in and the difference in getting to added to one versus the other is just so massive when it comes to these different pieces. So I completely agree with that. One thing that I've heard, a little bit of pushback from people in terms of SK Hynix being an ADR, right, paying a slight premium to buy it in the US versus over there, still not a US company in terms of reporting and other items like that. People also think that, Trump's very bullish, obviously, on AI right now. He's kind of telling people to buy certain AI stocks. Probably not going to tell them to buy a stock that's not an American stock as well. So not getting a boost there. What do you think of kind of some of the tailwinds?
Yeah, that is an interesting. I haven't really thought about it from like that macroeconomic perspective. So let me push back on just a little bit. I bet there's some truth to all of that, right? But when I think about some of the best performing companies on the market, I think about ASML, which is an ADR. I think about TSMC, which is an ADR, right? These are both foreign companies that are integral to the semiconductor supply chain. You literally cannot have NVIDIA's chips, AI, like you name it. Apple iPhones, whatever, you cannot have it without TSMC and ASML, both of which are ADRs and both of which have done fantastic over the last few years, definitely, especially in the AI era, which we'll just call like since ChatGPT came out, right? So
Yeah.
over the last almost 4 years. It may not enjoy some of those tailwinds, but let's talk about some of the tailwinds that it might enjoy, right? SK Hynix is by far the memory leader when it comes to high bandwidth memory, which is the memory inside AI data centers, for example. It has triple the market share of Micron when it comes to high bandwidth memory specifically. And it's the number 2 player in both DRAM and flash memory, NAND flash memory overall, right? So it's, I can't actually remember if Samsung is number 1 in both or if SanDisk is number 1 in flash or whatever, but like, so SK Hynix is number 2 overall for all memory in the universe that matters, and number 1 for the memory that actually makes the most money, which is high bandwidth memory. So I guess I don't really care if like one way or the other, like any politician says one thing about it, or if it's an ADR versus like you buy it on the KSX, the Korean Stock Exchange. The truth is, like, if you look at the science behind the stock, it's an incredible company trading at a deep discount to its competitors, and it's listing today, right? Like, so we'll know on Monday-ish, like what the share price is.
It's already up. It's already trading at this point right now. People can look it up. If you go in major brokerages and you type in for SKY, it's like SK
HY, SKHY. Yep.
Yeah, SKHY. You'll be able SKHYV. You'll be able to see that it's already up. Well, it was up a little bit more. It's up 13.5% since trading at 169. You know, they priced it at 149, so about $20 up per share. Market cap's around 1.2 trillion, roughly right around there right now. 16th largest company in the world.
Yeah, I mean, totally expected, right? You know, it's a whole different kind of investor that's able to access the stock now. You know, the American market is big. I would argue.
And you're right, by the way. It will be SKHY on Monday.
Sorry,
right now
yes.
It's just SKHYV, but Monday it will be, yes.
Yeah. So totally, right? And it's doing that for 2 reasons. One, I think, you know, it's starting to close that valuation gap now. I think everyone really anticipates it joining the NASDAQ 100, and it's just a whole new type of investor that can access it, right? The American retail and institutional investor can now buy it directly without having to buy a fund that has it at the top.
Yeah, I've got a lot of questions here, but I want to stick on SK for a moment here and actually go into the fundamentals. Can you talk about the actual growth in terms of revenue, profit, margins, and pieces like that that really are standing out to you?
Yes, let me just pull that up because I obviously keep all this in a spreadsheet, not in my head. I'm not that smart. So just give me 1 second.
No problem.
Yes. So I'm looking at a table. I can share. If you tell me how to put it on the screen, I will. Otherwise, I'm just gonna like read some things from the table for you.
Yeah, all good. You can read.
Cool. So as of yesterday, right? So now the price has changed, as you pointed out. It's up, you know, over 10%. So take every number I'm about to share with a grain of salt. These numbers were accurate as of last night, right?
Could be accurate again on Monday.
It could be accurate again on Monday, exactly. So SK Hynix's revenue last quarter was $35.5 billion. SK Hynix reports in the South Korean won, so there's some, you know, little asterisk there about the conversion rate and stuff like that. But let's just pretend all of my numbers like make sense and stay static, all right? So that's about 80% as much as Micron. So Micron is making more money, and Micron is growing substantially faster year over year. When I looked into it, the reason for that actually is because Micron had a really bad quarter this time last year. So it's actually, we're comparing it to a lower base, which again, I'm not saying Micron is bad, but if you remember in 2023, this is going to be like a short but interesting story. There was actually a down cycle in memory. Memory was still considered a commodity. High bandwidth memory wasn't nearly as constrained as it was today. And Micron really felt that. So they had a down quarter, 2023, all of 2024, all of 2025. And if you look at the stock price, it kind of reflects that, right? The explosion in its price is very recent, like in the last 1 year, right?
Yeah.
That's why its revenue is growing so fast, is because even in 2025, it was still recovering from that down cycle in 2023.
Sure.
SK Hynix's revenue growth is 200% year over year, even though they fully recovered from that down cycle much faster than Micron. So the question is, like, yes, Micron is quote unquote growing faster, but to me, SK Hynix is actually more durable because they survived that down cycle, recovered faster, and now they're growing they tripled their revenues year over year off of a much higher base, is what I'm trying to say, right?
Yeah.
Okay. They have their earnings per share. They make it roughly $75 per share. Again, conversion rates and blah, blah, blah. But it turns out that's as much money as Micron and SanDisk put together. So that was pretty interesting to me, right? So as a result, it trades at the lowest trailing PE ratio. Again, that might not be true after today because the stock price popped like 10%. So let's just call it the same trailing PE ratio. But where things get interesting is on a forward PE ratio, like we talked about right at the beginning. Micron trades at just under a 11.7 forward PE ratio. Yep. And as of last night, SK Hynix traded at a 7.6, right? So 33% lower or 50% higher for Micron, depending on, which one you're comparing as the base. They have the same price to book. They have slightly lower return on, their price to book in both cases is roughly like 11. Just so everyone's aware, I don't know if this got talked about, but this is like pretty important. SK Hynix and Micron make their own chips. So unlike NVIDIA, which designs their chips and then sends it to TSMC, SK Hynix is an end-to-end memory chip designer and manufacturer, right? So something to consider is they have, they're in the same kind of good and bad spot as Intel, right? Where they get to design it. Their manufacturing process is tuned to their own designs, which can be a blessing and a curse because they have to get all of the end-to-end chain to work, right? If the design is awesome, but they can't build it, they're screwed. If their design is off, but they can build it, they're still screwed, right? So they have to kind of like make everything work. So that's why they have a lot more assets, and that's why it might be useful to look at their price to book. Their operating margins last quarter, 72%. That's incredible. That's, software like margins, but Micron's were almost 82%. So Micron does have much higher margins, and that's because a much higher percentage of Micron's business is high bandwidth memory. However, this is the interesting part. Well, I mean, it's all interesting, but this is the most interesting part to me. Micron's share of the high bandwidth memory market is 23%. SK Hynix's is 56%. So more than one out of every 2 high bandwidth memory chips is made by SK Hynix, and about 70% of NVIDIA's high bandwidth memory going forward will be made by SK Hynix. They just signed a contract, I believe on the 6th. I have to double check that date, but with NVIDIA, all of Vera Rubin is going to be made by 70% of all of Vera Rubin's high bandwidth memory will be made by SK Hynix, right?
Jensen loves SK Hynix.
Loves them, yeah, and we can talk about all the silly things that happened at Computex and whatever, but yes, Jensen is very openly working with, partnering with, and co-designing with SK Hynix. So that's the other important part. So Vera Rubin chips aren't just using SK Hynix's memory; they are tuned to it, which means SK Hynix designs their memory around Vera Rubin, and Vera Rubin is being designed around SK Hynix's memory. So that's really, it's not like they can just, if SK Hynix raises their prices, for example, you can't just turn around and say, okay, I'm just going to go to Micron or Samsung instead. These things are being co-designed by SK Hynix and NVIDIA.
That's the HBM4?
Yeah, I think it's HBM4E, if I remember right. But yes, HBM4. And then finally, another interesting note. So on the NAND flash side, so just to be clear, there's DRAM, which is like the RAM in your PC, and there's the NAND flash memory, which is like the solid state drives in your PC, which store all your data even when it's turned off. It's like your video games come off of the NAND flash drive and then they get loaded into RAM, as you're actually playing it, right? SanDisk has a 14% share of the flash memory market, and that's their primary product. SanDisk doesn't make high bandwidth memory. It doesn't make DRAM. It makes NAND flash memory, 14%. SK Hynix has almost a 19% share of that market. So even though SanDisk does nothing but make NAND flash memory, SK Hynix's market share is still like 30% bigger than SanDisk's. So
Wow.
in one company, you're getting a bigger share than Micron of the high bandwidth memory market, a bigger share of the NAND flash market than SanDisk at a cheaper price than both of them.
Yeah, SanDisk obviously a lot lower market cap than Micron, right? It's trading at 283
Totally.
billion, I believe right now, versus MU, which is at 1.1 trillion.
Yeah.
So there is some split there, but yeah, I keep getting also questions from people asking like, where does SanDisk fit into all this? I think that's a great explanation right there.
Yeah. So you're totally right that SanDisk is a much smaller company. Their revenue growth has been incredibly fast too. You know, we can compare if you're interested, but yeah, all of the memory makers are growing super fast. So I'd love to talk about like the memory super cycle, or you know,
Yeah.
it's your podcast, so your agenda, but
Well, yeah, I want to get into that. I am kind of curious just to ask you, you know, because you're typically pretty transparent with your portfolio, how you're actually going about allocating to memory and what's maybe changed over the last few months. And if you are going to, I mean, you're hyping it up here if you're buying, you know, SK
yeah.
Hynix.
Yeah, it's a really good question. I think my big challenge right now is I'm in Micron for so long and it's such a low base. Is it really worth like trading away all my Micron stock for the little bit of a discount that SK Hynix trades to it today, right? So I think I've kind of been locked in on the Micron ride. I do still believe that Micron has like those structural tailwinds we just talked about, being in the S&P 500, being in the S&P 100, being an American company, so that you know the political climate is very favorable to it, tariffs are very favorable to it, and Micron is really playing into that too, right? Micron expands its own production capacity in the US. So it's kind of hard to pull me away from Micron, but man, if I was starting a position in memory today, it would be very different, right? So I think it's one of those, you know, more of a do what I say, not what I do, unless you've been in Micron for just as long as I have, or my audience has. You know, we've been covering Micron for about 3 years now.
What's
So,
your Micron cost basis?
oh my God, like $15 or $18 a share, something ridiculous.
Yeah, I
You
had a
know,
feeling.
yeah,
Yeah, that's
it's
crazy.
insane. Because I've been buying it for years and years. Oh, sorry, excuse me, 150 or 180 per share. Sorry, I'm not. You know,
Still really good. Still like a
yeah,
4x.
yeah. Oh yeah, like probably at least a 5 or a 6x. Yeah.
Yeah. Yeah, 100%. I mean, Micron did pull back a little bit recently, but we're still sitting at roughly what, $1,000, 986. Yeah,
Yeah.
moving pretty nice here, by the way, into the end of day. We just went up 2% on Micron
Love it.
over the last few hours after we had that drawdown. It's looking to maybe go green here before the close. So pretty interesting one right there. All right, so back to the super cycle. Question for you there, because people are talking AI super cycle, memory super cycle. Are these the same thing? Is it memory super cycle is a part of the AI super cycle? And for those that are like, what even is a super cycle? Like, how do you break this down?
Yeah. So okay. So what even is a super cycle? So traditionally, memory was considered a commodity, right? All that really means is these chips are really cheap to make. They're kind of everywhere. You know, they're in your desktops, your laptops, your phones. Like memory is not a hard thing to build traditionally in the past, right?
Yeah.
So it was what people refer to as cyclical, right? When demand rises, like, you know, new PC components come out, video games get way better, your cell phones get way better, you know, all of a sudden everyone's refreshing their devices, right? They're buying new laptops, new cell phones, new PCs for Christmas, or, you know, new PlayStations because the new Grand Theft Auto is coming out. All of those devices need memory. Demand goes up, so price goes up for memory, right? Because now all of these memory suppliers are crunched for that supply relative to demand. So the price goes up. It's a cycle. Then that demand is satisfied, right? Everyone buys all those things and they don't need new devices for a while. So demand for memory goes down. That's the other side of the cycle. When demand goes down and you have fixed production, prices drop. So there's a literal supply and demand cycle for memory. What's a super cycle? A super cycle is where demand goes up and then it doesn't come back down. It's a super cycle. The demand cycle lasts way longer than the traditional demand cycle that we just talked about, right? AI has caused a super cycle in almost all parts of the AI value chain. So GPUs, CPUs, ASICs, right? Custom chips. We've talked about Broadcom on past podcasts. And of course, memory is included in that. Networking is included in that. Power and cooling is included in that. So memory, the memory super cycle, I believe, is part of the larger AI super cycle.
Yeah.
And demand is just through the roof for high bandwidth memory specifically, and DRAM in general.
And maybe you can go a little bit deeper into, because you're talking about some of the things that typically require memory, but really what's causing this massive growth, of course, is this AI movement that's happening. And now everybody's utilizing Anthropic, right? And ChatGPT and pieces like that. And can you explain why that is only going to continue to accelerate? And then maybe you can touch on, because you're the Micron guy here, some of the pieces from that earnings call where the CEO talked about, hey, we could see 10x demand for memory with robots and other pieces like that.
Sure. So, okay, let's tackle that in a couple pieces here. So one of the important things to understand is one of the things that Micron did smartly, in my opinion. Gamers don't agree, and I respect that, right? So they used to have a PC line of memory called Crucial. So if you've ever built your own PC, you could buy these. Crucial was the brand, memory sticks, right? RAM sticks, stick them into your PC. And they said, we're done with that. We're focusing on high bandwidth memory only. And so what that means for, people who don't really know how to put those things together is you can swap between traditional DRAM and high bandwidth memory in your factory, right? You can say, hey, we're taking down all of this DRAM stuff and we're focusing only on high bandwidth memory specifically. NVIDIA kind of did the same thing, right? They used to make all these different GPUs for PCs, and now they're focused almost exclusively on data centers, right?
Sure.
Okay. So that changes like the profit margins and the, price tags and the production limits. That changes like all of the things involved in the supply side of AI memory, right? One interesting thing is that to make high bandwidth memory, it takes like twice the floor space on a factory, which means you can only make half as much per per unit factory you have. And it's much harder to set up. So you got to be like really sure you know what you're doing because yields are lower. It takes up more factory space, blah, 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 right? So on the demand side, the same amount of demand, you have much lower supply of high bandwidth memory to begin with. So when people say, hey, we can see demand going out even further and even higher, one thing you can take away from that is that supply will never catch up to demand, just never, because of the nature of how hard high bandwidth memory is to build, how expensive it is, how low yield it is, how much factory floor space it takes, et cetera, et cetera, et cetera. Sorry, remind me the second half of your question.
Well, it was really, as we move forward, just why demand will continue to accelerate because of things like robots and other pieces like that.
Sure. So I don't even think we need to look at robots to see why it'll accelerate. So over the last few years, there have been like a bunch of different levels of breakthroughs in regular data center AI, right? So, robots, self-driving cars, all other AI applications at the edge sit even on top of that, right? So let's back up and even just like talk about data centers. Every time there's a breakthrough, whether it's like a breakthrough in efficiency, power, cooling, whatever, right? So like think about DeepSeek, think about breakthroughs that NVIDIA's had in like software and hardware, think about how much the performance of each chip goes up generation after generation. When all of that performance goes up, costs for AI go down. The big mistake that a lot of investors make is saying when costs go down, companies that are supplying it make less money, right? It costs less, so they should be making less money. But in fact, there's something called Jevons paradox, which is basically saying, hey, when costs go down, more people adopt it and use it more often relative to the cost, right? It's cheaper to use, and overall demand goes up. So like, let's think about air conditioning. Air conditioning just goes down far enough so that it can be in every home. Every home uses it. And all of a sudden, even though the cost for air conditioning went down, now every single home has it. Every single office has it. Every single car has it, right? And overall demand for air conditioning has gone up. And so the prices for air conditioners and the sales volume and the overall revenues have gone up versus when it was more expensive, right? So it's a little counterintuitive. It got cheaper, but so much more got sold. Yeah, go ahead.
I have an AC fun fact for you. Sorry to cut in.
Yeah,
Do you know what the first building in the US to commercially use AC to cool people was?
The White House?
It was the New York Stock Exchange.
Oh, that, I mean, makes perfect sense, right? That's where all the money is. So of course,
Yeah.
yeah, that's cool.
Sorry to interrupt. Yeah, you were
No,
saying.
not at all. That is a really cool fact. Okay, so hopefully that illustrates like the same thing is happening with AI, right? When there's a breakthrough, when there's an efficiency breakthrough, more people use it, right? I don't know if you remember, but like 2 or 3 years ago, using these same AI models costs like 10 to 100 times more, right?
Yeah.
Now it doesn't, so students can use it. Nurses and doctors are willing to try it. Like every industry is willing to try it because it's cheap enough to try, where 2, 3 years ago it was prohibitively expensive, right?
Well, they've made different plans there, it feels like, because if you're on Fable now, you're burning through tokens, right? So
Yeah.
it feels like there's scale.
Yeah, totally. There's always a scale, but even at the lowest scale now, it's genuinely usable, right? So let's say you're not paying for Fable, you're still getting Claude Opus 4.8, which is like definitely good enough for like, hey, I want
Right.
to try this AI thing out. I want it to summarize this. I want it to help me with that problem, whatever, right? Like, okay. So prices go down. When prices go down, demand goes up exponentially. When demand goes up exponentially, we've now circled back to the start of this conversation where it's like memory can't get production increases exponentially, right? Factory floors, too complex, right? All the things I just said, I'm not going to say again, but it's like those same improvements are getting made every week, every month, every model, and on multiple fronts, right? Like when cooling gets better, all of a sudden you can run the same data center at higher power. Higher power means higher throughput. Higher throughput means more people served. Demand goes up exponentially. Supply does not, right? Like so when they say they see um like revenue visibility and demand out, 10xing and whatever, it's not any one thing causing it.
Mm.
It's like all of these things put together that are driving the cycle up. And I do agree and do believe that it's going to be a cycle for at least through 2030, if I had to guess, if not longer, just because the pace of innovation so fast, hardware takes so long in advance to make, right? The lead times are 2, 3, 4 years sometimes from design to like implementation in a data center. So yeah, they have to see that far out to say, yeah, we're willing to commit to the next, HBM5, right? Like starting that conversation now, that the HBM5 chips might be out in 2 or 3 years.
Well, speaking of HBM5 and upcoming chips, you probably know this better than I do. I know that there's people that look at NVIDIA's GPUs and how we had, just people were looking and saying, I just filled a warehouse full of this GPU, and a year or two later, it's useful still, but it's not cutting it in comparison to the latest and greatest, and that was causing some strife. Is that happening as well in the memory world with these chips just continuously improving? And people are like, I just bought a ton of these chips and filled my warehouse with them, and now I've got to replace them if I want to be able to do what everyone else is doing and have the best AI models and pieces like that.
Yeah, it's an interesting question. So traditionally, high bandwidth memory is like part of the NVIDIA chip. So it's like it's hard to like disentangle them. Like
Differentiate, yeah.
yeah, just because like, there is some like rack level memory, but usually HBM is like tied directly to the processor. It's the thing that feeds the data to the processor fast enough so it can
Got it.
process. And that's why those things are co-designed, right? Like if you have a processor that's much faster than the memory, the processor sits idle. If you have memory that's much faster than the processor, the opposite happens, right? So it's like
It's the same
there's
issue.
like a
Yeah.
delicate balancing act between them, but traditionally they're on the same like circuit board. They're not the same exact chip, but they like work in tandem to like do the calculations. Does that make sense?
Yeah, it does. It does. A couple surrounding pieces. Where does something like Nebius fit into this for you?
Yeah, so like Nebius, CoreWeave, IREN, right? Like they're all benefiting because they tend to get the latest and greatest AI hardware. They're directly partnered with a whole bunch of companies, definitely including NVIDIA, including Meta Platforms, right? So these neo clouds, right? They're standing up a lot of the AI infrastructure, the latest and greatest AI infrastructure, so that other enterprises that want to use AI but don't want to set up their own hardware, can sort of just jump in and subscribe to Nebius, IREN, CoreWeave, all great companies. So I think these guys are direct secondary beneficiaries, right? They're not the ones designing the chips, they're not the ones selling the chips, but they are selling access to the chips that they buy, probably at great discounts. They get helped with funding all the time by, I'll call it these sponsor companies in NVIDIA, in Meta Platforms, in Microsoft, and Amazon, all of which have like deep partnerships with all three, I believe.
Yeah.
So yeah, another great way to get secondary exposure to the AI supercycle, right? Primary would be something like buying NVIDIA or Broadcom, SK Hynix or Micron, right? Like the actual chip makers, the chip designers, TSMC. And then the secondaries would be like NeoClouds or ASML or, insert the piece down the chain from here, right?
Yeah, it makes sense. TSMC as well. That seems to be like that could be like the ultimate bottleneck, couldn't it?
100%. So like fun fact, for high bandwidth memory specifically, even though memory makers do most of their own chip making and packaging, some of the more advanced stuff still has to be done at TSMC. So SK Hynix makes, I want to say like 98% of their own chips, but there's a part of high bandwidth memory that's like so special and so specific, it gets shipped over to TSMC for that part and then shipped back,
Yeah.
So
I had a follow-up question on the air conditioning comparison because
Sure.
You mentioned, AC is in everyone's cars now, and it's something that's really used by the everyday person almost everywhere. And that's led to, like you talked about it, the growth of that industry. Now, when you talk about AI, it seems like it's far more concentrated in certain spots. Like, yes, I use AI, you use AI, but are we really, even if another, is a billion more people adopting basic use of AI comparative to giant corporations, building out these warehouses and really leaning into it? It seems like that's where the drive is coming from.
It's a good question, and I actually don't know the answer. I don't know how much of AI demand is coming from enterprises versus from individuals. But my mom uses AI. Like that's the ultimate, to me, marker of commoditization, right? It's like my mom is an elderly lady, and when she's talking about using Claude or Chat GPT, my guess is it's everywhere. Everyone's at least tried it. Everyone knows how to log into it. Everyone's tried a prompt.
Right,
Even
but
if
you say that, but you've seen the graphics.
Yeah.
Like 80% of people in the world still have never even touched it.
80%, is that the?
It's that's the graphic that's been being shared this year. Maybe it's updated from then, but it was like it showed like 80% of the people in the world. Now, mind you, we also live in America, and it's a little bit different. But certainly, you would think over half of the world has never touched AI, and probably 5% are meaningfully using it. Like your mom sure uses AI, but she probably uses it like Google, like my mom, right? It's just like,
Totally, yeah.
like, hey, like here you get better answers. They're not using it like, going in and like, all right, model for me, these pieces and then design me a website and build me these things around it. So I really think that the amount of people that are meaningfully using AI is still very small.
The only pushback I have, so I think that's a great point, right? Unlike air conditioning, which is largely on or off, right? Like you have it or you don't, and you use it when it's hot or you don't, right?
Correct. Yes.
I would argue that using AI is more of a spectrum. So the only word I'm going to push back on is the word meaningful. So if my mom decides to use Chat GPT instead of Google because she likes generated answers better than retrieved answers, right? Like pointing to
It's just
websites.
Gemini though now anyway. Yeah.
Gemini, right? Yeah, what have you. I would say that is a meaningful use of AI, right? Something that was fundamentally part of her day before, right? Search is now something that she leans on AI, where 2 years ago she certainly didn't. And she's definitely on the lagging side of the adoption curve, is what I'm trying to say, right?
Yeah.
Yes, you're right. I agree that like the basic case for AI is search, and that's the most basic, least interesting use case for it. But the other thing I'll push back on slightly is I bet a lot of people are using AI or at least interacting with AI without even realizing it. So, for example, Meta Platforms reported that 3.5 billion people every month engage with Meta AI, right? So they may not realize they're doing it,
Yeah.
but AI is serving them certain things, for example, ads, for example,
Sure.
offers, for like, so even though they're not using AI, they're certainly engaging with it and on platforms that force that engagement, right? So
Yeah.
they're
Yeah,
taking
yeah.
tokens, is what I'm trying to say.
Okay. Yeah, that makes sense. It's certainly a different level, right? We could agree, right? Maybe they're using a couple thousand tokens a day versus some of these companies that are going through millions and millions of tokens.
Totally.
But yeah, I hear what you're saying. And listen, it's the first step towards adoption. And even myself, the way that I'm using AI is very different than it was a year ago. And I would say it's,
Totally.
Gone from where I was using it for search to where now I have integrated it and has access to my emails and my calendar and
Totally.
all those things.
I will tell you, like, I guess I don't care if I admit this, right? So I have AI fact check every single piece of content I create now. First thing I do is I just like paste, I write it myself and then I paste it into an AI and I'm like, yo, make sure I'm not about to say anything stupid, crazy, or wrong. You know what I mean? So my audience is getting like 10 times the fact checking they used to, just because you as a human, you can't fact check every single number every single time, you do the best you can. But with AI, I've sort of been able to really shore up, the research and the like quality of my content in a way that I couldn't even pay a human to do 2 years ago if I wanted to.
Yeah, it makes sense to me. Okay, back to your engineering cap for a second here, and flipping back to SK Hynix. I've got kind of two questions here. The first is going to be a little bit more technical, but it seems like from an engineering standpoint that scaling memory is much more difficult than scaling GPU production. And I'm curious as to why.
Scaling memory.
It's
much harder than scaling GPU production.
That's what I've been seeing just from some of the pieces I've been looking at. It basically is pointing to it is just more difficult. It is a slower process to scale memory than to scale GPU production.
Yeah, go ahead.
Yeah, I was just curious if you had any insights on that.
So the only thing I could probably point to for that is because of how high bandwidth memory is actually architected, right? So like when you think about a GPU is a chip, right? It looks like this. It's, roughly a square, right? Like, it has some thickness, but overall it's basically a, one chip. High bandwidth memory is actually like a cube. It's like, a chip stacked on top of another chip, another chip, another chip, and there's like 3D interconnects between them made of copper that make it all act as like one memory cube, so to speak. Making things in 3D is like much, 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 much harder than making things in 2D. So if I had to guess, it would just be by virtue of like your 3D stacking chips and connecting them, and like at any failure point, you have to throw the whole chip out. And there's just a lot more moving parts, a lot more ways they can go wrong because you're stacking in 3D. And again, that probably goes back to the same thing as like why it takes up twice as much floor space on a factory, why the yields are lower, right? Like, I guess that must be true because now we're saying the same thing from different angles, right?
Yeah, exactly. And then on the other side of that, with understanding that it is a little bit of a slower process, and NVIDIA is relying on SK Hynix, right, to build in tandem with them. Could it be I mean, how necessary is it for SK Hynix to hold to these timelines in order for NVIDIA to be successful with the rollout of their product?
Extremely. There's no like AI super chip without high bandwidth memory. If it's true that SK Hynix will end up building 70% of Vera Rubin's high bandwidth memory, then if SK Hynix is lagging behind in their design or in their production, because remember, just like Intel, they design and make their chips, right? So if either of those falls behind, there's a production delay or a design delay. Yeah, I mean, the whole industry is going to feel it, definitely starting with NVIDIA, but then think about all of the companies that rely on NVIDIA that are also going to get like their milestones delayed. And then think about when models get like another 10 times better, but now they can't run at peak efficiency because the chips can't keep up. And, it's going to have this like huge cascading effect. So yeah, the pressure is definitely on for sure.
Dude, imagine if Elon was the CEO of like a company making memory chips right now.
Yeah. Yeah. I mean,
that'd be so wild.
It would be. Yeah. I haven't been following Elon's journey since the SpaceX IPO. So
yeah, that'd be wild. He'd be like, all right, guys, we're gonna have these ready next year. They'd be like, are you
next
sure?
Year. Yeah. Good luck.
It's supposed to take 3 years. Yeah. I think it's also a funny story as well, as if you look back, like where SK Hynix came from. Have you kind of looked at some of the history with Hyundai and those pieces?
No.
Yeah, so
No.
SK Hynix was a spinoff of Hyundai.
Okay.
Yeah, like 20 years ago. So basically, the chairman of Hyundai, they were trying to build it. I think they saw this future with cars and chips and pieces like that. And so it started happening. And like 20 years ago, they spun it off into its own company, which was at the time, I believe, like Hynix or something. And then it got acquired by SK Group, which owns like a ton of stuff over there in Korea. And so it's just interesting to me that like really this was driven by a car company, and then it's going to come back around and be what allows cars to drive themselves.
Totally. Yeah, I think Hyundai is really a sleeper like leader of innovation. So Hyundai also owns Boston Dynamics, so we could see it come full circle that way too, where SK Hynix's memory shows up in these like fancy robots that Hyundai also owns, right? So yeah, that's awesome.
Yeah, it is pretty cool. We're going to move into here kind of a last 5 minutes for this stream right now. Is there anything first off that we haven't touched on that you'd want to cover in terms of SK Hynix, the IPO, memory, investing, pieces like that?
No, I actually think you did a great job bringing up, I think, the most important topics. I think, I'm curious to see what their valuation lands on at close and on Monday. I think that'll give us like a better sense of, is it worth buying this stock right now? Is it worth, what do we do with this listing, right?
Yeah, you had mentioned, you're pretty entrenched in Micron, so that's the only reason why. But is there a valuation that if SK Hynix dropped to that you would be like, all right, I got to get in?
It would be a valuation relative to Micron, but yeah, so I think, if it came down to even like 750 billion, 700 billion, somewhere around that, now the discount relative to Micron, if Micron didn't also drop for some like larger macroeconomic reason, now it's like, well, wait a minute, this company makes more of the memory, it's trading at a much better valuation and I would probably just 1-for-1 swap them at that point. I would take all my winnings in Micron and I would say, okay, I still believe in the memory super cycle, and I would just put it in SK Hynix instead. That's tough, right? Because, there's always like capital gains tax and like, all of these things that I have to consider.
Not if you live in Puerto Rico, but yeah.
Oh, there you go. Yeah. I live in Florida. So, the federal government still gets me on those things.
It's fair. What are some of the videos coming up that you're going to be putting out?
Yeah, so I'm doing an SK Hynix deep dive that'll come out next week, just because like it takes me a while to just get through the paperwork and be thorough, and I don't want to like rush it out. I know everyone, is looking forward to it. I want to get more into robotics. I do think that Edge AI is starting to creep up a lot faster than I expected. The things that are holding it back now are really like the mechanical and the sort of servo level things, not really the AI anymore. So it'll be really interesting. I'm developing like a serious interest in like Edge AI cases, self-driving cars, and robotics specifically. Yeah, I think there's going to be a follow-up quantum computing video. I think a lot of people are interested to understand, like, as things move to Edge AI, how does quantum fit into that picture? Like, does quantum play in Edge AI at all? Or is it something that's a data center? Or is it just a really specialty research thing? So we have like a wide variety of topics. I think, in my opinion, the news cycle has been like pretty slow this summer. So I'm going to be working on a bunch of like passion projects like that, right? Robotics, quantum, memory, things like that.
Makes sense. Excited to see that. And then, because this wasn't really the focus for today, but we were just going to talk about it, just any general thoughts on the SpaceX IPO that happened?
I made a SpaceX. Oh, it looks like my video cut out. I can't tell, but can you still hear me?
I can still hear you. Yeah, I think both of our videos are on pause for a second.
Oh, there you go.
Tech team will fix it on the back end, but yeah, we can keep talking.
Sweet. I'm not a huge fan of like roll up companies into roll up companies into roll up companies. So let me be specific. SpaceX owns XAI, which owns X, formerly known as Twitter. So like, I think SpaceX is awesome. Full stop. I think that's a wonderful company. I strongly believe in making humanity a multiplanetary species. Like, I've been a fan of SpaceX for as long as I was a rocket scientist, full stop. But what I don't want to own when I buy a reusable rocket company and like Starlink and stuff like that, I'm not trying to buy Twitter, I'm not trying to have 93% of my total addressable market be AI, right? Like, I want to buy the reusable rocket company. I want to buy Starlink. I want my dollars to go to that. And like, if you buy SpaceX stock today, something like 95% of all the money you put in will never leave Earth, right? Like, fundamentally, it's all about data centers and X, right? Like, so it didn't end up really being for me, not just, again, SpaceX itself, love it. Starlink, love it. But everything that got rolled up into it ended up making me avoid it, to be honest.
Got it. And then one other, and this is not a recent IPO or anything, but I just think it's a really interesting one in the AI space, is Meta. We spoke with Hamid earlier today, who thinks that Meta is actually getting a lot of companies are getting an AI bump. He thinks Meta is getting like an AI decrease. Like people are
Yeah.
actually punishing them for their AI investments.
Yeah.
But that a lot of people are looking at Meta, and you mentioned Meta, you know, half the world is somehow using AI because of Meta. How do you look at Meta in this AI spectrum?
I think Meta is like the sleeper biggest winner of like like, let me back up. Besides like Nvidia and like the core companies like directly supplying it, I think Meta will be like the biggest winner of the AI revolution. So, you know, one of the things that Meta is doing is they're aggressively investing in AI infrastructure, right? And everyone was punishing them for it, but then it was like, well, Meta's willing to sell any excess compute they have. They're willing to be a neocloud, right? So that, you know, Bloomberg reported that, I want to say like a week ago or so.
Is that a good thing though?
It's a great thing. So like think about going back to SpaceX, right? So SpaceX built Colossus 1 and Colossus 2, and then they ended up renting out Colossus 1 to Anthropic for a lot more than they paid for it, right? So they had this excess compute just because of the way Colossus 1 was built. And instead of doing nothing with it, which is what everyone's big worry is when it comes to Meta, is you're building all this infrastructure. What if it doesn't get used up? What if it's a waste of money? What if you don't get a return on your investment, right? And then, you know, they're like, hey, we'll rent it out. There's no problem here, right? Like there's infinite demand for this. If we don't use it, somebody else will. And then the stock shot up like, I want to say 9% or something. So I think a lot of people are not seeing the forest for the trees on Meta. Yes, they're investing aggressively, but this is, they win on two fronts. One, they serve literally half the world's population. Like I want to say almost 4 billion people use Meta's products and services, right? It's like, maybe it's like 3.7 billion, but it's insane. And those are daily active users, by the way, not monthly, right? Daily active users.
A lot of those are WhatsApp in developing countries. Yeah.
Yes. Sorry. WhatsApp, Messenger, Facebook. I'm blanking on one, but Instagram. Oh my God. Instagram. Right. So, okay. And then if they somehow, yeah, totally. So if their supply exceeds demand somehow, which Mark Zuckerberg has said, like the reason we're not a neocloud is supply does not exceed demand ever. But if it did, they're like, we'll just rent it, man. Like these are GPUs. We'll go sell them. We'll be a neocloud, just like CoreWeave, Nebius, and Iren, right? Like, so they have the ultimate hedge, which is if they don't use it, somebody else will. So I don't understand how Meta trades at such a deep discount, given they're the biggest, most prolific server of AI, and they have dual uses for that infrastructure, either for themselves or for literally anyone else who wants it. So
I love it. I could sit here asking about AI companies all day, but I want to be respectful of your time. We've been running for almost an hour here. Have to get you on again soon for a Riverside proper recording, but we were doing the all day live stream today and we had a great audience for it. So I wanted to get you in here. Any final comments for the audience before we move to the next segment?
No, I'm looking forward to watching the rest of your live stream. Good luck. You know, this sounds like an awesome thing to be doing, so I'll be watching.
Super cool. Yeah, we've got Stock Talk Weekly coming up here in just a second.
Awesome.
So it should be a really good piece. Alex, thank you so much. One of my favorite tech investors to listen to. Everyone should be following ticker symbol U both on Twitter and on YouTube. Appreciate you as always.
Likewise. Thanks for having me.
Thank you. All right. Big thank you to Alex for being a part of this stream. Make sure you're following him on all platforms. Before we go to our next speaker, we're going to have Stock Talk Weekly in here in just a second. I know he's a crowd favorite. We host Stocks on Spaces together from Monday through Thursday. Well, him and Evan, I hosted it for a few years, and so I'm excited to hear his thoughts. We're going to talk largely about the memory trade and the AI trade as well, and how he finds top picks within there. Before we go into that, you can see on the screen right now, for those that are looking to get exposure to SK Hynix from a trading perspective, right? So you have people that have talked on here today about, hey, I'd like to wait for this to come down a little bit. Well, if you're someone that thinks it's going to come down, here is a potential way to play it, right? SKHZ. That's going to allow you to have 1x short exposure. If you're on the other side saying, hey, this is undervalued in comparison to Micron already, I want to get my exposure, but this isn't necessarily a long-term hold for me. I want to trade around it. SKHX gives you that 2x exposure to the long side. Not long-term products, but great trading products from our friends over at Leverage Shares. So big thank you to them. I want to give a shout out to them, and you'll see these products go live on Monday, Tuesday area. So keep an eye out for them. With that being said, Stock Talk Weekly is joining into the stream right now. Super excited to have him here on stream. We have done a lot of audio content, me and Stock Talk, not a ton of video content together as of late. So excited to have him bring it into here. For those that are familiar, Stock Talk, one of the most popular pages on X, as well as one of the most popular Discords out there. He has built a community of hundreds of thousands of people that follow along his swing trading and growth stock analysis, runs Stock Talk Insiders, premium community putting out daily trade ideas, well, maybe weekly sometimes, across every sector, memory chips included. Let's welcome Stock Talk Weekly into the show and bring him in here. I've got Evan on screen for a second. Let's see if we could get Stock Talk plugged in right there. And Stock Talk, if we get your video on. Yeah, I got you.
Yeah. Can you see this? There we go.
Yo, what's cooking?
My camera might be a little blurry. Hold on.
You're good. You're good. Don't worry about it.
How you doing?
I'm good, man. Happy Friday. Market's closing out the week. Another $1 trillion IPO. Just another day in the life.
Yeah, I know. We have plenty of those now. Seems like we have a lot of those. How many $1 trillion companies are there now?
SK Hynix, I believe, would be the 16th or 17th, something along those lines. Evan, maybe you can tell us. I feel like this is the type of stat that you're paid to know off the top of your head.
16th largest, stat that.
But how many total $1 trillion companies?
16, stat that.
There you go. Stat that. I was right on the first try. But yeah, 16 of these, and probably more to come soon if you're looking at this market right here. So Stock Talk, I know that, maybe you can give any general thoughts on SK Hynix, but, bigger picture here, this massive memory trade, which has surged in the market here. SK's up 800% or so over the last year and a half, and you have so many others that have followed along with it. I know that you're looking to be ahead of the pack, so probably not, necessarily buying the $1 trillion company, but I'm sure that there's some others in this area that are applicable for you. So what are you thinking as you see this happen?
Yeah, I mean, there's an oligopoly in memory. SK Hynix is one of the names that's in that oligopoly. For years, that industry has been dominated by really three companies: Samsung, SK Hynix, and Micron. Micron being the American of the group. A lot of this year, our market has traded kind of in line or in step with the Korean market, the KOSPI index, KOSPI. In my entire career, I never remember a time where I was watching the Korean indexes as closely as I've been watching them this year. And I think that that's true for a lot of investors out there, even hedge fund guys who, aren't used to. I mean, we're the big bad dog when it comes to equity markets. We're a $70 trillion equity market. We're the greatest equity market to ever exist. We kind of dictate the pace when it comes to global equities. When the U.S. market is down, generally global markets are down. When the U.S. is a recession, generally there's a global recession. So it's weird. And I imagine the Koreans have a renewed sense of self-importance that our stock market is trading kind of in step with theirs. And I mean, there's a lot of reasons for that. The memory trade has kind of been the centerpiece of this year. Those stocks have gone absolutely parabolic. And so from that perspective, they're the sentiment leaders. We saw this in the very early stages of the AI trade. NVIDIA was the sentiment leaders. Every quarter, people would be wondering, what's the NVIDIA earnings result going to be? And is that going to float the market? Then it kind of graduated to the photonic stocks like Light and Coherent, et cetera. And those stocks had a big run over a quarter. The market, the AI trade kind of was centered around those names. And then the ball was passed to memory this year. And now those stocks kind of dictate sentiment. And when those stocks are down, you tend to have suppressed sentiment in the overall AI trade. And so the puck is kind of moving from group to group to group as the bottlenecks get discovered in different categories. And that's leading to a very, very volatile trade, as we've seen. This year has been very volatile, much more volatile than last year in terms of the up and down action. And so, yeah, now here we are with the SK Hynix IPO. It's played a big role in Korean markets this year. Samsung and SK Hynix have basically been the dictators of the entire Korean market for most of this year. And now it's on the US exchanges as well. And yet another $1 trillion company added to the mix. So quite a few now. I'm sure 10 years ago, if you told people there was going to be $16 trillion companies, they would have laughed at you. But that's where we are today. There's a lot of them. So, yeah, quite a bit of euphoria in the markets.
Yeah, for sure. Yeah, Evan.
My first thought there was 10 trillion company feels like a crazy number right now. It feels like we might be going into that direction.
Having a $10 trillion company?
I'm kind of asking, when does $10 trillion, when the same thing that happened with $1 trillion companies not being that crazy anymore, it's going to happen with a $10 trillion company. My question is, when? Is it a this decade this thing? Is it a this decade thing?
I
Or is that
mean, it really depends on how long this bull market can continue. If this bull market can continue for the better part of the next 5 years, then yeah, probably. I mean, you already have companies trading at, I mean, what's the highest market cap in the world today? 4.5?
Yeah,
5.1?
really? Wow.
5.1.
It's Nvidia, but
Nvidia?
Yes.
I don't see it.
Apple's second place, by the way, which we've had conversations about never being in first place, but it's for another day.
Yeah, that's a bit. I mean, that's a bit insane to me in hindsight. I mean, I think when I started trading, it was even crazy to be $1 trillion company, and now we have so many of them. Yeah, I think it's within reach. I think it's possible. Especially now that we already have companies worth five. I mean, I think it's possible to get to that 10 trillion mark eventually. I mean, all that would have to do is for those stocks to double. Now, I do think that the ball gets passed pretty readily when you have companies trading at multi-trillion-dollar valuations. Like we saw this with Apple for a while, when Nvidia was emerging. We saw this with Google this year, and last year. And so I think that there's more willing rotation when you have companies that are that big, because people just don't see as much upside. They look at a stock and they go, do I really want to be buying a 3, 4, $5 trillion stock? How much upside is there? I think that's frankly a lot of the reason why Nvidia stalled so much over the past. I mean, basically Nvidia is flat over the past year, I think. I'm gonna go pull that chart up. Pretty sure like roughly flat over the past.
20,
I mean,
27, 28%. Yeah.
let's say maybe like the past 9 months, it's relatively flat, right? I mean, back in October of 2025, it was trading at $211. So yeah, past 8-ish months, it's flat. So I think that's I don't want to say it's a corroboration of the idea that there's rotation when companies get big, but I think that when companies get really big, people feel like there's limited upside. You kind of become detached from the idea of you kind of become attached from this idea of stocks being purely related to their fundamentals once you get to a multi-trillion-dollar valuation, because then it becomes a matter of people trying to envision upside for the stock, and they think about it in absolute terms as opposed to fundamental terms, right? They don't think about it anymore in terms of what are the earnings, or what are the what's the revenue, or what's the revenue multiple. They start thinking about it in absolute terms, like this company's worth $4 trillion. What's it going to take for them to be worth $8 trillion? And on the other hand, when you have a company that's worth $100 billion, people don't think that way. They think, okay, what's the PE ratio? What's the price to sales ratio? What does the chart look like? Can this company become a $200 billion company? I think they stop thinking that way once you cross that $1 trillion mark. I think it gets harder to recruit new buyers. So, yeah.
I want to rotate away from the $1 trillion companies and talk about the
Yeah.
ones that you're actually interested in buying. Like when you go downstream here, right? You're super interested right now in robotics. I think that's a downstream area, really related to the memory trade and a couple other pieces. So what's actually interesting to you that's coming out of this besides another $1 trillion company?
What am I looking forward to besides another $1 trillion company in this space, in the memory?
Well, in general, yeah, memory, robotics, AI, right? There's a lot of stuff to trade here. I think seeing another $1 trillion company is just one symptom of the overall trade that we're seeing, and I'm curious where you're playing within that.
Yeah, I mean, I'm playing in a lot of different categories. Right now, I have in my portfolio, I have several thematic baskets. Robotics is a big focus of mine. Agentic AI is a big focus of mine. Power infrastructure is still a big focus for me. Recently, in the last couple of weeks, I've been upping exposure to solar.
Why solar?
Well, 6 months ago, I didn't want to touch it. Well, really, 9 months ago, I didn't want to touch it because the Trump administration was they still are, was very against solar. And I usually don't want to fight the presidency. That's not generally a good investing philosophy of like, hey, like I want to buy stuff the president doesn't like. But I think at a certain point, the way I think about stocks, and this is often the reason why sometimes I'm a quarter early or a month early to some of the trades I make, is because the way I think about stocks is in terms of asymmetry. So like, what is the risk reward for buying a stock at a certain juncture? And in order for asymmetry to really work, you need to have something bad. You need to have a negative. Like, and that's the hard concept to understand, especially for new investors, because they want to buy stuff where like everything is amazing, right? In order to have true asymmetry, to get asymmetric returns, right? Like for me, every year my goal is to put up triple digit returns. It's not realistic to do it every year, but I've been doing it for 5 years straight with this philosophy, which is that you sometimes want to buy the stock that has. No, I'm not talking to you, Siri. Sorry. Sometimes you want to buy the stock that has a negative overhang or has something overhanging it, and you see a better story emerging underneath the surface. Like in the case of solar, I think that the political rhetoric, the negative political rhetoric, has now become at severe odds with the actual deployments of solar. As much negative political rhetoric as there is against solar, the deployments of solar have picked up rapidly in the last year. You know, now solar is the third largest generator of electricity in the entire country, behind nuclear and natural gas. 10 years ago, that wasn't even a remote possibility, right? It overtook coal this year in May. So May was really the juncture where I saw that happen.
Really?
And then I started thinking, okay, I want to start getting some exposure. So June, I started doing some research, and then end of June, start of July, I've started picking up some exposure. So maybe I'll be a quarter early, but I think at this point, the valuations for solar have become disjointed from reality. And I think, you know, the deployments nationally are picking up rapidly. So that's just one area. I mean, robotics is another area where we've been long now for several months. I know now it's starting to pick up steam as an area of interest, but one of those names, VPG, for example, we bought at 53 earlier in the year. That stock's trading at 100 plus now. So that stock doubled very quickly. And there's quite a few other robotics exposures that I have, you know, OSS from last year, which has been basically a 4x, 5x at the peak, but 4x for us even still after the drawdown. And so there've been a lot of robotics, edge AI, agentic AI, solar. These are kind of been my areas of focus for the most part. In the memory trade specifically, to SK Hynix's point, there aren't many mid caps that are true enablers in the memory trade. The memory trade's an oligopoly. You know, there are three big boy producers, Samsung, SK Hynix, and Micron. They make basically all the capacity. They're essentially a price mafia. They control the price by virtue of how much they're willing to produce. And so for me, that trade, while I don't dislike the trade, you know, there's people that were in the memory trade earlier that I was rooting on. While I don't dislike the trade, I do think that it's not for me because A, the companies are too big, and B, it's really difficult when you're trying to guess a cycle breaking. You know, in the case of solar, that's what, or sorry, not solar, in the case of memory, that's what people are trying to do. They're trying to guess that this cycle is going to be longer than previous cycles, that's going to have a higher peak, and that the peak is going to last for longer. I don't think that that's a bad thesis, to be clear. I think it's a decent thesis because AI is this new exciting thing, and it is changing the way semiconductor industry operates. You know, semiconductors for a decade have been viewed as this very, very cyclical industry where you have people that acquire chips in huge quantities, they get the chips that they need, and then there's downtime. And then next year in the next cycle, they buy chips in huge quantities, you know, last 3 or 4 or 5 quarters, and then that accumulation cycle ends. That's how chips have always worked. And so and during these down cycles, what these companies do is they build more capacity. So then the next up cycle, they can sell even more chips. And this is kind of how it's always worked in semiconductors. But AI is breaking that. AI is changing that. We've seen this with NVIDIA's growth. NVIDIA posted so many high growth quarters in a row. They'll probably post another high growth quarter in the upcoming quarter. So the cycle is broken. And so that's what people are betting on with memory.
Yeah, that makes sense to me. I feel like you were one of the people that I knew was using AI at a pretty active level, having all these conversations with it, doing research back and forth. Obviously, that was at a time where that was what a lot of people were using it for. And now that's really scaled, right? And you have industrial demand, right? And Meta's having to like limit people from how much they use because people are spending so much money on this, and it's just continuing to grow. How have you personally, I guess, continued to escalate your use of AI? And do you kind of, I guess, use that to compare and see out there like, okay, maybe a lot of people are really escalating here and that's causing further demand, and that allows me to see areas of the AI trade that I might want to participate in?
Yeah, I mean, I've used AI more and more, like basically every day since it's come out. I mean, I was pretty much a power user of ChatGPT from day one. As
Yeah.
soon as I realized what it could do, I was very, very interested in it. I would say the capability in early 23 versus the capability now in early 26. It's been 3 years. It's kind of crazy to think about that. It doesn't even feel like 3 years. It's gone by quickly, but um, it's night and day. Like what AI used to be able to do, what these models used to be able to do 3 years ago compared to what they can do now is like it's a complete step change. So for me, my perspective is mostly centered around research. And so that's what I've noticed a difference in. Their ability to do deep research and compile that research effectively has changed dramatically. But for people that are in coding, for example, I talked to a lot of those people as well. That's changed dramatically as well. The capabilities of AI to code seamlessly has changed dramatically as well. So I really think that in order to assess, like what you're saying, to assess the durability of this cycle, you have to ask yourself how much more capable is AI going to get and how much more quickly. And I'm in the camp that it's going to continue to advance, if not at the same pace. And even if it does, even if you equalize the pace of innovation, I think it's going to advance much more rapidly than people expect. And the big reason for this is all this spend we've seen from the hyperscalers, hundreds of billions of dollars of spend in the last 9 months. The products of that spend aren't online yet, right? Like the data centers that they're building are under construction, right? So what happens to these models when 5 million new NVIDIA GPUs go online
Yeah.
and they're all available for training and inference? I would imagine they get a lot better really fast. And I mean, that's a guess. Obviously, I don't know for sure, but I think it's a pretty safe guess. Like, I think it's a pretty safe bet to say that. So we're right. If you think about all the improvement in AI from 23 to 26, it's on very little spend. I know there's been a ton of spend, but that spend hasn't materialized into actual data centers yet. When that spend translates into data centers that are up and running, and those GPUs are going into the training flow and the inference flow, then we'll see how capable it really is. Right now, there's a huge constraint on token availability. And anybody who's a user of AI has probably noticed this. Prices for token APIs have gone way up. If you're using the free versions, you've been rate limited or your responses have deteriorated. If you're using the $20 versions, you've been rate limited or your responses have deteriorated. If you're using any of the flat fee versions or any of the free versions, your models might have gotten worse over the past 3 months. Not because the models are worse, but because there's less tokens available. And when you think about these companies, what they're really doing is they're doing token arbitrage, right? If there's X amount of tokens that you have available for inference as a company, are you going to give them to the people that are using this stuff for free? No. Are you going to give them to people that are paying $20 a month? No. That's nothing. That doesn't help you at all. What you're going to do is you're going to prioritize the availability of those tokens for people who are paying for it by the token on the APIs, these enterprise clients, right? And so
Yeah.
I think in a way, frontier model companies are going to become the errand boys for enterprise companies, because enterprises are the only ones that can afford to pay for tokens at scale. Your average Joe Schmo isn't going to spend $25,000 a month on tokens. I mean, it's just prohibitively expensive. And so enterprises can afford to do that. And so that I think is the distinction. That's probably what's going to happen, is that these frontier model companies, Anthropic and OpenAI, namely, I think even Grok to an extent now, because Elon's pushing the envelope there and trying to advance rapidly, I think they're going to focus more on the enterprise than the average user. And so I actually think the advancement in AI will be less obvious to the everyday person and will be much more obvious to companies that are using it. They will see the true productivity because they're going to be the ones that get access to the best models and the greatest amount of tokens.
Do you use the enterprise plan?
I use the pay for token plan. Yeah. And there have been times where I've regretted it because, sometimes I'll just get into these rabbit holes on research and I'm like, oh my God, I spent $3,000, but yeah, so I do spend quite a bit of money. I mean, I think last year my API bill was like north of $4,000. So I spend quite a bit of money on it. This month it'll probably be higher. I'm off to a pretty high use start to the month. So yeah, I mean, if you can afford it, I think it'll blow your mind. The capability difference, it's night and day. Like I've compared the responses on. I have one of those pro accounts on GPT as well. That's like $200 a month or whatever. I've compared the responses to that versus pay by token, and it's night and day. It's like not even the same thing.
Interesting.
Like I would say, and it's the same model, but it's the same model without being token limited.
Right.
And so when I put these, like, for example, there are times where I'll feed a model 100 SEC filings, and I'm looking for something very specific. And I'm asking it to break down, organize, materialize, analyze all of this information. The $200 a month pro version of GPT can do it.
Yeah.
The analysis is very superficial. The token, pay by token, can do it completely. It'll sit there and think all night. Like I'll set up the prompts and go to sleep and wake up, and the pay by token will say thought for 4 hours and 36 minutes. And then the $200 version will say thought for 16 minutes.
Yeah.
And so it's just night and day. It's like not the same thing because, again, these guys are compute constrained, but the way that people should interpret compute constrained is token constrained. That is really what that means.
Okay, so as the money actually gets implemented and these data centers get built out and there's more tokens to be used, does that bring down the price of tokens? Do they just continue to allocate them to enterprises and keep prices high for people that are not as valuable to them?
Yeah. Hold on, give me a second. So just twofold. First of all, I think it works the way that any other supply demand equation works. So, if I'm banana constrained and I'm selling bananas, I then all of a sudden get access to, 500 new banana plants, I have a choice, right? I can either lower the price of bananas and sell more bananas, or I can decide to sell bananas to large buyers of bananas at a similar price and stay price sticky, So I don't think, like, the same way that prices are sticky in the real world, right? Like when we see inflation and the price of a PlayStation game goes up, when inflation comes back down, do they reduce the prices of PlayStation games? No, they still sell them for whatever they were selling them for, because once the consumer adjusts to price sensitivity, once the consumer is willing to pay more for that token, it is a pretty bad business decision to say, you know what? I know you were willing to pay, $5 or whatever for this batch of tokens. But now I'm going to charge you $2. That's just not going to happen, I don't think. So I think that the price of tokens will remain inflated.
Wow.
But I think the availability of tokens will increase, which means that I think the free models and the fixed payment models will get a little bit better, because I think you will have access to a little bit more tokens with them. And I don't think they're going to shun their free users as much as they're doing today.
It's well said. I saw your text. I could go forever with you.
Unfortunately, I know guests lined up.
I do have someone popping on, but let's get you back on. I know you're doing Stocks on Spaces all the time, but I'd love to do another video pod with you in the next week or two, and dive a little bit further into this AI concept. I think would be really interesting.
Yeah, we can do that. Absolutely.
Sweet. Anything else that you want to share real quick? Any shout outs to where people can find more of your content?
Yeah, we have a big server that we run. Obviously, the link's in my bio for that. My handle's at Stock Talk Weekly. You could check it out if you want. We have reviews available there. You can feel free to read them. And yeah, we just run a big community. I share my full portfolio, all my weightings, all my positions, all my entries, all my exits. Very transparent, win or lose. You see me winning or losing. And so I think that's what separates us. So if you're interested in a community like that, obviously our returns are very, very good. 5 consecutive years with triple digit returns. So yeah, come check us out if you're interested in that. And if not, obviously I'm always on Stocks on Spaces and jumping on streams and stuff like that. So we'll see you on that.
Beautiful. Appreciate you, man. Enjoy
All right.
the haircut's coming up. Enjoy the
Haircut's coming
haircut.
up. I need one. It's getting long. I haven't wear a hat. Yeah.
Have fun.
Yeah. We'll see you guys next week.
All right. We'll
All
talk
right,
to you
peace.
soon. Thank you, Stock Talk. Appreciate you. We've got one more guest lined up today for the audience. We don't have to run to a ad read in between here, Charles. I think we could just bring Paul in to this conversation because we are going to be talking here about the leverage shares ETFs and products that people can use to trade around SK Hynix. Now that it has IPO'd, these ETFs should be coming Monday, Tuesday area. So we're looking forward to them. So let's go ahead and just get Paul right into this stream. For those that are unfamiliar, let's give a thank you to Paul for making the memory trade tradable. Paul spent decades in asset management, has been a pioneer here, and he is the chief revenue officer at Themes ETFs, the team behind Leverage Shares. If you were here for the SpaceX day, you know this crew. They launched SSPC, and did over $500 million in volume just the first day. And now they're doing it again for SK Hynix with 2 brand new funds. Please welcome to the stage, Mr. Paul Marino. Paul, how we doing?
Doing great, man. How are you?
I'm living the dream. I've been running here for the last 5-ish hours. It's been a lot of fun. We've had 20,000 plus people tune in to this. We've got 100-ish or so on YouTube as well, which is so fun. Appreciate the YouTube chat that's been running all day today. People are super excited about this. And I know just like SpaceX, people are going to be ready to go to trade it when these products come next week. So what can you tell us about these upcoming products?
Well, let me give you an update on the date. So as of right now, just based on regulators and the exchanges, we're set to launch on Tuesday, the 14th at 4 a.m. If anything changes, we'll get out with notes. So check the website, either leverageshares.com or themesetfs.com, and we'll have updated news. But as of right now, we're set to launch both products on Tuesday, the 14th at 4 a.m. Eastern time.
4 a.m. Eastern time. Evan, that's when you wake up in the morning, isn't it? I feel like that's when he's usually starting to tweet a little bit about the markets here. So yeah, the products are going to be coming out. What else should we know about these products? Because it's not a 2x long and 2x short. It's a 2x long and a 1x short.
Yeah, we saw a tremendous amount of volume and volatility in SpaceX. As you mentioned, in its first week, it was the most traded ETF in the history of ETFs. And so we're really excited because what that shows us is that there's a lot of interest in IPOs and issues that are coming to the market in the United States for the first time. And while SK Hynix is an established business and an established company, been around since 1986 in South Korea, it's trading for the first time as an ADR in US markets today. So we know there's a lot of excitement around that. Then you take a step forward and look at the memory trade. So much interest in memory. It's one of the 3 largest memory companies on the globe. So we think there's going to be a lot of volume there too. So 2x long on the upside, we think there's going to be a tremendous amount of people, retail traders, institutions that are looking to get that leverage exposure through an ETF. So we're really excited about that long side. But on the downside, what we realized is doing a 1x provides a hedge for people that are either already in the IPO and looking to hedge that on a one-time basis, or if you're really bullish on this and you're in the 2x, you wouldn't want to like offset that with a 2x short. So we felt like the 1x was the proper hedge that could be used for these volatile names to keep people long, yet hedge if it gets to a level where people are getting concerned and they want to hold their position, but maybe just, put in a hedge position to the downside.
Yeah, that makes sense to me. Let's talk a little bit about the underlying stock here, SK Hynix. What's your take on it and this massive memory trade and oligopoly that we're seeing?
Yeah, from everything that we research, from all of that we hear, memory is the biggest component and one of the most scarce components in the AI trade. So there's just not enough of it. There's three major companies. SK Hynix goes across every single piece of memory. And so we think it has a lot of legs moving forward. So we're bullish on memory, for the foreseeable future. But again, when something comes to the market for the first time, just like I said with SpaceX, it takes off like a rocket ship. The last I looked before I came on here, I think it was trading 15% above its listed price today. So really good movement moving up. But that said, generally speaking, all that enthusiasm, that momentum, the fear of missing out happens with new listings. And then there's a settling off period. And then there's a period where maybe this thing settles back down a little bit. So we're going to wait and see how that plays out. All that said, lots of interest, lots of volatility. When we're dealing with leveraged products, that's good for us. So we think we're going to give retail investors and institutions that vehicle that they need to gain leverage to the upside, and then also hedge themselves to the downside should they see a moment where they think that's appropriate.
I actually really like the downside being single. Personally, I feel like for me, it's something that I would utilize more often. It gives me a option that is I don't have to use puts, but I don't have to really even worry about leverage there, right? And so it does kind of fill in a little bit of a hole, I think, for retail that are looking at something saying, I think this is overvalued. I don't want to play it with puts or leverage or pieces like that. I just want to be able to make money on this going down.
Yeah, I agree with you. I think it makes a lot of sense across the board. I think, a lot of times when people look at these products, they're just interested in the leverage, maximizing the return. On the short side, personally, for almost every long position that I hold in an underlying stock, I would love to have an option like this for when things are getting a little bit long in the tooth and I don't want to sell that out. I want to continue to hold that position. You guys know me for a long time. Like personally, I'm a big fan of some of the crypto treasury names.
Yeah.
And I would love to be able to not have to ever sell those, but to be able to like hedge them. So I agree with you 100%. And again, in a volatile name like this that's taken off in the US for the first time, I love having that one-time short so that I can hedge a position without having to worry about, leverage on the downside.
For sure. And you've launched a lot of products, but you mentioned SpaceX being the most successful, right, of all time, really, on that first day. What did it teach you in terms of, the launch that you're doing now around SK Hynix?
Well, be who you are, number one. Communicate the message clearly. Be honest and transparent about the release. Like, don't try to play any games to try to get some kind of advantage. Like, we have great partners with our regulators and our exchanges, and all we have to do is communicate that clearly to the people that are interested in these products. And so that's number one. Number two, I think cost matters. I think you have to have a low cost option in the space. To say that fees don't matter just because you're not holding it very long, that doesn't fly with me. You want to be able to have a fee that aligns with what's good for the client and what also works for us. And I think we're perfectly priced at 75 basis points to be able to do that. And then the last but not least, we've now been in this space for, a year and a half plus, proven that we can manage these strategies to what their 200% up or 200% down is very, very well. And so I think we're resonating with retail audiences, and I think that's one of the reasons why we had so much success.
Yeah, it does make sense. And, I'm sure you're familiar with this, but, there's a lot of issuers that are racing to launch, 2X products here across the board. How do you actually, how do you separate yourself from the pack?
Well, again, all those things that I just said, we're an in-house management team, so we do all the management ourselves. We're low cost, so you don't have to worry about it. The fee with us, we're going to be the lowest or close to the lowest out there.
0.75 or what's?
Yeah, 0.75. And we've got a lot of experience in the space. So one of the things that people always talk about is tracking. Like, are you providing that 200% daily return day in, day out? Because remember, these things are reset. So every day you got to look at that NAV and then you got to track whether or not we're providing that. And we are. So I think those are the reasons. Again, also, we do everything in-house. We're a holistic firm. We invest in ourselves. And so in our promotions, in our advertisements, in the content that we create. We're providing value, hopefully providing value to the community, to you, to all of our partners. And so as long as we continue to do that and play the game right, I think that will resonate with investors, and they'll keep coming back to us.
For sure. Evan, I'm going to bring you in just a minute. I had one more question real quick for Paul, and that is for somebody that's watching this live stream right now, and I see our YouTube audience is actually on up here, love to see it, and they've never traded or bought a single stock ETF before. What are the things that they should know about, SKHAX, SKHC before they press buy?
Yeah, one, we're going to give you 200% of the daily NAV from the prior day, right? So there's a difference. When you're trading it, if you make your first trade intraday and you're looking at it to go tick for with the ticker 100% to 100%, it's not going to work that way because, again, it's based on the previous day's NAV close. That said, it will track very closely to the underlying stock. That's number one. Number two, in choppy markets, okay, there's a little bit, there's a little bit of decay. Because if it goes, up 5% one day, down 5% the next day, you're not going to be even to where that stock was. So you really got to manage that on a day-to-day basis. This is not a set and forget. It's like, don't buy this and think you're going to come back to the screen 6 months later and see what it's doing. Like, you really have to look at it on a daily basis. Have a trading process around them. When you enter into them, know what you want to the upside or downside, depending upon which one you're playing. And then when you hit that, be willing to take that profit. Know what you're willing to take as a loss, because sometimes the trade could go against you. A piece of news can come out and the stock goes against you. Like, where are you looking to cut your losses? Do you have stop losses in place? And really have a trading process around what you're doing. So those are the things that I would say. And then make sure that you read our prospectus, understand how the products work. And I think that's a pretty good place to start for people that are looking to trade these products.
Love it. Yeah, well said. I encourage people to read the prospectus too, leverageshares.com. You can check out all of the different products there. Evan, what's on your mind?
First thing on my mind is for you to check my text, and I would love to have.
Yeah, I'm going to pull up a screen share of the website. Yes, I'll pull up a screen share of the website as we're talking here. So please, Charles, in the back, and get ready to share my screen. But yeah, Evan, go for it.
Yeah, I have some questions. I want that up on the screen when I am asking them. So we'll talk about that in a second here. Paul, I appreciate you for joining us. I am very excited to talk about this one. SK Hynix is a name that a lot of people are very interested in trading right now. So I think that this question is great. I am excited for next week. Yeah, we do have on the screen, and if we can go over specifically to the 2X SK Hynix one, which again is the ticker SKHX, but everything's on the screen if you go specifically over to the website.
Yeah. I'm on. Can you see my screen right now?
Just go down, you'll see it.
Okay.
Because it's not available yet, so it's not in a product, but you can see it there with upcoming. Yep.
All right, awesome. Honestly, Paul, I'm very excited to have you on here. Again, you went right down, and we're just showing the 1X short again. This guy, the ADHD is to the max. I love it. I'm very excited to have Paul on the stream here. Partners over at Leverage Shares, you guys are creating products. There's immense amount of interest in trading the SK Hynix IPO. So many people are asking how they can get access to this. The memory trade is one of the best performing names in trade so far this year. And the crazy part is the South Korean index, which is a majority of these memory ETFs, it is in a bear market. It is down 20% from those highs. So not only is this a trade that has seen aggressive upside that people are super excited to be watching and trading, there's volatility in it. It's not just going to the upside. It creates great trading vehicles in there. SKHX is the ETF that you guys have launching here next week. Last time you guys launched an ETF, it became the biggest ETF launch in history. I'm curious if that's what you are expecting to see here, just with the amount of interest around this name. For SpaceX, maybe there was a lot more conversations around valuation. It feels like SK Hynix, the conversations are, can this craziness keep going? But no one's arguing that there is valuation problems here. They're actually arguing that SK Hynix is trading at a discount to the domestic Micron player in the space. So I'm curious if when you see SKHX launch next week, if you're expecting to be a record launching volume launch.
Even Usain Bolt couldn't set a record every time he ran, so, records are special. SpaceX was special because of, this first foray into space, a combination of space, AI technology, rockets, Starlink, all that stuff, Elon Musk. is such an incredible enigmatic figure. So it's like that was like a special one. You know, we'd be happy if we broke the record, and we'd be really excited about it, but you don't ever plan to break a record. We do see lots of interest, and we're getting indications of interest across the board. So we think it's going to be very, very popular. Whether we break a record or not really doesn't matter. What's most important to us is that we launch the product on time, and provide the investors with what we say: 200 long on the upside, 1 time short on the downside, and then I think let the games begin. I agree with you. There's tons and tons of anticipation around this launch. So I think we're going to see lots of volume. I think we're going to see lots of turnover. And I think ultimately that'll lead to a lot of AUM in the product. So we're excited about it.
Yeah, I am very excited for this SK Hynix IPO. I know so many people are looking forward to it. There's going to be just so much trading interest in it. I have a feeling that a lot of people are going to be looking for upside and downside ways to play this. SKHX obviously is your guys' ETF. It is the 2x long SK Hynix ETF. So if anyone in the world wanted to go and trade these are ETFs that are made for traders. These are not made for investors. For people who are already trading these 2x ETFs, this is the ticker that is coming into the world around this one. There is also a 1x short one, but we're talking about the 2x long SK Hynix ETF, which is trading under the SKHX ticker. It is very important that we are getting these out as quickly as possible. By the time that these go live, there will be no options chain available. Also, another thing to note here, because this is a South Korean company, it moves a lot when South Korea, the market is open there, when it's the daytime, which is the nighttime here. So one of the advantages of the 2x ETFs is they trade throughout the entire day. Options, when it does come live, those will only trade from when the market is open. And for Kospi, for people who are watching it, a lot of those moves happen overnight. So for traders who are looking at these products from our amazing partners, shout out Leverage Shares, SKHX being the 2x long SK Hynix ETF. Tell me more about some of the advantages that someone trading a 2x leverage ETF will see versus options.
Whoa. I don't know if everybody heard that, but I got a big beep in my ear there, a little feedback. But
It was actually Gov's amazing saying steak for dinner, which
it was my wife texting both of us in the group chat.
Anyway, so some of the advantages, like I know there's a lot of volatility, especially when you're trading a foreign stock on a foreign exchange. One of the advantages of having the ADR now in the United States is that I think it smooths that out. And it's going to bring a ton of investors in that were apprehensive to ever invest in a major piece of the memory space. You know, there's 3 companies that really dominate the market. That's Samsung, that's Micron, and it's SK Hynix. And now, for the first time on an American exchange, you're getting exposure to that. So we think that's a tremendous advantage. We think that might smooth out some of the volatility, not all of it, but some of the volatility that you see, because you're opening to the United States market, and people are much more comfortable in investing on a US exchange. A lot of times, even in South Korea, it's a huge market for us. And what we hear is they want US listed ETFs that they could trade in. So we think that's going to be great. Advantages, again, like I said, we've been doing this a long time. We're really good at what we do. So the tracking on these ETFs is going to be, as good as it gets from our perspective. And then you're going to get the lower expense ratio. So you're paying less for a high performance ETF that's going to get you that, 200% of the upside and the ability to hedge 1 time on the downside. So, those are the advantages that we see, with it, now trading in the US market with us.
When I switch over to the short side of this, the 1x short ETF that you guys have launching here as well, which is up on the screen. There we go. Shout out. Yeah, so the memory trade has been one of the best performing trades so far this year. There are people sitting in these things with hundreds of percentage of gains. Sometimes there's different tax things here. A lot of these people have been playing them through weird ETFs and stuff. Some people are just going to sit here and think these things have run way too much. Obviously, you guys are launching a 1x short SK Hynix ETF. For the most part, these leveraged single stock ETFs are made for traders. They're not made for investors. These are people who know what they're doing, who are exercising a trade. We love to see our partners launching these type of products. But for the people who are interested in either hedging a position, maybe think something has gone too far here, there is a new ticker coming into the world. I am curious your thoughts here on SKHZ. short versus 2x short, and just generally how you envision people using this.
Yeah, we like it. And again, I get asked the question a lot, often on parabolic charts, like, is now a good time to get in? Is now a good time to get in? And what I always say to people is like, timing is really important when you're entering into a trade. And whenever I see like a parabolic move up, I'm always sensitive to tell people, or even myself, get into that trade, especially if it's happened over a period of time. So the memory trade did take that big, huge spike up and it settled back, right? So we have, pretty good indications that this may be a time to maybe dollar cost average in, but also there's a lot of people in the marketplace right now that are saying, hey, these names are still too frothy, so on and so forth. So for me, if you're long and this is a good entry point for you to get in, like this is a good time to maybe take on a little bit of leverage with that, and see if you can run. But again, for those people that think there's still more to come off and are holding a position, instead of selling that position or trimming it or doing whatever, it's an excellent time to get in. Let's say we have another parabolic move in this stuff, because it could happen, right? Memory is so scarce. It's a commodity. It's very, very scarce. And there's a lot of investment in this space. You really don't have to worry if your long positions, whether that's leveraged or just in the underlying security, takes off too far. You don't have to sell. You can use our one-time short to sort of hedge that. And then no margin requirements. You don't have to, borrow the stock or anything like that. It's just a simple ETF, gives you the exposure to one-time downside, hedge that position. And if you've got it wrong or you're feeling more bullish, just very simple daily liquid trade out of it.
Thank you, Paul. I appreciate it. I am very much looking forward to watching the first week on these ones.
Yeah, we're excited too.
I think so. I look at the SpaceX one, and I look at the memory stuff that's been trading around it. I find it hard to believe this won't end up being a record first week as far as volume goes for the 2x SK Hynix ETFs here.
We'll see. From your lips to God's ears, I'll take it.
Again, for the people, I'm not saying go in and trade something. I'm not trying to be like, all right, guys, if you've never touched a 2x ETF, that's not where I'm sitting here. It's for the people who know what they're doing, who are utilizing this. Do you think this is the right time for this play? There is SK Hynix is trading at a discount to Micron. And this is because US investors have not had the chance to get exposure to this. And it is listing in the US markets. This trade, there is years and years of a demand problem, there is years and years of an imbalance of supply and demand to work out here. They are aggressively in creating more factories, but it takes 2-3 years for that to come online. And we're
oh, sorry, go ahead. I didn't mean to cut you
please,
off. But
honestly,
I was just gonna say, I think you're making a really good point there. And there's a reason why you ADR in the United States, because it brings in a whole new capital structure that you couldn't get. They're an established company. They're the second largest company in South Korea. But you get something special when you get access to the US marketplace. And so I agree with you. People are going to look at this versus competitors, versus Micron. It's trading at a discount. And I think that's going to bring in a whole new flow of capital to the position, and then we'll see how that shakes out.
Yeah, I actually wanted to hear as well, just because we're comparing it to MU, I would say most directly, but also a little bit to Samsung and pieces like that. Micron already having been listed on the US markets. You guys have a ETP, I believe MU2, on the European markets. For those that are curious, I guess in the US markets, that could even be like a sympathy maybe. Is there anything in that area that they can point to?
That who could point to?
Like someone looking for a leverage shares product to kind of trade other names in this ecosystem around the memory trade.
So yeah, I mean, like they could. That's our sister company in Europe, Leverage Shares EU. And yes, they have a 3 times. So you could absolutely, if you have access to, a European exchange like the LSE, 100%, you could trade into that as well. And I don't know if it's a sympathy trade. What I would say is if you're bullish on memory and you think that Micron has come down far enough, absolutely. You could totally add that exposure if you have exposure to European exchanges. But again, in the US, if you're looking for that exposure to SK Hynix and with leverage, we're going to be able to provide you that here, 2x in the US.
Makes sense. And then in like 30 seconds, just kind of like talking to the people that understand these ETFs, right? And some of the trading, like Evan said, like the people that you're really going for here in 30 seconds, why do you think that, especially having seen what happened over with the 2x leverage ones in Korea, why do you think that this is a unique opportunity in comparison to other 2x leverage ETFs on other names?
Well, again, I think there was a lot of volatility in Korea. I think the regulators are also a little bit concerned over there, so they've been making comments, doing all that stuff. In the U.S., this is par for the course. We've had these leverage products for a while. The regulators are fairly comfortable with the way, where they are in the marketplace today, and so I don't think you're going to see any of those kind of issues. We're very deliberate in the timing of these, getting them out to the market, after the IPO list, or in this case, the ADR. So I think it's just going to be listed, regular business for us, and you're not going to have any of the issues that you've seen overseas.
Got it. Makes sense. Evan, did you have any other questions in that area too?
Yeah, no, I really love that kind of team on the 30-second, 60-second explanation there. And I kind of want to ask it around why people use 2x and leverage ETFs in general. So like we are getting, SK Hynix is going public. The memory trade has been so hot. There's so much interest around this. Why is someone in 30 to 60 seconds using a 2x product, a leverage product, versus just trading the spot or buying options? What is it?
Well, leverage has existed in the marketplace for years, but a lot of people didn't have access to it. And as retail traders are doing it themselves more and more tools are available to them, what they want is a democratization of their capabilities versus the pros. And even if you're an individual investor that's relatively savvy, it's hard to price out the options the same way that a large institution can. So from this perspective, you know what you're getting and you know the price that you're paying, and it's very easy to use, very easy to get in and out of. You could trade it before market hours, after market hours, and it's just a very easy way to gain leverage to the upside or the downside, or to hedge a portfolio if you need to on the short side. And it's just the ease of use. Like ETFs make everything easier. We do all the hard work in getting you the exposure, and then you could just sit at your desk and trade them in and out with liquidity, not having to worry about pricing the options, the expiration dates, borrowing the stock short, taking out margin calls, so on and so forth. None of that has to happen. With us, it's just simple ETF, exposure to the upside, exposure to the downside, and then you get to just trade and put it into your process.
Love it. Our partners at Leverage Shares launching a 2x long SK Hynix ETF on Tuesday, SKHX, 4 a.m. It's going to start trading. The 1x short is SKHZ. I am very excited for this. I appreciate partnering with great people, doing great stuff like this, creating trading products, and I am very much looking forward to the future, Paul. I really appreciate you for joining us.
Oh, thank you guys so much for your partnership, and pleasure to be on with both of you.
Thank you as always, Paul. Appreciate you. Really excited to see how these do next week.
Same here. Thanks, guys. And thanks to your audience too. We love them.
We do too. We do too. Evan, hang out with me for a minute. Paul, wishing you a great rest of your Friday and an awesome weekend. You're the man. We look forward to seeing you again soon. To the audience, hang out with us for another 5 to 10. We'll do some wrap-up thoughts here as SK Hynix has closed its first day of trading. Right here, we are getting a little after-hours action already, but first day of trading, SK Hynix after, again, not first time going public, but IPO on the NASDAQ, went up from 149 where it started and closed at 168.33, which was a 12.97% gain. It has since then moved up another 0.37%, which is roughly 62 cents at the moment. So that's a couple of the pieces right there. Evan, big day, fun day, long day. What else is on your mind? Steak for dinner? Is that what's on your mind?
Great day. It's a wonderful day. I am not super hungry right now, but I will be in a couple hours.
I could eat. Let's see real quick if we have any questions from the audience that are still hanging out with us. I'm pulling back up the YouTube stream for a second. If anybody has any questions, be happy to take them, give any insights I can. Hopefully you got a lot of great information from this. We had some real experts on here today, and this live stream will turn into recording once we finish, and we're also going to post a bunch of videos from it. I still see that there's over 100 people in here. I love that. Appreciate all you for being here. So let me just go ahead and pull up the chat. I did see all the time, M8. You've been in here for a long time, constantly commenting, so just want to give you a shout out. You said, what a stream today. I love to see it. And then a few others here. NVIDIA strong into the close. You know, we did talk a little bit about NVIDIA with a few people kind of earlier. It obviously leads this industry and sector, not necessarily memory, but building alongside it. NVIDIA finished at 210. And I actually was talking about a few stocks with ticker symbol U earlier and how they were getting like a little bit of strong finish. But wow, yeah, NVIDIA, really nice day. 4% up for NVIDIA today. That's awesome. Evan, was there specific news or you think that's mostly off the SK Hynix IPO?
Honestly, I did not look too deep into it. I don't know. I don't think so though. Listen, Friday at 3:45 p.m. Eastern is not typically prime news time. My assumption is no. There was not really.
One other thing that was kind of interesting was I was talking with ticker symbol U earlier about Micron and how it looked like it wanted to go green. It did actually end up going green, and then it retraced from there and finished down 1.26%. So really all over the place. It was down 3% in pre-market, up 0.5% at 1:45 p.m. Eastern, and then finished down 1.26% and is down another 0.25% in after hours right now. So quite the end to the week in the market. Let me see. Oh, we got a screen share going here. What's going on here? Oh, we got a little rally screen share. Ooh, yeah. How about that? See,
little
something like that.
Little Micron.
Little Micron, little rallies. Download rallies.ai. Can't hurt you. Go check it out. Yeah, there's some pieces on Micron. Can you actually look up NVIDIA? Because maybe NVIDIA will also give some news there on why NVIDIA moved today. US makes it easier for NVIDIA. See, this is the best thing right here. Guys, I wanted to know why. Yeah, rallies is great, Ryan. That's true in the chat. I wanted to know why NVIDIA had moved today. I asked Evan. Evan's supposed to be the news guy. Did not have an answer off the top of his head. Went into rallies, immediate answer right there. See, this is AI replacing humans in real time. Sorry, Evan. So with that being said, look at that. US makes it easier to export NVIDIA AI chips and military equipment to the UAE. Interesting. Evan, what do you think about us exporting chips to the UAE?
You know what? I was actually ready to sit here and say like that's fake news or something. It actually did come out 30, 40 minutes ago.
No, we have the LSEG integration. Now it's live. North American news.
About that.
America. Here we go. God bless
Right.
America. Yeah, no, that is the story that just came out. Interesting. Let me go and post that.
Hey.
Yeah, I love giving just supreme intelligence to other countries. I just like seeing them just inch up on us.
Someone in the chat just said that they rotated all of their one of their stocks into Peng. Could you pull up Peng in rallies real quick?
Yeah.
Because I actually this is one that a CNBC contact of mine would ask me about. Let's see. July 8th is the last news here. Okay, nothing new, but this was their earnings. They popped off of earnings pretty nice. Did they have a nice day today? What did Peng do today?
Just had
minus 3%.
You had a CNBC contact. You don't actually care about Peng.
What are you talking about? Peng is up.
He loves Peng.
It's up 300% year to date.
Dude, I hear him mumbling in his sleep about Peng.
I just go peng, 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 peng. That's how I sleep. Peng is up 20.
Exactly it.
Down 3.75% today, but up 27% this week. They had great earnings, recorded Q3 financial results and full year guidance beats. So you love to see that. Yeah, this is a stock that has absolutely taken off after doing absolutely nothing for 5 years.
What do they do?
Peng?
Yeah.
Well, if you think about it like this, they design, build, and manage enterprise solutions. So that's the simplistic piece of it. But yeah, they're also another player around like the memory space, integrated memory, advanced computing, pieces like that. So I think the big thing for them is just part of the AI build out. If I had to like put oh, there we go. We're off there. Okay. Yeah. Part of the AI build out right now, allowing people to really provide more services and solutions. Yeah. Buzzwords. Hey, if you want to know what Peng does, why don't you ask rallies?
Let's see, it's gonna take a second, so I'll pull up another one while it does. But
all right, hey, well,
what else are we interested in? What are we looking at?
Let's see, SSDs, HHDs,
let's look at my Netflix
RAM,
calls.
but not HBM RAM. Got it. Yeah, that makes sense. All the time, mate.
Make it bigger on the screen.
So they're not doing high bandwidth memory RAM, but they're doing SSDs and HHDs. Okay.
Yeah, integrated memory, integrated platform solutions, optimized LED, 50% 57% integrated memory. To be honest, these are buzzwords. I'd have to dig into this, what it actually means.
The whole world is buzzwords these days. That's how it goes.
I feel like, dude, it's just like we've got like framing.
You guys
That's
hear
just
me?
what it is.
Ticker symbol U. He really, honestly though, he had great insights. I felt like he had good comparisons, good touch points. It was
I mean, he's
easy to
one of
understand.
You know, they say you don't have to be a rocket scientist to understand this. Well, sometimes you do, and Ticker Symbol was a literal rocket scientist. So
Oh,
if there's
wow.
anybody that's going to explain it, hopefully it's him. You know?
Yeah, I could do that.
Yeah.
Yeah, he's
dude,
super sweet.
really smart guy. Really smart guy. I encourage everybody to make sure that you're following him. You could just look up his YouTube if you're here on the YouTube. You probably already follow him, but Ticker Symbol U, he's got like 300,000, 648,000 subscribers. Oh, yeah.
Dude is ripping.
Yeah. Man.
These are great views.
Millions
These are
of views.
insane. Yeah.
Jeez. Yeah, he's doing some
If
good
we
stuff.
could just be,
Honestly,
dude, he's mogging in these pictures. No smile needed. Mr.
he is
Beast.
he is
Not
he is
even,
a chief
not
chief
even
mogger,
close.
bro. Chief
That's
mogger.
awesome.
Somebody's got to get ticker mog. They've got like mog.b, mog.a. It's Moog stock. Have you ever seen this one, Evan?
Moodang?
It's actually doing quite well. No, Moog, MOOG. The ticker is mog dot A. It actually is up 123% over the past year, 67% year to date, and 387% last 5 years. Oh my gosh, 4,000% last 25 years. This thing's cooking. $13 billion stock. Are they a defense stock? Precision and fluid controls and systems for applications in aerospace. Wow. Even the stocks are mogging.
You can't hear me, right?
We can hear you now. Yeah.
You've been ignoring me this whole time. Then you need to make the text on the screen bigger, Charles. Give me a good.
I did.
Bro said you've been ignoring me, brother. You were talking to a muted device. We weren't ignoring you. Like, we just couldn't hear. But how about that Mog stock, Evan?
Is
You
this
ever
the
heard
right
of this
ticker? Moog?
Yeah, Muge.
I don't know. That sounds like a cancelable meme right there. Muge.
Okay. All right. All right.
Just
You had to
saying.
go there. Had to go there.
Flight control and actuation systems, servo valves and motion control components, electronics and control hardware. Even reading these sentences, I get so excited. It's an incredible opportunity. Dude, I mean, anybody in Netflix right now? I'm down right now, but
oh, apparently the
entered in
text,
at 90.
the text is kind of hard to read for the audience, I think, on the stream of what we're looking at, but we'll just keep telling you. Don't worry. We're used to spaces where you can't
Get your readers on. Get your X's on.
Moog is a major global designer and manufacturer of precision motion control products, offering a comprehensive lineup of actuators and servo actuators. Very nice. Look at the Wolf Financial Channel. 11,000 subs, baby. That's right.
Great job, guys.
Okay, that doesn't look too bad on the screen.
I'm interested in chat. Who is everybody's favorite guest? For anybody who followed along
all the
whole
time has been in here for hours. I think all day. Good Lord.
Wow.
I love to see it.
Dude, we should send him some merch.
Shout out Newton. Oh yeah. You know what? Newton, all the time. We could definitely do some merch. Drop me an email, gav@wolf.financial, no.com at the end. Let me know you're in the chat all day. We'll make something happen.
We actually have some new merch. That alpha is earned. That'd be sick.
We only have there's only one type of merch that we offer. It's the Old Wolf logo with spaces around it.
Right.
That is it's the only merch that we actually have. No new merch. Oh my gosh.
Trying to see if we have those old ones. It's gonna be a hard thing to find. Hey, what are you investing in right now, Gov? Anything specifically? You're kind of a fundamentals guy, old school, right?
Oh yeah, real old school. The better question is, what is my agent investing in right now?
Agent? Did you say Asian or agent?
Agent.
Okay, sorry. Yeah.
Jesus Christ. So my agent bought Bank of America and Visa. That's all it's holding right now. A couple of
Can you share
interesting
screen?
buys.
Can you show your agent?
Yeah. I can show this.
You should name your agent the same as the quant from what's it called? Uh, do you know what's your favorite movie? The Big Short. What was the quant's name?
Well, I think that's the joke, right? He doesn't speak English. Look at him. Shout out Ryan Gosling. All right. He said, "Don't get me excited now." Been here. He all the time has been there all the time. That's true. Yeah, I'll screen share for a second. I can't while
Yeah,
you're
you got
screen
it.
sharing though.
Yep.
All right. Let's see. I don't really usually screen share this stuff, but I will screen share. Here's my agentic portfolio. I gave it a few grand. Let's check it out. Let's get this on screen.
You got it on screen.
Is it on screen?
Yep.
I'm waiting to see it pop up on the actual stream right now. All right. This is an agentic portfolio that I set up. He has currently lost me $189.62, but it's not his fault. I still love him at this moment. So let's take a look. Basically, you can see all the trades down here that it's been doing. If I pull this up, I don't know. I want to go through it down here, but yeah, these are like the recent ones that you can see. It's sold out of TSM. It took a dollar loss on this. I mean, it basically panicked, I'm pretty sure at this point. I don't know why exactly it moved out. It doesn't seem like it broke necessarily any of its pieces, but it did. And then it also sold out of Marvell. So it basically got out of a couple of these tech stocks at that point. But this right now is what it's holding. It's holding Visa. It's holding BAC at the moment. I mean, the charts actually don't look too bad on these. If I pull it up on here, you guys can see this, right?
What was its analysis? Does it tell you why it takes a trade?
Yeah. I can pull that up in the terminal. I've been trying, to be honest, to just let it roam a little bit. I'm trying not to like get too far into like the nitty gritty of, oh, why do we do this? Why do we do that? But here's the thing. It said TSM closed at 432.57 yesterday, below the 20 SMA. RSI dropped to 48, below the 50 floor, filled at a bad price on July 7th, open right at the SMA 20 breakdown, clean cut, minimal damage. So that is why it cut that position right there. And that was the reasoning that it gave for it. Visa, why did it buy it? 348 versus yeah, sorry.
Do you just tell its trading style? Or like, are you telling it how to specifically trade, or are you just like literally read the S&P?
So I told it that I wanted actively trading. If you're actively trading, you're typically going to be going off of technicals in a situation like that. And so what it's specifically looking at, and I can try to share this other terminal actually real quick. This might be like somewhat gibberishy for people that are watching, but here's an actual terminal of me talking with the actual trading bot. So here's some of the things that it's been running. Basically, you can see surviving positions right here. It outlined the TSM close right here and why it got out of it. It outlined AMD and why I closed that position right here. It talked about Visa, BAC holding near entry, both stops intact.
I feel like I'm reading hieroglyphics.
Is that better?
It's incredible.
I mean, is it better or no?
It is better. Sorry. Yeah.
When you say incredible, I don't know if you're like
it sounds facetious.
Yeah, I don't know. But what's cool is you can see it basically like pulling market data, bid ask, looking at the spreads, pieces like that. It's kind of cool to see it regularly doing this stuff. You could also see it calling rallies over here. So we just showed rallies. So you could see it's pulling the data from rallies a few different times to basically see where the RSI is, where the SMA is, where the technicals are at right here. You can see pulled rallies right here. So it's kind of cool seeing it basically go through both of them. Yeah. And then why the exit here. This was the TSM piece right here. AMD right here, why it did that. This was Visa right here. It gave a little bit of an outline on some of the pieces. Yeah, Visa, BAC, TSM, AMD. So it's moved in and out of a few different positions. Obviously, it hasn't been the most successful thing of all time. I will say it still feels like it needs me to prompt it a little bit more than I would necessarily like to have to be prompting it. And so it can be a little bit annoying there where like it won't place a trade, even if it has a plan to trade, things along those lines. So here, I'm going to pull back to the chart for a second, though, and actually just go over what it actually is holding, because I think that the setups are pretty good. It bought Bank of America. I think this is a little bit underrated right now. People are very fascinated with the AI trade right now. They're not really looking at BAC, but it is pushing highs, as you can see right here. And if we zoom out to a weekly, you can see it's even, beyond the 2022 highs. And so you'd have to go all the way back right here, and it actually has a new all-time high breakout as of $56, and it's at 59. So I think this really is something that the algorithm picked up on, that the technicals were just looking very solid here. New all-time highs, basically pushed all-time highs, first time over $60 right there, and now sitting at 59.50. There's obviously not a lot of volume or other pieces up here, and I'd have to go deeper into, hey, like, why are you buying this? But it's a trader, right? It's buying this on a technical breakout through all-time highs that were set, years and years and years ago. That's what it's looking at right here. So pretty clean setup. I could probably go much deeper with it and just ask it, like, give me a much deeper analysis here if I wanted to. Visa's a little bit different. It doesn't exactly have the same all-time high breakout. It actually has more of like a floor that's been forming through here. But my understanding of why it went with Visa was because you had such a sharp drop back down and then a pop through that 200 ASMA. So we came back through the 50, back through the 200. All of those simple moving averages are just grouped right here. Once we cleared those, I think it actually was looking at this wedge that you can see I have on the chart. Once we popped out of that and we drove up, that's when it basically looked for a little pullback and then entered the position. So the position is relatively at cost right now. I think it's seeing that there's a ton of volume right here. You can see the volume shelf that's sticking out right here. It's, one of the farthest ones recently. And so it's basically looking, I think, to also take two symbiotic plays, Bank of America, Visa, both playing in that financial sector as well. So that's, to me, what it's looking at right there. But I'll be honest, I'm not trying to micromanage it. I really keep just telling it, like, I want you to just trade, just do your thing, go in, make moves. I wish I didn't have to keep like the terminal open even and just could allow it to do it in different ways. I'm sure there are other ways that I could just run it out of like Codex or whatever. But those are a couple things that I was looking at right there. Other favorite charts from today. So TSM got mentioned a few times, and the bot did cut TSM, but I actually think, TSM doesn't look too bad. I think got a little scared because it went below that 20-day SMA. That's a 21 that I have on right now, but obviously the 20 is going to be very similar to it. This right here is a 50-day SMA. This right here is the real test, in my opinion. 50 is much more powerful than 21. And then you can see it hasn't even gotten close to that green line, which is the 200, in quite a while. This would be the scare. To me, buying this off the 50-day is not a bad call. Like, if it bounced down to here, even went under for a day, came back over, that would be a pretty good spot right there from a technical perspective that I would continue to watch it. Don't really have to look at NVIDIA. Micron, also an interesting one. You can see exactly the thing happened right there. 50-day SMA, right? We came down, we cut through the 21. This is where the bot probably would have panicked. We hit the 50 and boom, we bounced right off the 50 like clockwork. I mean, look at that thing. Perfect right there. You can see the 50 right here broke. We came closer to 200, never hit it, came back up above. This right here, I mean, this right here actually, this right here is like a great buy spot, right? Because we break below the 50, we come back up above the 50, we clear previous highs, and then look where it runs from there. I mean, that spot right there, that's April. That's April 20th. How about that? For a day to pick, 420.
Wow.
The golden zone.
He's a
So
gusher.
that's where I would don't say that. That's where I would look at that.
No, it's just like a geyser. It's up and to the right.
Yeah, what's HUD been doing? HUD 8's an interesting one. This didn't get talked about today. We got Iron and a couple other mentioned, these neo cloud styles, but HUD 8 also building, buying data centers, similar type model, right? Get a lot of compute going, sell it, rent it out to other people that are trying to play around with these things. SanDisk over here, similar to MU. 50-day SMA has been even more powerful than SanDisk. Look at that, Charles, by the way. Look at that 50-day SMA holding right there.
Wow.
Right there, right there, right there.
That's almost a rock solid straight line.
Yeah, every time that it taps the 50 SMA, we get a bump off of it. Isn't it crazy? Crazy. Really cool stuff to be able to see on SanDisk as well. We're here because Amit dipped. Nice. Appreciate you coming here. We are looking at some charts. If you have a chart request, I'll take them for another couple minutes here, and I'm happy to throw something in. So if you're in the chat on YouTube, thanks for popping in. Shout out to Amit as well. Amit is joining me on Monday with Chris Camillo at 1 p.m. Eastern for a conversation about AI and agentic trading.
That's a crazy live stream right there. Amit and Chris Camillo.
Hamid and Chris Camillo. Wow, look at DRAM already respecting its 50 right off the bat, even on an ETF. Awesome stuff. Bro said OF. Is that a stock or you asked me to look at something else? I don't think I see a stock there.
I don't see OF. Where did you see that?
Well, I don't think that they've gone public yet. Sorry, Newton.
By the way,
Oh, it's Nike. Got it. He wrote it in a different language.
weird. I just see
Sir?
Nike.
Sir?
I see a Chinese like symbol and then it says OF next to it. And if I mouse over it, then it says Nike.
Yeah, I just seen Nike.
You know, Nike's tough. I'm actually going to show people just real quick. This is why Nike's tough. Oh boy, I'm not a bot. Oh my gosh, this is the slowest loading bar I've ever seen.
Longest press and hold I've ever seen.
I've never seen this before. They must be collecting all my data. All right, come on. There we go. All right. So the problem with Nike, you know, if you're not a, I don't know where to classify Nike, growth, value, whatever. But the problem is this. It's very simple. When you look back at previous years, here's 2018, 19, 20, so on and so forth. All right. We're making $15 billion. We're making 17. Uh-oh, we made 16, but it's okay, right? It's COVID. We're making 20 billion. Good. 21, 22. Ooh, we're slowing a little bit. 22.9. Uh-oh, we're not growing anymore. 19.7, 19.9. We're stagnant. 19.9. You know, this is the problem right here, right? You had growth from here, and then you stagnated for years and years and years in terms of your profit, right? And if profit stagnates, why should your stock continue to go up in those areas? And of course, people are finding more attractive trades like AI and pieces like that. So they're just going to pull their money out. To be honest, there's even stuff that's not AI that's more attractive. Take a look at Coca-Cola. You know, if you're saying, hey, I want a legacy company that does well, look at Coca-Cola, right? This is a company that's continued to grow over time. 22 billion, 21, right? But then 22, 19, 23, 25, 27, 28, 29, 30, right? We're just moving up. And what happens on the stock chart? Wow, it's up 19% in the past year. Oh, look, it's continuing to push all-time highs. The Nike stock does not look like that. Nike stock is down 73% last 5 years, down 41% past year, right? 32% of that happened this year.
Don't you think that's an overcorrection though? Like if the profit only wanes by 8%, 6%, but it's taking way harder dips on the stock, does that put it in a good position for entry?
That's what people would look at. So that's where you go and where I would look at this right here. And that's where you're talking about basically valuation, right? Because the problem is you're getting a D for growth because you're not growing. You're growing downward, whatever that's called, shrinking. And sure, yeah, you're still profitable and all that stuff, but your momentum's going the wrong way. Your growth's going the wrong way. And when you look at it, to be honest, Charles, what you're saying is, here's the problem. When you stop growing, Charles, everybody gets much, much, much more scrutinizing about you versus everyone else. So they start looking at you versus your sector. And they say, all right, here's the sector median. Where are you? Well, let's look at your traditional PE. Oh, Nike, you're at 27, but the rest of your competitors are 15, right? You're 80% more expensive than them. Why should I give you a premium if you can't show me that you can make more money, right? Doesn't make sense. So it's pretty sure. I mean, look at all these C's and D's right here. Basically, they just don't stack up. Now, you can always figure out like who are they comparing to, and sometimes the comparisons are weird, but these are fine, right? Lululemon, On.
What's On? Is On making good money?
Yeah, they make the On running shoes. I'm pretty sure. Yeah,
they're doing great right here.
Yeah,
I love those shoes.
Got a pair in the other room. Yeah. So, you know, footwear, apparel, things like that. Like, that's the problem is people are just going to go elsewhere. And to be honest, it's not like the rest of this segment has actually been doing that great. I think that money's been rotating out largely. Lululemon's down 42% year over year also. When you look at the financials for Lululemon, I mean, they're growing, just not growing so fast over the last year.
Lululemon growing?
They make great pants. I highly recommend.
You think so?
I am a fan.
They become a fad thing at times where you have like a fashion fad that everyone loves something for a while and then that kind of just dies off.
Yeah.
But
this guy just made a great point in the chat. Sorry to interrupt you. One of the things that made Nike so amazing for so long was that they had a super athlete. Michael Jordan was his name. You might have heard of him. And he was very, very famous, right? And it's why he's worth 4.2 billion and Nike is worth 63 billion, right? Which is crazy that it's only worth 63 billion now. This has been a $100 billion company for, a while. But with that being said, they don't really have a recognizable like signature athlete at this moment, in my opinion. They they have a ton of stuff sponsored, Scotty Scheffler and all this stuff, but it's not like that one recognizable, like everyone knows them and everyone associates them with that one thing right now. That's one thing that's become a little bit harder. I think
one thing
to
that's
have right here.
One thing that's crazy, because they did the sponsorship of Tiger Woods back in the day.
Yeah.
And
they just removed that.
after everything came out with Tiger, they actually shut the golf division down
Yeah.
because the golf division was dying after they lost the key person.
Interesting. I thought they still sponsored Scotty Scheffler.
They still have Nike Golf, but it's not near the push it was as before.
Yeah,
I'm talking about his first stuff.
But you can see, Charles, look at all these companies, all three I just looked at, even on, it's just not attractive. Like they're growing. I mean, look at this. This is a double right here. And then, almost not a double quite, but another almost double in a couple of years. It's just, to be honest, people are looking at it and they're saying, I think I could get better value elsewhere. I look at you compared to your sector and it's just not stacking up. Now, here's what, by the way, the number one rated stock on this platform is MU. Let's take a look at MU. Look at that. Right? When you look at valuation compared to their sector, they're killing everyone. All their stuff looks better than them, right?
Another thing that you have to think about, like opportunity costs and stuff as well, Charles. Like you could probably go through and make a decent case that, hey, Nike's coming into a spot where the value kind of makes sense a little bit. You just kind of need a narrative shift. But the problem is when you have an AI revolution going on, when you have stocks like MU doing what they're doing, when you have entire sectors that are just flying higher and you're in a raging bull market, the opportunities you're looking for are not the charts that are going down while everything in the world seems to be ripping. And that's where I have a problem, because then what happens if the market does turn around, let's say, next year we get a pullback, we get a red year in the market, how bad are these companies that are already down, how bad are they going to get beaten up? If in an actual down tape, when you have a market that's just flying higher, do you want to be in a name that has been struggling against that?
Yeah,
that makes sense. So people over rotate out of things that aren't sexy and don't have momentum.
Exactly, and specifically, savvy fund managers who are controlling still, 75% of the market, whatever it is, and like people like that are saying, hey, because one of the biggest things to look at is like retail investors, while we're making up a bigger percentage of the market, also typically can get real attached to something, right? Oh, well, my favorite pair of shoes, right, are on running. I want to own that stock, right? Like that's how me and Ryan might think. But it's just not realistic always, because the stock is just not holding up. The financials aren't holding up. But if you're a fund manager, right, you're really thinking about it usually differently. You're trying not to get attached to these things or stuck with them. And so you're going to just rotate into the best opportunities, ideally.
I want to make a comment on that, Charles, because like what he just said, I think is really important, because you do see a lot of names where retail kind of gets too excited about something and it starts just spreading like wildfire. And then you go through it and you're like, I've seen several names that, yes, initially they do well and all of retail kind of piles in, but then those names also have some pretty rough pullbacks because there's not always, institutional bid behind it. There's not always strong financials or like strong opportunity behind it. And one thing that I really like about, and I know you were showing rallies on here earlier, one thing I really like about AI is AI helps deal with your emotions. So like for me, if I fall in love with a company like Anon, if I fall in love with a company like I like Mercado Libre, I like Walmart, I like some of these companies that they're not in the tech, super tech sector, they're not in the AI sector, but I like these companies, and I'm like, okay, do I just love this company because I've fallen in love with it? Do I have too much of an affinity for it? Am I letting emotions creep into my decision making? And AI doesn't have that problem. So you can go to AI, and that's like in rallies, I saw it was built out where you can like ask it like, hey, review my portfolio. Am I too heavy in something? Are there any questionable positions in here? And it takes away that emotion that honestly, that's one of the biggest problems retail traders and retail investors run into, is that emotional attachment. You got all excited about a story. Grab, I think, is a big one that a lot of people, and I know Amit loved that stock, and Grab is.
Hey, you watch your mouth.
Grab is like Uber in Asia.
I'm surprised you don't know it because you've traveled that section of the world.
Yeah, Mr. Jakarta over here. Did he really go to Jakarta?
Hey, I don't think he even went. Grab is
What is
like your
going on
Uber
here?
Eats over there. It's your
He puts
DoorDash. But
sunglasses on, starts roasting me.
it's a
This is in
good
honor.
company.
Sunglasses in honor of Conor McGregor fighting tomorrow. First time in a long
Oh,
time.
Who do you think's who do you guys think's gonna win, by the way? Gav, can you
Not
pull up
Conor,
rallies?
not Conor McGregor. That's what I'd say. Yeah.
But yeah,
For real?
but see, the point is like Grab can be a really good company, but it can get ahead of its skis
Oh, one
because of
sec.
too much retail enthusiasm.
Give me a sec. I'll pull up rallies.
But I love that, you know, rallies like AI in general can help you remove emotion from
Well, and
your
no,
investments.
well, no, one thing I was gonna say too that's cool is with rallies you have the AI agents, and so you can build out a thesis, and when your thesis takes play, it'll automatically notify you. So if you
Yeah.
want to have an entry and exit, instead of feeling emotional on the downside, your agent can be like, you've had a 10% downturn. You asked me to notify you. Did the thesis change on the downturn? If the thesis didn't change, then hold the position. And because the agents is like the part of rallies where it's forward momentum and looking through what's happening on the market without you having to prompt it each day. And chat is where you're actually coming. It's like push versus pull. So, and I
So
think
you
that
can
fixes
build
that
these
issue.
agents to like to
Yeah.
notify, because so like the
Yeah.
example that I would use like
Can you
immediately,
build an agent?
I want you
Yeah.
to show me how to do this because like for example, Rivian, I like what Rivian's doing as far as like what they're trying to do right now. The EV
Okay.
sector is still not like a hot sector at the moment, but I think Rivian, once they become profitable, are going to be a nice competitor, a nice upside move in that stock. I just think they have to get to that point. So I
Can you
could build
zoom
out
in a
an
little bit,
agent
Gav?
that
Can I
would
what?
basically
Can
zoom
you
in.
zoom in?
Oh yeah.
It's
Command
a command plus. Jinx, you owe me a soda pop.
I said it first.
Oh,
Wait, I need to go to like building a new one though, because I started one
Yeah.
before. But yeah, if I just go back to, hey, I want to build an agent.
But I
it'll
would love
just
for
fill
one to
this
be
up.
like, hey, because I remember like when Uber first became like gross profitable, it finally got a huge bid in the stock. And I think Rivian's probably going to do something similar when it gets to that point. And so I would love to have an agent just monitoring that for me.
Yeah. It's trying to tell me a bunch of stuff right now, but you want an agent once this finishes that does what? Actually, give me 2 seconds. Let it just like finish. All right, all right, all right, all right, all right, all right, all right. That's enough. That's enough. That's enough. Okay. All right. I want an agent that will, what is it?
I mean, I was kind of playing off Charles' idea there to, you know, notify me when the stock becomes, you know, profitable.
Which stock? Any stock?
Say use Rivian for an example. I think Rivian's a popular enough name.
Yeah, let me just type
yeah.
that
We were
out.
talking to somebody on stream yesterday or today that's looking into Rivian.
Hamid's a big
Yeah, it was
Rivian
Hamid.
guy.
Yeah, it was. It was Hamid.
And I like Rivian. I just like, for me, I think I would love to see an inflection point where they start becoming, you know, net profitable.
Yeah, it's even looking like, look, it's asking you, like,
It's
do you
yeah,
mean
it's
GAAP? Do you mean adjusted EBITDA?
I would say like any and all, but
And then I
that's
just hit continue.
Yeah, create
oh,
agent.
that's amazing.
Look at that little guy blinking his eyes at me. The double champ does what he wants. All right. You gonna watch that fight, Ryan?
Probably will. I'm watching World Cup right now. 1-1,
right.
85th minute.
We've created a new agent, Rivian Profitability Watch.
Wait, you own Wendy's? Was that a real thing I just saw?
No, I don't own Wendy's, but I just have like a thesis crack.
I just saw your win stake. Like
I actually
think
don't
it's-
have any Wendy's though.
I don't know. This is like it's telling you somebody's lying here. Gav is knee deep in Wendy's stock right now. He's on the Reddit.
Dude, it was ripping.
He's
Did
on
you
Wall
see?
Street Bets.
Don't tell him. Don't tell him. All right. So this is, by the way, it's an agent now. So there's nothing to click into yet. It's basically just going to sit here and watch. When this happens, it'll just send me a notification to my phone. So it's ready to go now. People should check out. By the way, a lot of agents. I think that these agents are pretty interesting. The Trump post one. Watches presidential post speeches and official remarks for statements that can move stocks and crypto. I'm going to actually add that one. So now I just clicked add and then boom. Now I've got that agent as well. Trump post sitting right there. Rivian Profitability Watch sitting right there. Done.
Ryan, do you have your referral link you can drop in the chat?
People should check this out. Come build an agent. Let's check out the arena real quick.
I do not know where my referral link is, to be honest.
I have mine. I can drop it. It's all right.
We've got ChatGPT,
I
72%.
do have rallies though, and I love this. I love when it tells me like just straight up like I think Evan said it one day. He was like, just tell it to roast your portfolio, and I I did. I was like, hey, just be harsh on me. Tell me what is getting. It was like, well, and it asked me. It was
Charles,
like
you got to
learning
put it in the
about me.
YouTube chat, not the text.
No, I know. Okay, buddy. Okay, buddy.
Yeah.
Hey, easy with that buddy language, sir.
Hey, what you talking about, buddy? All right, what you know about buddy?
I just want to know what
I'm
Evan's
trying to
doing through all
figure
this.
out.
Evan's over there arguing with it over BM&R still.
You guys want me to share
Oh, goal.
Top G
How do
out
I
here.
get this for the YouTube chat? Let me see.
Pump for the
Playing
fights.
Discord.
Chat, put in the chat who you're taking for the fights. McGregor or Max Holloway.
All right, what you know about?
If anyone, whoever's sharing, stop sharing, I'll show you what I'm doing.
All right.
Dude, I've been a big McGregor fan.
You're gonna have to have Charles plug you
Man.
in though. Charles, take my screen off.
What is this?
Oh no.
Oh. Evan's playing GeoGuessr.
Campaign is retiring in August. Crazy.
Guys, I just.
Where is
Charles,
this?
Charles, can you unshare my screen? Please.
Yeah, give me 2 seconds. Yeah, give me 2 seconds. Guys, I'm gonna drop the rallies link.
Sir.
I'm trying. I dropped the rallies link into the chat. Check it out, guys. You should be able to get a code percentage off. I tried sharing it in the chat from the other one. If you didn't, you can just message wolf_financial on X and we'll get you a code.
I'll put it in the chat. Oh,
Thank
it
you,
didn't
sir.
work.
Thank you, sir.
I clicked it and it didn't work.
What is
Venom
what
says
it
he's
do?
going for Max.
Your link says this site cannot be reached.
Oh man.
Wow. Rude, crude, impolite. Charles, can you get that?
It was.
Can you clear my screen? Please, sir. We still have 100, by the way, on YouTube. Shout out to the chat.
Did you
Drop
see
stocks in
Venom?
there.
Did you see Venom said he's cheering for Max in that
Ooh.
fight?
I still, by the way, want to go over Cam T for a second, since someone said that this was a Jose favorite. Obviously performing really well this year. It's up 36% year to date, up 58% in the past year. Wall Street has a buy rating on this, but the quant model and the seeking alpha model have a hold, and they have good profitability, but their growth has kind of slowed down and the valuation's a little bit rough compared to some of their partners. When I take a look at the actual CAMT chart, Camtech, ooh, interesting right now. Okay, this just dropped below its 200-day SMA for the first time all year, but it looks like it's trying to reclaim it, and it almost closed back above it today, right underneath it. So if this could reclaim that 200-day SMA, great looking setup from a technical perspective. And then, from a financials perspective, let's take a look. They don't make very much money. Wow, what's the
I gotta jump, boys.
Wow, rude. Market cap is 6
Enjoy.
billion.
I'll be here in the background.
Okay, you're good. Yeah, we can probably wrap it up, to be honest. I also have been on live for 6 hours, so I am pretty good, but it's waiting to start going to the financials. Yeah, those financials still need some work for sure on CAMT. No sides in the main, however. Hopefully Mac can muster a vintage performance. Yeah, a decent performance would be good.
Are they talking about soccer right there?
Dude, look at me and Amp repping the glasses.
Dude, I stare at these screens for so long. I have clear and like amber.
It was
light
so
glasses.
bad. I usually wear my glasses except for during live streams, so I didn't wear them for like 6 hours, and so now my eyes are just sensitive. So just repping these now.
3 monitors and 2 spotlights on me all day long. I gotta protect the eyes at some point.
Yeah, I can take this out.
How long is this?
Cool. All right. Charles, Evan, are you okay if we end? I want to jump. Unless you want to keep it going. There's 102 still on YouTube.
I think we got another hour in us, right?
You've got it, man. All you. I'm gonna use the bathroom.
GeoGuessr.
I'll be back.
A good one, everyone. I appreciate you all. This is a good day. I mean, if you want to watch me play a game or two of GeoGuessr, we can, but like,
do your thing, brother. I think you're gonna have to have Charles input it though to screen share, and I don't know where he just went. I actually think Charles is the only one that can end the stream as well. So I think we're a little captive here for the moment. Connor for the upset. I don't know, man. Maybe he'll throw some of those shoulders like he used to 7 years ago. You guys remember that fight like 3 fights ago for Connor where he like shouldered the guy up in the face. Nasty
Yeah,
stuff.
like
Yeah.
that was awesome.
I've never seen anyone fight like that.
That was when he was like peak aura.
I can't really take you seriously right now.
Who?
You with the glasses.
This is when you should take me the most seriously, if we're being honest.
Do you actually wear those glasses in public?
Of course. These are my sunglasses. My
Those
sunnies,
are
as
your
the Brits call
actual-
them. What's wrong with
like
these?
them.
Yeah.
No, I kind of like them actually.
Appreciate that. I bought these in Aruba.
Okay.
Yeah, on my honeymoon.
I forgot you on that
LeBron
cruise. I was
James
like,
has
when
a
did you go to
done
Aruba?
deal. LeBron James has a done deal with a team that is not the Cavs, according to a good source that told Brian Windhorst today.
I want to hear it from Shams. It's the only person
I want to see what the
trust.
poly market is real quick on this, because I've been watching this poly market on LeBron's next team. Big dump on the Cavs odds. They just dropped Cavs odds from 61.5% to 41%. Wow, Miami surging. Miami 24%, up 7% right here.
Interesting.
Interesting. All right, I'm
Interesting.
actually in his bathroom, but I'll come back in a minute.
I don't know if my screen is shared. Is it?
It's not on the stream that I know of, but a little GeoGuessr action going. You know, I was actually thinking about that today because it's Friday. We used to play GeoGuessr on our stream on Fridays.
I am playing GeoGuessr right now.
What did Courtois hurt himself?
Super Linky. That feels like Swedish. Kuokkalan. Cool, Colin. Fetherstonhaugh.
No, that's more like probably Finnish, if I had to guess.
There's 2 dots over the A.
Yeah, that's Scandinavian in general, but
They all do that, yeah.
I feel it feels more Finnish.
All right.
The K's because it's
I'm
closer
back.
to Russia.
Also, they literally can't see you playing GeoGuessr though.
Oh, it
What's-
was Finnish.
Are you watching? How are you watching?
I
What
can
do
see
you
it
mean,
in the
how am I
Zoom, but
watching?
it's
I
not
can
being
see it in the
shared.
Zoom. It's just not on this. It's just not in the chat. There.
Okay. You guys word it really well.
All right, Evan, you're gonna have to narrate it because our audience is dropping real fast here. So you're gonna have to start
Philippines,
narrating
something like
what you're
that,
seeing.
where it's very tropical, but not the nicest place I've seen in the world, livable. There is a female in this that looks moving on. There is a thing at least this looks like
This is it's like this is like Ecuador.
yeah, all right.
Newton said he has a similar pair of sunglasses. That's what's up, man. Good pair.
Hey, Newton hangs out in the Wolf Trading all day long. He's
This
one of
big
our
one,
Wolfpack members.
We'll just full send.
You said Ecuador?
Yeah, I did go Ecuador, but that could be Colombia, right? Or is it-
That Pilsner is a good beer, actually. What does that say right there? Does it say Ecuador right there?
Ah, probably did. Oh, here we go.
Yeah.
That's what I need him. His specialty is the Spanish stuff, and he destroys. This looks like either American. This honestly feels Australian.
Ryan, how'd you feel about that Mexico game?
I was you talk about a battle. It was one of the best games I've ever seen in a knockout. It had everything, red card, 2 penalties, all kinds of drama. One team just throwing everything they have at the other team, one team defending for their lives. I mean, Mexico gets knocked out in the round of 16 again. England earned some crazy respect in that game. I thought it was a fantastic match. It was if Mexico would have run into somebody other than England, I think they would have probably been able to get through. But England is a very, very powerful team right now. That Jude Bellingham is incredible.
Yeah, man, I hear you. U.S. really put up a fight too. Sadly, we're both out.
Not really.
I told everyone that was coming from
know.
from the end of the first game. I said there are major questions.
I know.
It's tough. We're just so far behind. There's this Thierry Henry said it the best. He said there's levels to this, and just not even close to that level.
Allegan though is pretty good. Where does he play?
Monaco or somewhere maybe.
I mean, he does seem like he's actually pretty solid. He does seem like a possibility for one of our best player. He's young, right?
Balogun is probably our best player, yeah.
Yeah, he's 25. I mean,
except for the savior of USA soccer, Pulisic.
Them giving him that title is the worst thing because he is a very talented third player for you. He's not a leader. He's not a focal point guy.
Didn't he win Champions League?
The champions. I don't think so.
With Arsenal?
Maybe he played for Chelsea, so maybe with Chelsea.
Arsenal sucks.
He actually played really well for AC Milan this last year.
Wait, you said Arsenal sucks? Didn't they win?
Pish posh, you know.
They won the league for the first time in 20-something years.
It was like, yeah, the Seahawks suck. Didn't they win the Super Bowl this year?
Oh, Evan, zoom in.
We're back on a screen share. There's something up. Oh, there you go. Now we're up. Now we're cooking.
Can you give me something else?
I have enough lead. We're in South America, right?
Oh yeah, but go zoom in on something because it may be Brazilian.
Wow.
No, it's Spanish.
Ooh, it was
Brazilian. Yeah, I was gonna say I was trying to read some of the Spanish and it looked different. It was Portuguese.
Oh yeah.
That's why I said that.
SK Hynix CEO says memory chip shortages will probably persist beyond 2030.
Yeah, that's like saying,
it's like me saying, yeah. It's like Evan saying, demand for stock market news-based channels is likely to increase for the next several years.
At an all-time high.
Yeah.
All-time high. We're double. Growth this year, we're about a 10x it. All right. This feels Polish. Am I crazy to say that? PIS, Polish Independence S.
It's an interesting thesis when you could just keep looking.
Sometimes I like to get stuck in, bro. Deutsch.com. This looks nice. Poland's pretty nice.
It does look decent.
Oh. Ooh, that's Polish. This is up here.
Oh, somebody bought a ticket today, by the way.
What?
August 3rd, the conference real quick.
What a loser. Get wrecked.
Oh shit. Nice. 2 tickets. Two tickets bought today, by the way. By the way, yeah, just a reminder, in case you didn't see it, if you're in this live stream right now, we are hosting the first ever Wolf Conference. It's going to be in New York City on August 3rd. The website is summit.wolf.financial. I'll drop it in the chat real quick. And we have less than 50 seats left. So we are looking forward to seeing everybody there. We are probably going to sell out pretty soon. The link is in the chat. I just threw it in there. If you're someone that's around New York or able to get there on the 3rd, we'd love to have you there. Super affordable in terms of conferences for this piece. And if you're making a public account, you get like a 66% off discount for this. Evan, anything else you want to share? We'd love to see more people there. And I think we've got some avid watchers here. I feel like the people that have been in the chat all day, like, you got to be at our conference.
Yeah, I'm very much excited for this. For anyone in the New York City area, August 3rd, a lot of the people you've watched and listened to every single day will be there, but we also try to make this into a very educational thing. For traders, you're actually going to leave away and become a better trader as a goal. We got people who've been doing this for decades. We have more than a century of experience at this event talking and helping and educating.
And that's just from Peter Tuchman, not let alone the century from everyone else.
Crazy. 2 centuries. So yeah, I'm very excited this opportunity to talk to all these people and meet and mingle. We have a lot of other creators and industry people who are coming as well. So if you're here to network or anything like that, I think that you guys are going to get a lot of value from this event. So New York City, August 3rd. I am very much looking forward to it. I am excited to meet all of you guys. I know Ryan will be there. I'll be there. Gav will be there. Should be great. Can't wait.
Boom. Well said. Website's in the chat. People should check it out. Let us know if you have any questions.
Can you see my screen again?
I wasn't sure if we wanted to share that, Ryan, because it's not.
Yeah,
out
so I
there.
didn't.
Yeah.
I'm fired up about it. I don't know. And we've done 2 free webinars with like a little kind of sneak peek of some of the
I'll put it
value
this
that's
way.
going to be going on.
I'll put it this way. If you're interested in coming, this is specifically for people that are just still on stream right now watching. DM the Wolf account or email me gav@wolf.financial if you're interested in coming to the conference, and I will provide you with a discount code. So specialty thing, just reach out to me, gav@wolf.financial, no .com needed, and I will give you a discount code to use for the conference.
The first person that DMs stock market news, we will never do this again. The first person who DMs stock market news, I'll give a 60% off code.
Jeez.
Right? I just made that up on the spot. I didn't even get it approved, and I'm gonna
Didn't
get it
even get it
rejected.
approved.
You had for the first person who DMs me who wants to come to this, I'll give you that code.
Rejected.
Stock market news, nothing else.
Oh, is this Chris using rallies?
I think so. Was it? I thought so. Auckland. Oh, damn. I don't think
I'm
it's
excited.
showing.
We're 3 weeks away.
That's crazy, right? That's so weird. It came up very quick. Ooh, where are we on this one? This looks like a US.
No outlet left.
Speed limit. That's definitely US.
Oh, go to that street sign right there. Go to the other side of that street sign. What does that say on the? Oh, Farmington Hills.
All right. I'm gonna say it feels, nice.
My first
Still
thought was in the
nice.
south, but the more I look, I think this is like Midwest.
Yeah, it doesn't quite feel northeast, but this feels
Midwest vibes.
What if I said Michigan? Is this what Michigan looks like?
I like that. Go Big Blue.
This feels pretty nice. I'd expect Michigan to be pretty nice. Ohio's better. It's protected finally by Farmington. Project
Yeah,
fund.
Michigan, Minnesota, maybe something like that.
Cool,
I wouldn't hate Ohio either, but let's go with Michigan. Go with Michigan.
Let's do this.
I like your first thought. No, go with your first thought. Don't deviate. First thought. Go Michigan.
We're in Michigan. We're gonna
okay.
I don't know. I didn't think that Ryan's thumbnail
bang, bang, bang.
Boom.
Evan, ChatGPT makes great thumbnails.
That was Detroit, by the way. That was pretty nice. ChatGPT does not make very good thumbnails. They look appealingly good, but it does not fit the meta, and they underperform. And you need
mine have outperformed.
It outperformed.
Fake news.
You're a dummy.
Fake market news.
No, but I am pretty. If you look at everything that works, it's gonna go the other thing. I guess if you come and prove numbers, but I just.
And I get it because they have like a certain look. Like I can look at them and be like, "That's a ChatGPT thumbnail."
Look at what everyone who does good does, and it's not.
But my data literally shows twice as good click-through rates on.
Chelsea said she can't see the screen, but I can see it on the. Oh, it still just says victory.
It's the screen. Your screen's been frozen for like 20 minutes.
Well, I can see you. I can see you moving on my screen. Oh, you're saying Evan's screen's been frozen.
Ooh, what's this? This is either Russian or Ukrainian. Not quite Ukrainian.
Only Ryan's actually moving. I think I'm frozen as well. Yeah.
Ooh, is this Mongolia? Is this Ulaanbaatar?
I think I'm frozen on the stream.
No, I see you.
But I'm not moving on the YouTube. Just you.
No, you are on my YouTube. You're moving.
Oh,
Ryan,
okay.
What do you think? Is this Ulaanbaatar or are we like? Is that Russian? You think? Ooh.
It's gotta be Russian, but where? How many people are still watching? That's the real question.
They're watching me geomog everyone.
No, it's your screen has not moved off the last victory. Me and you
Well,
are
you
like,
guys can see it though, right?
I can see it.
You know what's happening. This feels like South Africa.
Bro, imagine people listening to this. They
No.
just see a scene that says victory, and they're just talking about different places.
You think it's Kenya?
Probably one of those.
Bro, all the time emailed me, but not for a conference ticket, just to let me know what we should look at. I love it.
Yeah, I'm
Very
gonna go. I would guess Kenya.
Actually, someone did send me Axa Amit sent me the DM, so he'll I'm gonna send it to you later. Are you from New York, Axa Amit? You're literally in the chat a second ago. You can just talk in the YouTube chat. Ooh, damn.
There's like a 15-second delay. Kenya.
It is long. It is long.
I always go Nairobi. I panicked. Shout out Axa
Right.
Amit. Let's go. I said 60% off. I would.
Did they message you?
He did. Axa Amit. I'm in Houston, Texas. Well, how much are tickets from New York to Houston?
Hey,
By the
I'm literally connecting in Houston on my way to New York for the event.
Can you, by the way, on the website, Amit, I'll send it to you. The room block is done, but they're still allegedly taking the price. So if you did want to stay in the hotel, this guy just got wrecked. It's gonna be like $100-$200 cheaper a night. I think it's $100 cheaper a night, right? Or is it $200 cheaper a night?
So originally it was, but now if you actually go, because I tested this, if you go to the website for the hotel or to booking and try to book those 2 nights with that type of room, it's not available. The two nights are not available, and the double room's not available.
So the room block's done.
So it's only available through our room block.
Nice.
Otherwise, you got to stay like 3 nights. Go actually check that.
Amit, I'll send that over to you. I'm
Can't
excited.
go wrong with.
We got a lot of people you'll know from your chat. Paper Gains is going to be there. I'm assuming I think you were one of the people who said Amit when you came. Residente Lagarde. What do you think this is? Plan de Sao Trucks.
You guys still live?
Yeah.
You
There's
want to
still
take
70 people on YouTube watching, but can you fix the live stream? Because it's been frozen
mean?
for like the
Evan's
screen's been frozen. Evan's been frozen for like 20 minutes.
Yeah.
I see.
Lagarda.
They're just staring at me and Gav talk to Evan while he's playing
Gob's
GeoGuessr.
just hunched over, slunched out in the chair. Looks like
I've been doing work. I just streamed for 6 hours.
That's light work.
This looks like
Somebody's got to work around here.
Ready? I know where this is. No looking. I'm gonna go with Malta. This is exactly what Malta felt like.
That's not what I thought you were gonna guess, but I like it.
Wow.
Close. The split.
Here's my number. Call me, maybe.
Well, if you want to know what Malta looked like,
This is crazy.
You can't play any copyrighted music, so we just have to sing it.
this feels Australia or New Zealand.
If you keep singing like that, we may get a strike.
Pulling
The
in the
way as
coupe in the
close as
lot,
you are.
pulling up the 12 of the sun. I just hit a lit in a box. I just put a stick in a box. Pull up the whole damn seat. I'm gonna get lazy. Sorry, everybody. I apologize. That's like punishment for YouTube.
I just like at least the section of the song that you picked was that section, because it could have gone way different.
Auckland. This feels very much this part of the world. It might be Australia. Toward Street. Come on. This guy stinks. Oh, brother.
Oh, brother.
It's already over.
It's already over. Done. Round 3. 1, 2, 3. Done. Swept. Dents in the sweat. We're going to only get to.
Welcome to Bronze 1. Yeah, I get upset almost every month when I get charged for GeoGuessr and we haven't played it in a while.
Bro, they want me to pay more. What are we doing, guys?
Axa Amit said, I'm in Houston, Texas. Gents, no sweat. I work in oil and gas, so I get called out on projects at last minute. I will have to book flights last minute anyways. Fingers crossed. I just sent message as I always listen to your X Spaces. Cool, man.
I hope you're able to come, and if you are, there's a flight from Houston to New York on Saturday afternoon that I will be on.
There you go.
Come find me in the United Lounge.
Oh,
IAH.
Stop. Steve V. Protissimire. Ooh.
Evan, I feel like you're doppelganging as an adult, but this is your true form. Ripping Pokemon packs and playing GeoGuessr.
No,
dude,
I
GeoGuessr.
enjoy, I enjoy the adult casino, dude. I gotta stop myself. Stop showing me blackjack content algorithms, please.
Yeah,
Dude, you know what
Oh.
I noticed the other day?
Scandinavian.
The algorithm is making me feel good or bad about where I'm at in life. When it's showing me really lowbrow stuff, I know it knows me better than I know myself. And so when it shows me like sus stuff, I'm like, oh, I'm a piece of
This
crap.
Eastern Europe.
Yeah, this for some reason this
Serbia.
Now, you look like Hunter Biden at a press conference after he disappeared for 48 hours.
That cocaine was not mine.
Who invited this guy?
How's that?
He does, dog.
Who even is this guy?
Hey,
Who the
listen
fuck
here,
is this
buddy.
guy?
Yeah.
Hey, listen here, champ.
Settle down now, Nitro.
A Nitro.
That's one of my favorite ones. All right,
Ooh,
settle down,
SK.
Nitro.
Oh
SK
crap!
with
I gotta change that. Holy
Slovakia.
smokes!
Slovakia? Is SK Slovakia? That doesn't really. I don't love
It's
it.
got to be.
You think?
Is SK Slovakia?
Yeah, what else would it be?
Look at the dot.
Dot SK has got to be Slovakia.
It's gonna be a country.
It's definitely Slovakia. Like 199.99% because there's no guarantees.
What's the capital of Slovakia?
I am more sure about this being Slovakia than us going down on BMNR.
The
That was
capital,
pretty damn sure.
The capital of Slovakia is Bratislava.
That is where I put it. I did not know that.
It was not the answer either, though.
It is uniquely situated along the Danube River, right on the borders of Austria and Hungary. Danube?
Danube. This also feels Malta, but Malta really didn't have hills like that.
What does that text say? Spanish.
So this is gonna be. You think this is Palma de Mallorca? You think this is like one of these islands?
I don't know. This could be South America. Just keep looking.
Come on, this is not South America.
Dude, Clavicular's doing a live on Kick day 1 in Israel right now.
Oh wow.
Who's he got in there? They're walking around right now somewhere in Israel.
It might be Spain because of the gas prices there look like euros.
Heard
Is this Tel Aviv?
I don't know if this is Tel Aviv. I'm looking where I can't tell.
Wait, yeah, this is Spain.
Where it says Mogging in Israel.
This is like right. Yeah, it's dead. Oh, it's almost in the middle.
Thanks.
I remember it's near Madrid.
Ooh, I get it.
Who's he with? I don't know who these guys are.
Dude, the chat is so parabol. It's crazy what people are saying.
The chat is crazy.
Bro, they literally have the haha meme. Do you see Bankai Life?
I don't know if I've seen that.
Dude, why are they not banning this person? They're just literally saying the most ridiculous things.
Juvicular. Oh man. That's good. That's good.
Whoa.
Juvicular, dude. They're just spamming it.
That's what they used to call me back in the day. That's my rap name. Man.
Road sign.
Gasolina. Dame gasolina.
Did you see, by the way, he's no longer associated? Did you see that he's no longer associated with the Baccara Club?
Yeah, of course.
In Miami.
Spanish.
That's old news.
Oh, I forgot that. I forgot you have the notifications on for Clavicular.
Not notifications, dude. I'm subbed to his newsletter and his Substack, and
You got to guess. You're out of time. Seems like it's an island.
Ooh, damn.
Oh, Colombia.
Oof, oof, oof. We're getting mogged here. This might be the end.
Mogged.
On a bridge. Lowlands. France? Nope, that is not
No.
French.
Go
That
back,
was
go
not
back, go back,
French.
go back.
No, right there. I mean, that's all we need to know. Is this South Korea? Fuck, is it Taiwanese? I'm going my first gut.
That looks Taiwan.
Okay, I'll go your first. I always guess Taipei. Oh,
I say
I'm thinking about getting a tummy tucked.
Are you?
just go Zembic. Eli Lilly stock's been doing great.
No, I've already been doing that. I'm going directly in my tummy. I got some Ozempic and
They're pushing the stuff hard down here where I live. Every time I go in the pharmacy, they have so many ads for like discounts on
I'm using mine
Najarro and
topically.
all of them.
I'll melt down my little GLP-1 pill and I'll just rub it on whatever. It
Oh,
has
let
an
me-
insane stinging burning sensation, but I think it is losing me weight.
think
I'm
this
just getting
Tell me some
deep
text real
abdominal
fast.
cramps.
I think this might be the time to end the live stream. If you have someone.
All right, let's do it.
Find me
Let's do it. You're playing GeoGuess or staring at random countries. I don't think that this is any better. I mean, let's be honest.
You're saying you don't want to go to the Estancia Unisex SL Castillo?
I would love to go there, to be honest. Gents, no sweat. I work in oil and gas.
He's coming. I didn't get approval for this, but I gave him a little extra discount to the event.
Ooh, can I get a little extra discount?
No, you're not allowed to come.
Try like Uruguay or somewhere. I don't know. I have no idea. I didn't see any clues other than just normal Spanish.
Ooh, Mexico.
Oh no,
City.
Pachuca.
All right, boys.
I appreciate everyone. Thank you for hanging out with us. I lost.
All right, home dogs.
Home skizzies.
That's gonna do it.
Is stream off?
No. Don't you want to say some closing statements?
I don't think you have a facilities for that, big man. All right, that's all I got.
All right, y'all. Thank you for joining the stream, guys. We appreciate you. This is Wolf Financial.